Hello and welcome to CoinDesk Live, presented by MoonPay. We are coming to you from Consensus Miami, where the biggest names in crypto, finance, and policy have descended for 3 days of deals, debates, and announcements that are going to shape the industry's next chapter. I'm Jen Sanasi. Joining me to kick things off this morning are CoinDesk's Head of Media Innovation, Sam Ewan, and CoinDesk Indices and Data President, Dave Laval. Hello, gentlemen.
Hello, hello.
How's it going?
We made it.
We made it. We're here.
We're here in Miami. The weather is okay.
Fine.
A little rainy the first day I got
Could
here.
get a little bit better.
Better than New York.
It is better than New York. It is better than New York. I will take Miami over New York some days. Someday.
Mostly.
All right. We are getting things kicked off here. We're going to get to the main stage in just a little bit. But big news coming out of our parent company this morning. Bullish has agreed to acquire a company. Dave Laval, why don't you talk us through what this news means? Tom Farley's going to join the desk later on to talk to us a little bit about it later.
Yeah, I'll set the stage a little bit. So Bullish has made the announcement to acquire Equiniti. And Equiniti is one of the leading transfer agents in the world. And so if you kind of take a step back, and we all accept that information moves ubiquitously across the internet, and for many you have to kind of suspend disbelief and accept that value is going to be able to move around the internet. That's the concept of tokenization. Well, tokenization of real world assets is something that is talked about a lot, but tokenization of traditional equities is something that is also part of the conversation. This allows the only place in the world to have a single source of truth between traditional certificated shares and tokenized shares. And so having that having that single source of truth allows public companies to be able to have much better transparency and efficiency in managing their cap table and having access to their investors. This is a huge deal. We know tokenization is coming. We know the tokenization of equities is coming, and this is the opportunity for Bullish to be an absolute leader in tokenization, having a full stack offering, right? From being able to tokenize things, listing them, compliance framework, adding liquidity, and then all sorts of value-add services along with the CoinDesk brand, not the least of which is having the opportunity to have visibility and marketing and distribution at something like Consensus.
Dave, you're focused on the indices side of CoinDesk.
Right.
What are you expecting to see at this show today?
Oh my gosh. The thing that I'm most excited about, having watched this come to fruition, even compared to what we did in February in Hong Kong, is the traditional finance players that have shown up. And so we're seeing many more banks, just look, for example, we have Morgan Stanley who decided to create a Bitcoin ETF that is over 200 million in assets in less than 3 weeks of trading. They're here. They're taking advantage of Consensus. They're engaging with wealth managers that are going to be here, and they're engaging with the entire ecosystem. This is really about, TradFi and crypto coming together, and Consensus is going to be the cross-section of that. That's what I'm most excited about watching.
All right, we're going to continue to unpack that over the next 3 days, but let's get to our first guest now. We're going to kick things off with a bit of a banger here. He spent the first quarter of 2026 in self-imposed silence, called crypto a no-trade zone, while the rest of the market tried to find a floor, and will be taking the Consensus main stage this morning to tell us exactly when he plans to flip the switch back on. Chief Investment Officer of Maelstrom and co-founder of BitMEX, Arthur Hayes, joins the show. Arthur.
Hello.
Nice to see you.
Excellent to see you guys.
Great to have you here.
Yeah, thank you.
All right, we're in Miami.
Obviously.
You told me.
Thanks, Jen.
Yeah. I think the last time we spoke, you said you were excited about hitting the club.
Yeah.
And so?
I hit it really hard 3 days in a row.
You did?
Yeah, it was
okay,
great.
Well,
F1 weekend was amazing. Thank you for having this conference and finding me an excuse to come here.
Well, thank you for showing up. 3 days in a row,
Yeah.
and now you're here. All right, you heard my intro. You published your No Trade Zone essay. What happened in Q1 that changed your calculus since the last time you and I spoke?
So obviously we had the sort of AI scare in the first quarter. Tech stocks got crushed, at least SaaS stocks in the United States, and I put out a thesis that I think Bitcoin was telling us that there's not enough money being created to forestall this AI deflationary event of people losing their jobs, not being able to service their debts, and that's what Bitcoin was telling us. And that progressed up until February 28th when the US and Iran war started, and I think we switched into a wartime economy, not only in the United States, but across the world, and that means more money printing, and at least in the United States, that's going to mean that the Fed, and I think the commercial banking sector is going to take up the baton and start issuing loans, increasing credit, and that's why Bitcoin has outperformed the NASDAQ, tech stocks, and gold since February 28th.
Arthur, we keep hearing about this potential of AI to really reimagine the entire sort of labor ecosystem. Where do you think this is going in the next 2, 3, 4, 5 years when it comes to this disruption? Is it a slight disruption? We saw Coinbase's announcement this morning, or is this a major one that we should all be prepared for very soon?
So because, at least in some advanced Western economies like the United States, are very leveraged, it doesn't take that many people to lose their jobs for this to be a problem. So I know in some respects, some people deride this argument saying not everyone's going to lose their job because of AI, people will find new things to do, and I don't disagree with that. My point is that let's take the bottom 10 to 20% of knowledge workers who no longer have a purpose, at least for the short term, say next 1 to 2 years, in a company like Coinbase and Block and these tech companies that can now automate the coding of tech using AI, and they're firing, I think, 14%? Is that what Brian said? Coinbase, and other companies it's 20, 30, 40%. So you're talking about the bottom tier of workers who still make quite a bit of money, who no longer have a job, and nobody is hiring those type of workers right now. So how are they going to pay their mortgage, their credit card payment, or just consume at the level they were consuming pre this sort of AI disruption? And that's what I'm saying. This is an over-leveraged global economy, and if you remove the people who make the most money, who consume the most from that equation, then you're going to have an issue, at least in the banking system.
I mean, look, late last week we saw SIBO make an announcement that they're going to, it's kind of like a double-pronged approach. They're going to lay off 20% of their staff, and they're going to refocus on things like tokenization and growth aspects of their business. So refocus on exactly what their core business is and lean into things like tokenization. So this is a real TradFi player that is trying to find a way to kind of wedge its way into crypto. How are they going to fund that? They're going to take advantage of some of this technology disruption and reduce their workforce. So to agree with you, Arthur, yeah.
You know, I just unpack that a little bit for our audience. You know, you said that we're going to have an issue in the global banking system. What does that look like? Like, just talk to us a little bit more. I think people are probably watching this interview and wondering, you know, what does this mean for me? What are the next months, year? What's that going to look like?
So, you know, every loan is an asset at a bank, right? And so if you have credit card payments, auto loans, mortgages, somebody is servicing that debt. And at the higher income end, you know, $100,000, $200,000 a year annualized income, they have a lot of debt. And they're paying it off, and they were paying it off quite fine. And once you lose your job, then you're on unemployment, at least in the United States. And that caps out in like $30,000, $40,000 a year. So you were earning, say, $150,000, now you're earning 40. And what do? You have to cut back on spending. You're not going to the fancy restaurants, the malls, you're not buying the discretionary items, and you're certainly not using these SaaS companies like Adobe and all these sorts of things, right? These are why these companies are getting crushed. And then you think about consumer finance, well, if the bank cuts it as an asset, and now you have an asset that was paying fine and worth 100, now it's worth 0, you have a hole in your balance sheet. And what do we know what happens when it happens? The Fed comes and prints money. But as we stand right now, the Fed believes, and every other central bank believes, that AI is a productivity enhancer. We're going to grow, there's not going to be inflation, so therefore they don't need to provide more money. And so until it's recognized, that is what I think Bitcoin is saying. Hey, we're not printing enough money, we're not recognizing this problem is going to happen in the next, say, 6 to 12 months, therefore, you know, Bitcoin's going to fall alongside some of these tech stocks.
I would say that like the market is always true, and so just what I was talking about SIBO, the stock rallied like 8–10% last Friday, and I think that the fact that Bitcoin is responding to this, you know, truth in the market is more telling us that this is an asset that now has ubiquity, and it has broad enough adoption that it's going to act in a way that's going to tell us what's happening in the market in a much more efficient way than it has in the past. So,
I love that you've been someone who sort of is not as excited as the rest of the industry about the Clarity Act. That when it comes to stablecoin legislation, you really believe it's just a rush into treasuries. It may not actually help the dollar, or it might not help the crypto in general. Where are you thinking this is going, considering the fact that, you know, Friday seems to we cleared a hurdle when it comes to stablecoins?
So, I mean, I'm going to give a presentation in a few minutes about how crypto needs no regulation, and the price performance is indicative of that. And so I think, yeah, regulation, some people who own centralized companies obviously want this, and that makes complete sense. Like if you own a centralized company, you want a regulatory moat around your business, of course you're going to lobby politicians to get what you want. We'll see what happens, at least in the United States and other countries around the world. But that has no effect on whether Bitcoin or crypto is effective. The reason why we're all here, why is Bitcoin worth, was it 82,000 or whatever it is instead of 0, is because it has some utility. It has a utility outside of the TradFi banking system. If it was just another fixed supply asset that was on the TradFi balance sheet, we wouldn't have this conference right now, because there'd be no point. Like, you can just go on in a brokerage account and buy Bitcoin in an ETF or whatever wrapper, and it does nothing. It doesn't help you transfer value outside of the banking system, outside of state control. And so I think that everyone who's clamoring for these regulations doesn't understand why this is valuable in the first place. Why do clients actually want to own this thing? It's because it does something different. And so if you take that difference away and it's just another asset on the bank's balance sheet, then what are we doing here?
Yeah, so if I accept everything that you've said there, how do you balance that with, like, further clarity, no pun intended, on the regulatory side is going to bring much larger scale global players into the ecosystem that allows, in its entirety, you know, crypto to grow or Bitcoin to grow?
I'd say I don't care if they come. The white paper's there, it works. If that's something that you want to integrate in your business, or you believe your clients need that asset, you'll find a way. Just like you found a way from 2009 till the present. Just because there's been whatever the bill was that passed, Genius Act, the only bill in the United States that's passed since crypto has been around, yet we're here, right? Which is worth however many trillions of dollars, in spite of the fact that there has been no clarity. So what is clarity going to bring? Nothing, unless there's, and what I'm going to argue is there's more money printing. Otherwise, there's no value here, because it's just another asset on a bank balance sheet, and we know how to trade those, we know how to value those, and they're worth what they're worth, but it certainly isn't anything exciting, which is why people get out of bed and come into these conferences and speak.
I know your Bitcoin target is $500,000. I'm not sure if that's changed since...
When did I say that? I change it all the time.
Every time I ask you, I think it's different. But okay, what's your target? Why don't we start?
I think I've gone down to like 125 into the year.
Oh, okay.
Yeah.
Okay, so what needs to happen to get us there? I'm assuming it's more money printing.
More money printing. It's just that simple. I try to make it very simple, right? Bitcoin is a combination of a tech stack, which works, and it's liquidity. That's all that matters. It's a fixed supply asset. How many units of fiat are there today? How many will there be in the future? If there's more in the future than today, then Bitcoin will be more valuable. That's all that matters. And so my thesis on the pace of central bank and commercial bank money printing in the US and around the world plays out, then Bitcoin will be more valuable. In spite of whatever happens with the war, in spite of this AI deflation that's coming, I think that the amount of money that's going to be created to reindustrialize around the Western world, to build more bombs, that's what's going to be propel Bitcoin higher.
All right, you have a 125K target right now in Bitcoin. What's your hype target? And
hype is $150 by August. Stick with it.
Why are you so bullish on Hyperliquid? I mean, I feel like half your tweets are really about this technology, and you, like many others, are just very, very excited. What's your core thesis of why our audience should be paying attention to Hyperliquid?
So the killer app in crypto has been trading apps. Obviously, I've made all my money in a trading application. CZ and Ryan Armstrong, some of the other wealthiest people in crypto, have made all their money in trading applications. And so Hyperliquid is just following on from the theme that we started, which was, okay, how can we let anyone trade anything anywhere around the world, whenever they want, with high leverage? And the dream was, let's create a permissionless way so that anyone could trade these things. You know, DYDX was the first sort of darling that started with that in like 2020, 2021, passed the baton to GMX. And then Jeff and Hyperliquid have sort of taken this to the next level, where they've said, okay, we've got really good tech, it's really fast, and they've got a great token model, where all the revenue, 97% of all revenue earned by the protocol, goes back to the token holders in the form of buybacks.
Right.
There was no VC round, and so you had a clear path for this thing to appreciate and gain traders. And that's what they've done. I think it's about 6 or 7% of SEX volume on perps, and they're the dominant decentralized exchange trading platform. And now with HIP3, which has proven itself on the weekend periods when TradFi markets are closed, you can trade oil, you can trade S&P, you can trade NASDAQ with high leverage, wherever you want around the world, 24/7, and it's a price discovery mechanism during this period of global uncertainty.
Yeah, I think the trade XYZ volumes, top 3 volumes are 2 oil. It's either oil and Brent, and then the S&P 500
exactly.
as well. So I mean, those are trading across the board, and certainly when traditional markets are closed, it's a model that works.
Arthur, we want the alpha. We want spicy takes. We talked about Bitcoin. We talked about hype. Give us something. What else are you watching? What might people be surprised that you're maybe paying attention to right now?
I mean, I think, at least for my investing strategy, it's like concentrated bets on things that I know that work. I've analyzed my trades over many years, and I fuck around in meme coins and some of the dog shit coins, and I pretty much always lose money. So I'm trying to make I'm trying to make myself a better trader. So I believe in hype. I've read a massive essay about it. I believe in Zcash and the privacy theme, and I have to say those are my 2 biggest bags right now in the shitcoin space, and I continue to add to those, and I think they're going to outperform, given how large of a crypto asset they're relative to everything else.
The conversation around privacy, I think, is so essential right now. As we look at all these regulators coming in, as we look at all the institutions coming in, they're not going to want to be exposed, right? So is part of the thesis there to say, okay, regardless if it's a good thing or bad thing that institutions are coming into crypto, they're still going to want to perform in a way that is compliant to their business, which means let's not make everything exposed. Let's be able to sort of pick and choose and select the levers of privacy. Is that sort of where you think that Zcash really plays a role?
Well, I think it's that people will understand that as we have big data sets that are owned by tech companies and the governments, combined with really, really good AI, you could de-anonymize any transaction pretty much on Bitcoin pretty easily. Now, that's not a problem because Bitcoin never said it was supposed to be completely anonymous. But there is a role for private cash on the internet, and that's what I believe Zcash represents. And people are going to gravitate to that who want those things.
So I'm going to switch gears a little bit and go prediction markets, because I'm just curious. Where do you think prediction markets fit into the whole bag, and how do you think that market is going to grow in a way where there's kind of an institutional quality or the potential for larger liquidity pools, because we're going to want to pull institutions in, or do you think we shouldn't?
I think prediction markets are amazing in that they're price leaders of information about random events, right? So people will say, okay, well, is the US going to attack Iran this weekend? Well, they look at the poly market and they see if there's a trend following because somebody is using insider information to trade on it. I think it's a great signal. I don't know how much liquidity that's going to bring at the end of the day, but what I'm really excited about prediction markets is binary options. And so I've said this is why I think HIP4 on Hyperliquid is going to do so well, is they're going to launch 1 minute, 5 minute up-down markets on Bitcoin, Ethereum, and a lot of other assets, and they're going to bring a lot of liquidity to that market. That's not something that institutions really like to trade, and that's why I think Hyperliquid is going to take that market for the retail diaspora across the world who want these things.
Yeah, the appetite for leverage globally outside of the US, the appetite for leverage is amazing, and we see it in 2x, 3x, 4x, index-based products that are listed around the globe, and the opportunity to kind of trade those with as much kind of juice as possible is something that's super attractive. So I agree with you that the prediction markets are going to offer that opportunity direct to retail and not go through an institution. As an index guy and a benchmark guy that wants to have a precision about how to settle those trades, it's one thing if you have a sports score, and we could all agree that, whatever, the Knicks won last night by 38 points or whatever it was. But when you're talking about something like, when or if the US is going to, invade Iran, and you take a look at the settlement price of that, or the settlement, methodology of that, and it says, we're going to rely upon, some, relevant source of media. These things get pretty complex to settle them. So I think there's going to be kind of a reckoning in the prediction markets of what's going to be successful and what's not going to be successful. But certainly short-dated, binary options are something that you can have real precise settlement on, and we're excited to watch that market develop as well.
Something I hear a lot from our guests is that with the rise of prediction markets and institutional adoption, altcoins are going to die. I would love to hear your perspective there.
Altcoins will never die. I love shitcoins. I think it's a great market. Obviously, 99% of these things are going to go to zero, but I forgot who gave the stat, something about the S&P 500. And if you look over time, I think since 1929, something like 98% of all companies in the S&P 500 have gone to zero, right? So if you take a look at just the stock market in the largest capital markets in the world, the United States, most stocks are shitcoins over a long enough period of time. So if we're going to compress that time period by letting anyone trade 24/7, of course most altcoins are going to zero, but if we want the most innovative things and letting people raise capital and trying things out, this is a great model, so they'll always exist, just as shitcoin stocks have always existed.
I always say that instead of saying token or coin, just replace that with software. And all of a sudden everybody gets much more comfortable with the fact that there are so many pieces of software that get built that fail. And so, I just think it's going to be cyclical in nature. More will come on when there's capital available to deliver those solutions, and some are going to win, some are going to fail.
All right, Arthur, we got to leave it there. Thank you for kicking off the program with us. Maybe we're going to see you in the club later. I don't know.
Thanks for having me. Thank you, Arthur.
Thank you.
That was Maelstrom Chief Investment Officer and BitMEX co-founder Arthur Hayes. We're going to head on over to the main stage now, where Consensus Chairman Michael Lau and CoinDesk President Jay Yarrow open up the conference.
Welcome to the Anchorage Digital Main Stage at Consensus. Here to guide you through today's programming, please welcome your host, Aubrey Strobel.
Good morning and welcome to the Anchorage Digital Main Stage. I'm Aubrey Strobel, and I'm going to be your host for the next 3 days. I remember my first Consensus back in 2017 in New York City, so it's so amazing to be hosting and just fabulous to see how much this conference has grown. Before we dive in, a few housekeeping notes. We'll be running through live polls throughout this entire conference, and so keep your phones handy. If you have them on your person right now, take them out. We're going to have questions that are going to be appearing behind me. Feel free to scan those. And I'll just call them out as we go. So tonight, if you don't have plans yet, join us for the official consensus party. It is going to be the sunset soiree with Nolcha at the Sagmore Hotel pool deck. You won't want to miss it. Okay, so let's kick off our first question. What is your single biggest focus at Consensus this year? Let's see if this works. We got it to work? Feel free to vote now. And to kick us off this morning, please welcome the chairman of Consensus, Michael Lau, and the president of CoinDesk, Jay Yarrow.
Thanks. Good to see you.
All right, welcome to Consensus 2026. I can't tell you enough just how excited I am that we've brought Consensus back to America and that we're hosting it here in Miami. We've got an absolutely incredible conference planned for you this week, and there's about 15,000 people from over 100 countries joining us as well. In terms of the programming, I have to tell you, this may be our strongest yet. Our ambition is to bring high-quality content at scale, which means that we want to bring to you substantive, novel, and authoritative insights. And this year, we're planning to lean into 3 pillars in particular. The first is that we want to talk about crypto at scale. The second, talking about institutional integration. And the third is where the AI crossover happens with agentic commerce. So firstly, crypto at scale. Trillions of dollars are now moving natively on the blockchain. That's stablecoins, tokenized assets, payment infrastructure, and the leaders and founders who are defining how that works are all here at this conference. In terms of institutional integration, institutions aren't on the sidelines anymore. They're building, they're deploying, and also, for the first time, major Wall Street institutions aren't simply just here speaking at Consensus, they're sponsoring us as well. And then in terms of AI, having agents that can independently reason, transact, and settle on-chain, it's no longer theory. And this frontier of where AI and blockchain come together is the reason why we are spending a significant amount of time in the programming to talk about what that means. We have over 400 speakers across 5 stages spanning the next 3 days. Layer 1 founders, exchanges, custodians, infrastructure providers, folks from Wall Street to the White House, arguably the best set of speakers you can have. And in addition to all of that, we've got a hackathon going on, institutional summit, wealth management day, there's CoinDesk University, and our partners Solana are hosting Accelerate just upstairs. This is going to be a phenomenal week. I want to say a special thanks to our sponsors, our speakers, community partners, the city of Miami Beach, and all of you for making this week happen. I've been in this space for over 6 years now. And for those of us who've been through a couple of cycles, I think there's something that's really inspiring when you see the conviction of leaders who decide to build real technologies and real businesses, despite the fact that it's a bear market or it's a winter. And I think there's something truly special when those people come together. You look around the hall, you, me, everyone here at Consensus, we are those people. And I hope that you walk away with this level of inspiration and empowerment to keep building for the future. Consensus is the most important industry-wide event, and I'm so glad that you chose to be here with us.
Thanks, Mike. Thank you to you guys for coming out early. Appreciate it. Impressive. He did it without notes. I got notes. The difference between me and him is my brain is basically mush from staring at Twitter all day. So I was going to say is I got this job in December. I knew Consensus would be under my purview. I knew that meant I'd be speaking at the start of the conference. And so that meant yesterday morning on the plane ride down, I started preparing my opening statement. And when I was doing that, I thought to myself, you know, we had been in Hong Kong for our previous event. And if we're being honest, in Hong Kong, there was a little bit of a fog over the event because Bitcoin's price had gone from 126. It was down, and now it's around 81. We'll see those tickers over there. And it was happening in February, and there's a little bit like everyone was putting on a little bit of a brave face, but there was a little bit of uncertainty. Here we are 3 months later. I think in this industry, in crypto, the momentum is fairly clear. The direction of travel is extremely clear. And so when I was writing up what I was going to say here, I started with thinking about, wow, look at everything that's changed in the year. Like Morgan Stanley issuing their Bitcoin ETF, New York Stock Exchange building a tokenized platform, NASDAQ investing, all this stuff. And then when I was when I woke up this morning, I was like, actually, this year probably doesn't really capture the momentum. We could probably talk about just this last week, if you saw Stripe, who's here, they were talking about stablecoins, they were talking about crypto. And then I was thinking, actually, we should just talk about what happened today. Because you have Andreessen Horowitz, A16Z Crypto Fund, announced a $2.2 billion raise to go invest. You don't do that if you're not a believer in where we're going. But closer to home, Bullish announced a $4.25 billion transaction with Equiniti, which will be transformative. So I think there's just a ton of momentum, and I think this is the exact spot you want to be, because you'll see it manifested through everything that's out there on the floor, through the conversations we're going to have on stage. And I think it's just an amazing and exciting time to be in this industry and to be in Miami. This is going to be awesome. Yes, it's hot out. I was very worried that when I was standing on stage, I was going to be dripping with sweat. I walked 15 minutes from my hotel here. I made sure I buffered some time to cool down. I think it mostly worked. You guys tell me. But there's going to be so many events happening around here. There's going to be so much happening in here where it's air conditioned, so stay here. A little hotter under the bright lights. If you don't have to get up here, I wouldn't recommend it. But it's going to be an amazing, amazing event. So thank you to the team that's putting it on. Thank you to everyone who's an attendee. Thank you to all the sponsors. And we couldn't be more excited.
Great. And so let's get the show on the road. If you can join me in welcoming the mayor of the city of Miami Beach, Stephen Miner, and also the commissioner, Joe Magazine, to the stage. Let's get the show on the road. Thank you.
Thank you so much, my friend. How are you? Thank you.
Morning, Miami Beach. I'm Stephen Miner, the mayor of Miami Beach. It's Commissioner Joe Magazine. Just talk to you briefly about why Miami Beach is the best city in America, the coolest city in America. Sorry if anybody, obviously, who's not from Miami Beach. But that's my job. That's our job, to sell our city. And right now, it's a pretty easy sell. This is the type of conferences, a leading global elite conference, 100 countries represented here, 15,000 attendees, are choosing Miami and Miami Beach, where you are right now. And I'll tell you why people are choosing it. We are becoming a global city for so many different aspects. Fitness, for example, and health and wellness.
Hey everyone, welcome back to CoinDesk Live. We're coming to you from Consensus Miami. We just heard from Michael Lau and Jay Yarrow, and we are going to have the mayor on our program later, so if you want to hear more from him, stick around. Our next guest joins us now. He turned a century-old print institution into one of crypto's most watched Web3 experiments during his stint at Time Magazine, and now as president of MoonPay, he's building the financial plumbing that lets AI agents spend money. Keith Grossman, welcome to the show.
Thank you for having me back. I cannot believe it's been a year.
Well, thank you for sponsoring this amazing set.
I love the set. Plus,
we love the set too.
Like the two of you look wonderful on it. It's great to meet you,
yeah, it's
right?
Fantastic
and welcome
to
CoinDesk.
Of course, of course.
All right, let's kick this thing off. Consensus 2026. We just heard opening remarks on the main stage. Just talk to us about the next 3 days. I mean, what do you hope to get out of the conference?
Look, you all bring together an amazing moment. Last year at this time, like I was thinking about this, MoonPay announced the partnership with MasterCard for Iron, right? A year later, we've done numerous acquisitions and announcements, and so like I look at this as a really unbelievable sort of like staple of like how I could say like what will happen 1 year from today. And I think like what you're seeing right now within the crypto space is the ecosystem's just maturing fast, getting a lot of clarity and evolving. And so what do I hope to get out of the next 3 days? We have a big announcement coming, this week, which you will see about. But I think just continue to meet great people.
Keith, you're someone who has come since I've been coming here, you've been coming here.
Yeah.
And one of the things that you've said, which I quote often, is how much just deal making gets done at an event like this, maybe compared to some of the other crypto events.
Yeah.
So just tell us what it means for MoonPay. How do you guys look at an event like this? Is this really just customer opportunities? Is this like new partnerships you didn't even know existed? How do you look at Consensus?
So how do I look at it as our brand, right? Okay, so I think you have to look at it, now this is where I'm going to put my media lens on for a second, okay? Like, what do we do here? versus what are we doing distributively, right? So distributively, that's why we love this partnership, specifically on like the live component, because you'll have 15,000 people here, but you'll have hundreds of thousands of people who will zoom in and watch this live stream. And so on the live stream front, like the ability for us as a brand to get, that's where we get our branding out of it, right? For here though, what you tend to do really well, I mean exceptionally well, and I've been on record saying this, is you bring together a lot of key decision makers across, a lot of our partner ecosystem. And so in like one easy place, we could do meeting, and it's a very efficient use of the time. And so it's one of those rare instances where we take a lot of people from the MoonPay ecosystem and the MoonPay staff, and we bring them to wherever consensus is, whether it is Texas, Toronto, or now Miami.
So if you took a look at MoonPay a year ago, we talk about the institutionalization of this market. You look at MoonPay a year ago and your need to proactively access the traditional finance market versus what is now inbound to MoonPay. Has there been a shift over the past year? What can you tell us about institutionalization from MoonPay's perspective?
Sure. So, I mean, it's an amazing question, right? And I think like what you have to look at with the crypto ecosystem is how it's maturing, right? Forget the price of Bitcoin today, which is actually, on an upswing at 81 and change. Let's just look at the trend line of crypto. Crypto's going through 4 clarities, right? It's going through legislative clarity, and we saw that this week, right? We saw this literally on Friday when Tillis and Alsobrook said that we have a compromise on yield. We're going to get clarity, it looks like, over the line. It's going through regulatory clarity every day. I mean, you're seeing the SEC and the CFTC come out and sort of do and say certain things to make the ecosystem clearer to operate. It's going through banking clarity, and it's going through accounting clarity, right? If any ecosystem got one of those clarities, it would be an unbelievable boon to the ecosystem. Crypto's getting all 4 roughly at the same time, right? And it's probably going to continue on for maybe, I would say, the next 18 to 24 months, right? Regardless of what happens in the midterms. Now all of a sudden you start to look at that. What does clarity provide? Clarity provides stability. Stability provides capital inflow. Capital inflow provides innovation. And it surprised me that you're seeing this ecosystem continue to evolve. And that's why when you look at how MoonPay's evolved, not only from an on-ramp to an on-ramp and off-ramp trading, issuance, and all the other stuff, we look at sort of our ability to service retail, enterprises, and now institution, which is why we made the announcement last week with Caroline Pham.
Right. I think when you take a look at this kind of concept of institutionalization, and you think about regulatory clarity versus legislative clarity, I think regulatory clarity is difficult to change. Legislative clarity is really hard to change. So to future-proof what we're doing here and really get that capital inflow and institutions to really lean in, I think that legislative clarity is going to be great. If we can't get that, we'll kind of accept regulatory clarity as well.
Look, I will say what we've seen with Genius is amazing. What we've seen with Clarity, will be great for the ecosystem. You were at Grayscale before. I mean, what Michael Sonnenschein did to get the Bitcoin ETF, over the hump, I would argue is probably one of the most important moments in crypto sort of institutionalization and adoption that the industry had, because from that point forward, you look at top 10 Bitcoin holders pre-ETF versus top 10 Bitcoin holders post-ETF, it's a completely different ballgame.
Right.
Keith, you have used the analogy for years now about crypto being sort of the iPod, right? 4,000 songs in your pocket. That was really a message towards retail. And I'm wondering what your analogy is today as we see maybe retail saying, we're going to see how this plays out, but then you're seeing institutions come in hard.
So I think the problem with crypto is it's treated like it's a vertical category and it's a horizontal category, right? And what I mean by that is when you treat it like a vertical category, nobody understands how to make sense of this ecosystem, right? Because all they'll ever say is they'll say it's gambling or it doesn't have a USP, right? And that makes sense when it's hard to wrap your head around it. Going back to sort of my media background, right? In media, print is a vertical category. You're either a magazine or you're not a magazine, right? Radio is a vertical category. You're either radio or you're not. broadcast is a vertical category. You're either terrestrial broadcast or you're linear broadcast or you're not. Digital is a horizontal category. Anything that can be digitized can. So that means you could have digital audio, digital video, digital text. You could share digital. You could do things that you couldn't do before with digital sort of technologies. Crypto's a extension of digital, right? So anything that can be digitized will, but then if it's digitized, it can be tokenized. Just because it's tokenized doesn't mean that there's value to it, right? And so there's many different verticals within crypto that like have to be sort of pulled out. You know, Bitcoin is its own vertical, I would argue. The ETFs are their own vertical, I would argue. Stablecoins are their own vertical. Meme coins are their own vertical, right? And you can go on and on. And then you could show the USPs of each of those. Bitcoin, however you want to argue it, like I would say is pretty much an alternative investment asset class. The ETFs allow, as a USP, the traditional banks to have a vehicle to absorb these new asset classes. Stablecoins is embedded finance for the internet, a movement of value over the internet. And meme coins is essentially, you know, I don't know.
Culture. Fun.
Having fun on culture.
Gambling.
Gambling. I didn't want to say that. I was thinking of any word but that, right?
Yes.
So I was like,
Speculative.
It's speculative.
Speculative segment of the market.
But it's no different than junk bonds for the most part, right? Like, and so when you look at that, when you treat crypto like it is a vertical, not a horizontal, all you ever get is Bitcoin, stablecoins, and fartcoin. And the reason is because Bitcoin's the largest asset, stablecoins are the asset that makes the most sense to the institutions, and fartcoin's the most ridiculous sounding asset that could have a massive sort of adoption.
Keith, we got to leave it there. Thank you so much for
We're leaving it on that. That is amazing.
We're going to leave it on Fartcoin.
Wait, can we do one overrated, underrated?
Yes, we can. Get those paddles out,
so let's go. Because I want to kick this off. If I'm going to be the first, because Arthur Hayes didn't do this, did he?
Arthur Hayes did not do this.
Okay, so I want to do this. So I have an
we got to just explain to the audience what's going on
underrated and overhyped.
Yes,
you like this?
And Dave Laval's going to participate in the game with you.
Well.
And Sam participates too.
Sam is going to be the one who gives you the topic. Are you ready with your topic?
Wait, you're not going to participate?
I am directing the game.
Okay, wow.
Okay?
So this is...
Ready?
Okay.
Go.
Sam, topic.
Okay, my topic for you guys is AI decentralized compute tokens.
That was a crazy topic, Sam.
BitTensor, let's go.
Underrated. Very quickly, why?
No, that's not the game.
Okay, very quickly, why?
Don't answer. That's not the game.
That's not the game?
No. The game. Wait,
Stay tuned. I'll answer later.
She said we had one question.
This game, underrated, overhyped. All right,
amazing. On that note, thank you so much for having me.
Thank you so much for being here.
Great for having
me. The game will continue to evolve as we go on, so stick around and check out how that progresses. That was MoonPay President Keith Grossman. We're going to take a quick break. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
He started his career at Lehman Brothers in the mid-2000s, found his way to Nomura, and then walked away from Wall Street to build the plumbing that now powers fintechs across 40 countries. Please welcome the co-founder and CEO of Alpaca, Yoshi Yokokawa. Hello, Yoshi.
Hi, great to see you here.
Great to have you here. I know that you have some news to break during this interview. I am not going to steal your thunder. Take it away.
Yeah. So we just crossed $1 billion in terms of the tokenized asset U.S. securities. So it has been growing really rapidly. It was almost like $10 million 9 months ago. So it has been an amazing growth rate that we've been seeing.
And just take that one step further for us, and then Dave, I'll let you jump in. Just talk to us a little bit about the significance of that. I mean, from $10 million to $2 billion in such a short time frame. connect the dots for our audience.
Yeah, sure. I think like, the tokenization has been the center of a lot of discussions, but I think like, what's important is that like what's really getting traded, what's getting like demanded as, from the market. And that we see a lot of trading volume happening, growing in terms of the US equities tokenization. And we have been like fortunate to work with the multiple players like, Kraken and Ondo and Dinar and all those guys. And they've been using our, plumbing to tokenize those US securities assets. And we have been, custodian for those underlying securities. So that has been like increasing, and that went over $1 billion. So, it's still very small, but it's getting there, it's getting close, and it's getting big.
I mean, I would say, congratulations, that's fantastic, and that's astronomical growth, but we're talking about, global equities market being $100 trillion market, so congrats, but it hasn't even started yet. So
exactly.
I'm curious if you could define where your demand profile is coming from, especially as it pertains to the US equities market.
Yeah, definitely. I think like, there are like, a couple things that's happening in the tokenization. Definitely like right now, like, we see a lot of demands outside the United States. And this is like, the two reasons, right? One is definitely like, there's a still legal clarity that needs to happen. There's like Genius and clarity,
right.
and
right.
the SEC clarified the crypto asset security is a security. However, like, the players who's actually dealing with that is under FINRA.
Yeah.
So the actual like, auditing and how to, make sure the process is correct, it's still, undergoing. And we're discussing a lot to make sure that things are okay. So that is like one of the reasons why it's, a lot of things happening outside the United States. And the second thing is that I think like a lot of people who live on the on-chain natively, they want to allocate the capital and the risk profile into the TradFi risk.
Right.
That has, traditionally happening, more of the emerging markets like LATAM and some of the European countries and Africa. So we definitely see the demands around there.
So this to me, as I think about Alpaca, is really like a benefit to bring to like the investor base. How do you transition that to being a benefit to the issuer community, right? And how do you really rectify the reality that there's certificated shares and then tokenized shares and the ability to kind of, ensure that there's a single source of truth?
Right. I think, we are still definitely like, starting this journey.
Right.
I always think about this as the, paper certificate manual operation that was like 1970s, moving to more of the computerized over the last 50 years. Now this whole paradigm shift happening from TradFi to on-chain.
Exactly.
So I think we have to think about not like next 6 months, we actually have to think about next 10, 20 years.
Exactly.
Right? So I think right now you're correct. Like even with this announcement we did with the DTCC yesterday, that structured still, we're talking about like how we make sure that there's a basically representation of the DTC certificate, right? Instead of like that's happening naturally on chain. And I think like there are multiple ways of the tokenization that's happening, and we'll see at the end of the day it's going to be fully on chain. But right now, just like we see the digital representation of the paper certificate, it's going to be a multiple ways of a tokenization that will happen.
Right. And then one more piece to the puzzle that always confuses me is the fragmentation of liquidity. When you start talking about multiple versions of tokenization across the entire industry. How do you think about that, and how do you solve that for your investor? Because obviously, you would want to ensure that if I'm going to buy a tokenized version of Apple, say, that I'm going to have a good experience of accessing liquidity and getting a fair price.
Yes, I think what's important is that like right now, like most of the actual liquidity that's happening in the tokenized stocks is a tokenized stock that's one-to-one backed with the actual underlying securities on the TradFi side.
Right.
So actually it's safer, and you can have the, in a guarantee in a way that underlying securities are at the safe place, like custodian ourselves, that's what we do. So which means that like if you want to in-kind swap that, tokenized stocks into the TradFi securities, you can do it atomically. So that allows you to have like, liquidity problem to be resolved as much as possible. And I think like, what's happening right now is like, market makers now, increasing to come into the market. I also like, think about this similar to, for example, you have like BTC spot market.
Right.
And there is a BTC ETF.
Right.
And of course, it's not exactly the same thing, but there is a lot of arbitrage opportunity that will continue to happen.
Right.
So I think like as we see more market makers come in, I think that exchangeability will continue to happen. And as long as underlying securities are in the safe place, and they can be swapped into the tokenized version, TradFi version in an instant way, I think there continue to be a lot of convenience around there.
There's going to be regulatory clarity and perhaps legislative clarity that's going to allow for broad-based institutions to really lean into it and put capital behind that liquidity. that liquidity provision
Yep.
that will collapse that arbitrage opportunity and give the efficiency that we actually do see in the spot Bitcoin market against the Bitcoin ETF. So yeah.
Yoshi, I'm interested in, you mentioned the arbitrage opportunity. You guys had a 4 times growth in API trading, largely driven, I believe, by AI. So are you foreseeing that people who are going to create these AI bots are really going to be looking for those moments where they can get arbitrage, and that it's going to be a lot of quick in, quick out trading to really just exploit the opportunities that might be coming in the market?
Yeah, I think this AI impact to the financial services in general, I think it's a massive thing that's happening, right? Because I think right now, people who were kind of shying away from automating anything is now, you can do it right away by just vibe coding and just speaking to it. And that really shows this the sudden increase of the developers in the world, because all of us are now developers in that sense. So I think that kind of automation will continue to happen. That will accelerate the efficiency to each other. So we're going to see a lot of automated trading happening more.
Yoshi, we got to wrap it there. Thanks so much for joining us at the desk, and we hope you enjoy Consensus.
I appreciate that. We'll do.
All right, that was Yoshi Yokokawa, co-founder and CEO of Alpaca.
Hey, congrats.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to the program. Bullish, the parent company of CoinDesk, announced it has agreed to buy Equiniti for $4.2 billion. Equiniti is one of the world's largest transfer agents, maintaining records for more than 2,500 companies and processing roughly $500 billion in payments every year. The deal gives Bullish a fully integrated tokenized securities platform covering issuance, registry, trading, and settlement in one place. Bullish CEO Tom Farley and Equiniti CEO Dan Kramer join us now. Hello to you both.
Great to see you. Nice to meet you.
Congratulations on the deal. I know you've both been very busy talking about it this morning. I think it's important for our audience to just differentiate between what's going on here and the tokenized equities products and stories that we've heard about until now. So Tom, we'll start with you.
Can I just, as a matter of personal privilege, I first want to say how excited I am about this deal and how appreciative I am about Dan's leadership. This is not only a great strategic opportunity for us, it's a great business, and really under Dan's leadership in recent time, it's been revolutionized or modernized in a way that we're easily able to buy this business and bolt it in with Bullish in a really cohesive way. So thank you for that.
Thank you for that. Looking forward.
So on the tokenized equities, Jen, as I like to say to the team, there's this world of tokenizing equities which really isn't tokenizing the equity, it's creating a derivative or a contractual right using a token. And I'm not a big believer in that, but even if it does succeed, it's just not the future I'm interested in. My focus, and perhaps it's the head of the New York Stock Exchange in me, is very issuer focused, and the issuers aren't going to benefit from some new derivative on their stock. They care about the token being the share being the token. And that's what Equiniti and Bullish can do together. Equiniti is the golden source of truth for the actual shares, and now we can create tokens and have those sit right there on the ledger alongside the old school certificated shares, or just kind of the old school shares, if you will.
And Dan, we get to hear Tom talk a lot about tokenization and his excitement. I'm interested in what got you excited in this category.
Yeah, tokenization is tremendously exciting for us. If I could just complete that answer to that question for 1 second, is that what we hear loud and clear from issuers is that they don't want more than one register. They don't want to have a place where their traditional shares are shown and a place where their tokenized shares are shown. They want to have one place where their traditional shares and their tokenized shares can be seen on one record. In fact, Tom and I will be doing a demonstration later today to show how that actually works in real life, in practice. The excitement around tokenization comes from simplification of the markets. This is really a post-trade transmission for the marketplace. What we're seeing is, if you look at all the different counterparties that have to be involved in trading and then settling an equity, what this does is it takes all of those out, and we partner with the various players, and there's going to be one chain of record, and you don't get all the complexity of settlement.
I know that a demo is happening later, but Tom, what changes for shareholders? I think people might be watching and thinking, what's the actual difference for me? What does that look like?
Dan, Bullish and Equiniti both came to this with a good deal of humility, actually. I was kind of hanging on every word Dan was saying. There are solutions out there in the market, actually, where you have two different transfer agents for tokenized shares. That ain't gonna work. It absolutely isn't gonna work. And we came to that realization, and they came to that realization, and we both said, hey, we're missing something. We were missing the transfer agent functionality and all the issuer relationships. They were missing the smart contract know-how, the digital asset know-how. So we thought, is there a partnership in here? Partnerships don't work. We needed to be one. We needed to really have a single holistic offering. And so I think that humility, where we were both able to look at it and say, hey, we need some help, that's enabled us to reach a really mutually beneficial deal today. I don't know if that answered your question. I hope it did.
Well,
I hope it did. I was excited to add on to what he said. I think I got like 42% of it.
I think you did good. You did good. There's still time to unpack the news, I think, as the day goes on.
I guess, Dan, to build on what Tom was saying, I've loved stablecoins because it really feels like money caught up to the internet, right? We finally can do things at lightning speed. It feels like what you guys are doing together now is bringing that to the equities market. Is that a correct interpretation?
It's a fantastic analogy, right? So what this means for issuers, and you think we have almost 3,000 issuers for whom we hold their record of who owns what of their companies every single day. For those issuers, what this opens up, like stablecoins opens up a whole new pool of investors in the dollar or in whatever currency. This opens up a whole new pool of investors who could, previously either not be able to access markets or not being able to, from a regulatory perspective, invest in US companies. So we bring a whole new pool of investors to issuers.
I was having trouble articulating a similar point. So we're buying Equiniti from a firm called Cirrus. And the chairman of Cirrus, and in fact the chairman of Equiniti, is a guy named Frank Baker. And this morning, he helped me kind of articulate this exact point, which is, if you look at what happened with stablecoins, people thought, oh, okay, we'll tokenize the dollar, and now Americans will be able to whip it around for payments a little easier. What actually happened is the Peruvian cab driver started owning stablecoins, and there was new pockets of liquidity, in this case for the US dollar, right? The Peruvian cab driver now buys it, and all of a sudden you have to buy a treasury against that, and creating more liquidity for the US dollar. So too will we see with equities, where you will have new pockets of liquidity pop up for NVIDIA stock. And liquidity is the lifeblood of a public listing, because the more liquidity you have, the more you drive down your cost of capital and the more effective you can be competitively. That's what's ahead of us.
All right, Tom, Dan, we gotta leave it there, but for everyone watching at home, if you want to see that demo, we'll be taking it on this live stream later on today, so stick with us. Thank you and congratulations on the announcement.
Thank you.
Thank you.
Guys.
Awesome.
See you soon.
That was Bullish CEO Tom Farley and Dan Kramer, the Chief Executive Officer of Equiniti.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live. We are coming to you from Consensus Miami. Our next guest spent 17 years as a federal securities enforcement attorney at the SEC before becoming mayor of the city where crypto's premier industry conference is taking place right now. Please welcome the mayor of Miami Beach, Stephen Miner. Hello.
Good morning.
Thanks for being here at our conference.
Thank you for being here.
Well, talk to us about that. Here we are. Consensus is happening in Miami Beach. Talk to me about the significance of having an event like this, a crypto event like this in Miami Beach.
It really shows the trajectory of Miami Beach. This is a perfect example, Consensus Miami 2026 being here, because you were in New York, you were in Austin, and now you've chosen to be in South Florida, Miami Beach. And we were seeing that consistently, conferences moving here, capital flowing into our city. It's a great time to be in Miami Beach.
What do you think, Stephen? You know, an event like this brings a lot of people in, but I can imagine part of it you're saying, hey, how can we court more of these companies to relocate? How can they put their employees here? What are the top 3 things that people come to Miami for?
So we're definitely looking to court, and I've actually heard some, in some casual conversations, people actually looking to open their offices here. We have public companies moving here, moving their base, their headquarters, family offices moving here. We're actually trying to get more Class A office space open. But I think it's a couple of things. One is law and order. We are a law and order city. We are extremely safe. That's one of the things I've been focused on. Crime is down. Our homeless numbers are the lowest ever in our city's history. So people feel comfortable being here, going out with their families, investing here. But we're also creating an environment where businesses can thrive. We realize here that we want to lower regulations, lower taxes, no state income tax. We're actually returning money to our residents. First time in 20 years we did that. Easing the process of regulations. It seems like many states and cities are going the opposite way. Here in Miami Beach, we're actually saying, no, we want to make it easier for you, bring your capital, we'll get out of the way so you can do your thing and innovate.
So safety, obviously, very friendly, business environment is one thing. Obviously you had F1, now we've got Consensus, there's tens of thousands of people descending upon the city. There's only a few cities in the country that can actually handle that. But maybe talk about your approach to investing. I know you're just not running the city, but think about the city as an investor and talk to us about that.
And I do. I'm actually in the. I now help run a private fund, a resilience fund with the Farkas Group. So I understand, and I'm a businessman as well, which I think helps because I view the city as a business. To me, safety came first. We had to clean that up, clean, safe city, so capital and people want to be here. And then, as you're saying, create that environment that people can thrive. And that's why when we have a conference like this, it showcases our city. I mean, this is a preeminent conference. When I heard that you guys were coming here, I was just thrilled because it's really a statement of your trust in Miami Beach and your trust to be here, to fly people in from 100 different countries all over our country. I could not be more proud to have Consensus here.
There's more. Oh.
No, go ahead.
I was going to say there's more than 400 side events happening. I mean, tell us, what do we got to get up to?
Well, I think you're doing it. I think you're thriving, which is incredible because, for example, in the first quarter of 2026, our hotel room rate in Miami Beach on average was $424, #1 in the country. And every metric you look at, we're #1. The #2 city was about $278. So we're $150 higher than second place. And that obviously so we're breaking records every month in our resort taxes, which helps us because then we have the money actually to give back, but also to have the necessary resources to make this a world-class city, clean, safe, and do all the things that you're seeing, hopefully, in our city.
So last quick question. You talk about people coming here to stay for a temporary basis. Last night I was at one of the side events and was having a conversation about somebody who was looking to buy property here. And the property values are absolutely running away. How do you think about that? Talk to me about inventories and talk to me about actually living here.
Yeah, property values, as really it has in around the country, has gone up a lot. There are still pockets in our city that are more affordable than others, but certainly, I mean, you see it. You see all the big names of finance and tech are moving here, so that is certainly elevated. But it shows you the quality of product that we have here. And what's going to happen is the infrastructure is all going to move down with them. Their offices are going to move here. It's happening already. The educational centers, you see more focus on creating the schooling and not only at lower levels for families, but higher education to move down here. The whole ecosystem is happening in real time, and it's just going to continue.
Amazing.
Mayor Miner, I have one last question.
Please.
Dave and I are both foodies. What's the one restaurant we got to go?
So am I. Wow, I've been excluded from the group.
So, well, it's an interesting question because I'm actually, I keep kosher, so a lot of the great restaurants that we have, but 2 of the 3 top restaurants, independent restaurants in the entire country are based here in Miami Beach. I actually have a pretty high level meeting today at Milo's, which is the #1 revenue in the entire country. So, but yeah, we have a great stock. I hate to almost name one because we literally have.
We'll be at Milo tomorrow night. All we needed. There you go.
Awesome.
All right. Thanks, Steve.
Thank you.
Steve, thanks for joining us. That was Miami Beach Mayor Stephen Miner. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Bitcoin has historically been the asset people hold, not the asset they stake, but Babylon is changing that by letting Bitcoin holders stake Bitcoin directly from the Bitcoin network without wrapping or bridging it, and using that economic security to help secure proof-of-stake chains and roll-ups. David Say, co-founder of Babylon, joins us now. Hey, David.
Hello, hello.
All right.
Jen, nice to meet you.
Yeah, nice to see you. Nice to meet you. I've said this a bunch. We are here in Miami. Babylon has a presence here at Consensus. Just talk to us a little bit about what you've been up to so far, what you're looking forward to over the next 3 days.
Yeah, so Babylon is about making Bitcoin productive, but not only productive in the abstract, but very importantly, trustlessly, okay? So we don't want any wrapping or any bridging of the Bitcoin to Ethereum, for example. You know what happens when you bridge stuff. So no bridging. And so our first protocol that we launched, you mentioned, is Bitcoin staking. Today it has about 4 billion TVL on this protocol. And what we're up to is to generalize the staking application to any DeFi protocol. So anybody can take the Bitcoin, trustlessly participate as a collateral in any DeFi protocol. So that's what we're up to.
David, I'm always excited to talk to you because there's so many people in our ecosystem who are really Bitcoin focused. There's a group of them that wants to say, leave it alone, let it just do its thing. But I think you talk about the idea of productive capital and how do you put your money better to work. What's your story to the maxis when they say, hey, Bitcoin just is being Bitcoin and that's fine?
Yeah, I think the Bitcoin staking protocol is a good example. We launched it a year ago, and now it has 4 billion. TVL. So it shows that if you have a trustless protocol, very importantly, then people will come. So the data's there.
So question, how much transparency do you have into where the demand profile is coming from, for example, for the Bitcoin staking protocol? And furthermore, I'm of the opinion that you've got Bitcoin, you've got everything else.
Yes.
And Bitcoin also includes kind of the ecosystem that surrounds Bitcoin. So talk to us about your thinking about that, and what other applications you think you might be able to put on top of Bitcoin.
Yeah, so transparency. The Bitcoin is locked on a UTXO, so-called, on the Bitcoin chain. Everybody can observe that, completely transparent. In terms of other applications, so the application actually we're focusing on right now is the biggest DeFi application, lending. And we have an integration with Aave. We're working very hard with Aave on Aave v4 to launch a lending pool with Bitcoin, native Bitcoin, trustlessly as collateral, go into the pool and borrow USDC or USDT. So that's what we're focusing on right now.
So I'm moving my Bitcoin someplace else, or I keep my own wallet, and
it's
that's
on
the
Bitcoin
collateral.
chain.
Exactly.
It's a collateral, and you can your Bitcoin will be returned to you when you return your loan on Aave automatically. And in the bad case, when you liquidate it, it will be liquidated only if Aave says you liquidated. So it's completely following sort of the smart contract.
Got it.
I want to almost come back to the basics here and ask you, why you think Bitcoin has remained almost underused in capital markets, and what changes when we have Bitcoin being used as a programmable asset?
Yeah, I think so far first of all, Bitcoin is very hard to directly program smart contract in Bitcoin because of the limitation with the block space and the language. The scripting language is very primitive. And so therefore, for the Bitcoin to be productive, it has to go into an ecosystem like Ethereum with a smart contract. But the only way you can go through is through these bridges, wrapped Bitcoin, WBTC, CBBTC, etc. And the data is that less than 1% of the Bitcoin goes through this. And we all know what the reasons are. Bridges have security issues. Also, if you go through a bridge, there's a ownership transfer. You lose title to a Bitcoin, and many people do not want to do that. So our solution is to make this whole process completely trustless, take away the bridge.
And just because you're pointing out something accurate, which is bridges can be exploited, how do you protect the Bitcoin specifically? Like, give us a little bit more of the specifics of why my Bitcoin is going to be safe by working with you.
Yeah, so the reason why bridges are not secure is because bridges are maintained by usually a few key holders. And if you lose those keys, or if they exploit it, then you can attack. We also one attack like this, CapDAO attack recently. And so we sort of get rid of all these keys and just focus on using so-called zero-knowledge proof technology, which automatically verify Ethereum state, like Aave lending state, and then report that back to Bitcoin. And so the core technology we built is to allow Bitcoin to verify that proof. So that has been a long-standing problem, and about 6 months ago, we cracked that problem, and we came up with a solution which is 1,000x more efficient than the previous solution, which makes all this practical. Before it was theoretical, now it's practical.
You said 1,000x.
1,000x, cheaper on-chain, 1,000x cheaper off-chain, everything 1,000x.
Run me through the math quickly, because I'm like, I was up with you, and then 1,000. I was like, wow.
Okay. We did an experiment with the previous technology. It cost about $15,000 to put on-chain a ZK verifier. Okay. Before. Now we are about between $10 and $20. Okay, on chain. So that's 1,000x, more than 1,000x, and the cost we pay off chain is very little.
Right.
It's like a few megabytes of data
to
store.
There's the math. Okay, so let's say what's next. Like, what's the next application that you could run Bitcoin that you think is going to be something that's going to kind of bring better utility to this particular asset, which is such a large part of the crypto ecosystem?
Yes, we are looking at many other applications, like insurance, for example. That's one application. However, I would like to say that lending, what we're focused on right now, with Aave, is kind of itself an application that leads to many other applications. Because typically people borrow USDC, USDT to enter into yield opportunity. So we're working with a lot of projects which are building on top of the lending integration.
Right.
So I think there was an announcement. We just have an announcement this morning, example, with gold mining. So they're building on top of our lending infrastructure, Bitcoin collateralized lending, to do other applications on top of that. So that's one example.
This is really just an example of a more efficient way to utilize Bitcoin as your collateral, and then once you have an efficient way to utilize your Bitcoin as collateral in a safe manner that doesn't incorporate any bridging, that opens the door to do whatever you want to do.
Exactly.
Got it.
All right, we got to leave it there. David, thanks for joining the program.
All right, thank you for having me, guys.
Great to see you.
Bye-bye.
That was David Say, Babylon's co-founder.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Back to our program. We are bringing you the best of Consensus Miami, brought to you by MoonPay. Our next guest spent 4 years fighting the SEC and emerged with a landmark ruling for XRP. He then turned around and spent $4 billion rebuilding Ripple into a global payments powerhouse. Please welcome Ripple CEO Brad Garlinghouse. Brad, how's it going?
Good to be here.
Good.
A lot of stuff to talk about. It's a busy day.
Let's get into it.
It is a busy day. Bitcoin up above $80,000.
It's awesome.
A lot of stories breaking throughout Consensus and overnight. I mean, what are you watching as we get the day started?
I mean, I thought there were a couple big headlines overnight. I say this, the Bullish deal, obviously the biggest crypto deal ever. I think is also an amazing example, I think not dissimilar to some of the acquisitions Ripple has made of traditional finance bridging to DeFi crypto, where Equiniti, I think, had zero activity around all things crypto, tokenization, real world assets, and now being partnered with Bullish. I think it's a big unlock for both companies, and not surprisingly, the stock's way up on the news.
Brad, there's almost no one better to talk about this. When we come to tokenization, we're here, the institutions are here, you guys are here, you've done a lot of the legwork to get these folks here. How does it feel to sort of see, even with the Bullish deal, that tokenization is the topic people are talking about?
Yeah. I'll tell you, I mean, you've obviously been around the block also and been around and seen this, and to see how far we have come, I guess around the block, pun intended in this case, but you know, it does feel a little bit like a magical moment. I am glad to see Bitcoin back over 80. It's surprising to me that the market has been kind of in the doldrums, despite a lot of things lining up for what I think is likely to be a nice set of things where crypto in general is more useful, even your previous guest, more leverageable from a collateral point of view. And that's true of lots of different institutional players, and I think that's certainly true of what we're doing at Ripple. The acquisitions you mentioned earlier, both with a company, Hidden Road, the prime brokerage business, making XRP good collateral across lots of different institutional platforms is a big deal.
You know, one of the other big headlines that came out last night, we spoke about it with Arthur Hayes this morning, is Coinbase having around 14% layoffs. Curious how you're watching that and what that indicates for people who are working in this industry and the broader macro environment.
I have two thoughts on this. I mean, one is, I have said for, I don't know, maybe a decade, we can't just focus on speculation as a use case for crypto. And what I think you're seeing is, okay, yeah, we're in a relatively speaking bear market, and so, you know, Coinbase is very reactive to what's going on, and you know, Kraken, not surprisingly, has delayed their IPO purportedly. You know, not surprising that those things have happened when you're so dependent on a consumer speculation use case. The only thing I would say, which maybe is a little bit controversial, you know, part of what Brian Armstrong said publicly was about how AI is a factor in those layoffs. For Ripple, yes, we are employing and using AI across everything we do to accelerate growth. The addressable market, the growth opportunity is so big, we're not thinking about AI as a tool to reduce headcount. We're thinking about it as an unlock and enabler to go after more products, more customers, faster. And I think we're at a stage of the crypto market that it's just an accelerant, not a, hey, we can save money over here. I mean, if you're a public company, maybe you have some different levers you got to think about. Ripple has the advantage of being private.
Well, it's not only Brian Armstrong who said that. I think we've heard that from the CEOs kind of pretty much across the board.
That's a cover story.
What do you think's going to what do you think's going to happen given your perspective, right? Companies are laying off because they feel like AI is going to improve productivity, allow them to reduce headcount. Do you think they're going to have to make a reversal sometime in the future?
I don't know if they'll make a reversal. I just think that some of these, I literally think it's a bit of a travesty for AI. And it's like painting AI as the boogeyman, and this is bad. And it's like every time we've seen new technologies come along, I just heard an interesting stat actually. When the automated teller machine, you may be too young for this, when the automated teller machine came out, people said bank tellers are going to lose their jobs. 10 years later, there's twice as many bank tellers. And what the ATM allowed them to do is do more interesting things and cross-sell other products. And so I view AI as an unlock, and I think the companies that are hanging, frankly, maybe sometimes bad management on hey, this is because of AI, I think it's unfortunate. AI is an unlock. For a growth industry like digital assets, like blockchain infrastructure, it's an unlock to accelerate what we're doing to get more adoption faster. And I'm sure even what we've seen with Bullish and Equiniti, what Ripple's doing around Ripple Treasury, bringing old school traditional finance, non-digital asset native onto chain is accelerated by things like AI.
And it sounds like, Brad, what I'm hearing from you is you're saying, hey, I spent years building this top team, and now I just want to turn them into superheroes. I want to give them a superpower that says anything you could have imagined you can make happen. How are you applying that in a practical way across the company?
Well, look, we have definitely engaged in kind of all aspects. Team finance is looking at, how do we automate more activity so that we can unlock those people to do higher order bit things. Across marketing, more creative attribution. And then, of course, our core code writing is now, I think that the stat was around 75% is enabled one way or another or written by AI. Now, should that be more than 75%? We'll see how things progress, but we're definitely engaging fully, even getting smarter about which kind of targets we go after across our products. It's been an unlock, but again, not to how do we exit headcount, it's just to accelerate our adoption.
I want to talk about regulation for a second. I think, you've been through it with the regulators, come out on top. We now have clarity we're waiting for in the United States. Some progress has been made there. It feels like there is some movement. I got to get your perspective here. Yeah. Is it possible before midterms? There's a lot of optimism in the industry, but as time moves on, I will bring the pessimistic perspective.
Look, I have been pretty optimistic throughout. Sometimes difficult. My own, concern about is this going to happen? I think we have seen a lot of. I don't think people can. It's been a big positive shift in the last week. Getting Senator Tillis on board, and kind of getting not yet scheduled, but likely a markup for either next week or the week after, the week of May 11th or May 18th. And I think if we get it out of committee, the likelihood that we get bipartisan support and get 60 votes on the Senate floor, I think is very high. So I've consistently, I think, been the optimist around this, and so far I'm feeling more right than, despite people who thought maybe I was wrong. We'll see. We still got time. I agree with you, it's not there yet, but I'm pretty optimistic now.
All right, Brad, I'm going to go on the main stage in a few minutes to talk with Kraken and MasterCard about really the brand that is crypto. I feel crypto itself as a brand has gone through a lot of ups and downs. Ripple as a brand is one that, to me, defies logic only because you have such a loyal fan base. The sort of XRP army online is so strong. Tell me about how you thought about building that and just the idea of all these people coming along on this journey with you. What does that feel like?
Yeah. Well, I'll start by saying I remember the first time I went to Davos, I ran into a central banker from another country, and I'd met with him previously, and he's like, I'm surprised you're here. Here, crypto's still a bad word. Now, that was about 7 years ago, and I think we have come as an industry a very long way, where crypto's no longer a bad word. But on the topic of the XRP army, look, one of the greatest things about crypto in general is the community behind it, the people who see the opportunity for rewiring financial infrastructure using technologies that reduce cost, improve speed. These are unlocks. Look, the XRP Army has been an unbelievable supportive group, allies, and I have also said to that community and to the entire crypto community, tribalism is bad for our industry. I've never been an XRP maxi, and people who are out there kind of just, it's not going to be a one-chain world. It's going to be a multi-chain world. I want to see Bitcoin be successful. I love what's going on in the XRP ecosystem. I was in Vegas last week at XRP Las Vegas, and it was the most vibrant, the most active that community has ever been. It was really spectacular.
And it does feel like you're out there with a message, hold us accountable.
Yeah,
Make us do the work.
For sure. I mean, look, Ripple has always been the most interested advocate in the XRP ecosystem. We own a ton of XRP. That doesn't give us control of XRP. We're not proof of stake and how that architecture works. But we have always been leaning in, and how do we do things that are good for the XRP ecosystem? All the acquisitions we made, all the building we're doing is in service of how do we accelerate the adoption, the usefulness of XRP, the liquidity of XRP, and the trust of XRP.
All right, Brad, we got to leave it there. Thanks so much for joining us at the desk, and we hope you enjoy the rest of Consensus.
Absolutely.
Thanks, Brad.
All right, that was Ripple CEO Brad Garlinghouse. Let's now take a look at what's going on in the news. Here are your top 3 stories this morning. CoinDesk has agreed to buy Equiniti for $4.2 billion. Equiniti is one of the world's largest transfer agents, maintaining records for more than 2,500 companies and processing roughly $500 billion in payments every year. The deal gives Bullish a fully integrated tokenized securities platform covering issuance, registry, trading, and settlement in one place. If you're just joining the stream now and you want to hear more, rewind. Tom Farley was at the desk not long ago talking about the announcement. All right, GameStop has submitted a $55.5 billion offer to buy eBay. The video game retailer has $9.4 billion in cash and secured up to $20 billion in outside financing. CEO Ryan Cohen has left open the possibility of selling GameStop's $368 million worth of Bitcoin treasury to help fund it. And BitMine bought 101,000 ETH last week, worth roughly $238 million, bringing its total to about 4.3% of the entire token supply. Chairman Tom Lee says crypto spring has officially started. He notes that investor sentiment is still muted and bearish, which is exactly how past cycle turning points have looked. Lee cited progress on the Clarity Act as a key driver, with prediction markets now giving the bill better than 60% odds of passing this year. All right, get all of your updates on CoinDesk.com. Hello.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Hey everyone, welcome back to CoinDesk Live. We are coming to you from Consensus 2026. We're going to do a deep dive into the Base ecosystem right now, and who better to do that with than Base's creator, Jesse Pollack. Hello.
Thanks for having me. Super excited to be here.
Oh, I'm really excited to be co-hosting with you. Usually you're on the other side of the interview.
This is new. It's the first time I've ever done this.
Now you're
so
joining
having
me
fun.
over here. First time, maybe not the last time.
Maybe not.
All right, we're going to be diving into the Base ecosystem, but I'd love to hear from your perspective, you know, what you've been working on, what you want to highlight, what's exciting in the ecosystem these days.
Yeah, I think as we've come into 2026, the place we're really seeing product market fit for crypto more broadly and in Base specifically is trading, payments, and agents. And so those are the themes I think we're going to dive into today. We'll start with Virtuals, who's really leading the adoption on agentic commerce and payments. We'll talk about how trading is happening with tokenization, with Centrifuge, and then we'll get a deep dive on payments from X402 with Eric. And so I think that survey is really where the action is happening right now in crypto.
Everything has been moving really quickly. It's like really hard to keep up with the acceleration of the innovation when it comes to payments, when it comes to agentic. You know, just talk to me from your perspective as a builder, what that looks like. How are you keeping up?
Yeah, well, I think, you know, from a price perspective, people feel like at times we're in a bear market, but from a builder perspective and adoption perspective, I feel like we're in a full bull market. And I think that one of the things that we're seeing is that the customer base who's coming on chain and using crypto as an enabling technology has really started shifting from being very, very early stage for the last 5 to 10 years where people were just experimenting and trying, to now being much more upmarket and late stage where businesses, whether they're doing cross-border payments or they're offering more assets to their customers globally, they're using crypto as an underlying substrate. And that's enabling them to offer faster, cheaper, global financial services in a way that wasn't possible before. And so that level of business adoption, I think, is a totally new thing to the space, and it's bringing so much energy.
We're going to get to our next guest in just a second, but I got to ask you, it's day one of Consensus. It's a 3-day long haul event. What are you looking forward to?
I always look forward to just being around builders. And in this audience, it's slightly different for me. At a ETH Denver, maybe it's, again, those early stage builders. Here, I'm spending all day talking to the Fortune 500s who are using crypto to make something that previously was slow and painful, fast, cheap, and easy. And so that firsthand experience of being with those businesses, I think is super exciting for me.
All right, let's get to our first interview. Shall we do it?
Yeah, let's do it.
All right. Virtuals protocol helped popularize the idea that AI agents can be more than chatbots. They can be on-chain economic actors with wallets, tokens, users, and revenue. Now Virtuals is expanding that thesis with Economy OS for agent coordination and Eastworlds for bringing agents into physical robots. Joining us now is Stefano Biri, head of US at Virtuals Protocol. Hello, Stefano.
Hi, thanks for having me.
Thanks for being here. Now, a lot to unpack there, right?
That's right.
Really hot theme, agentic payments, kind of taking over the headlines if we're not talking about institutional adoption and tokenization. Just talk to me a little bit about Economy OS and Eastworld. Set a foundation for us.
Yeah. So we started out building something we called ACP, which was a protocol that allowed agents to do work together with other agents and then serve humans. And then we realized that we actually wanted to build like a full stack of modules and tools that would allow agents to monetize what they do, and then give them different tools like wallets, identity, credit cards, emails, all these kind of things to make them true economic actors. And so that's what we're building it with Economy OS. Now with Eastworlds, this is something we've been building for about, probably about almost like a year. We started to think, what's the next extension beyond digital agents, right? And the physical world just felt like the obvious place to look at. And so the reality is that robots are basically, agents with, physical capabilities, right? It does introduce a lot of like new challenges, right? But so for us to kind of like understand the space, we actually built one of the largest robotics labs in Asia. We actually have a bunch of robotics engineers, and we're trying to bring in, a bunch of teams to do experiments to try to figure out, okay, what does the space look like? And then how do we see that convergence between like crypto and robotics in the future?
Yeah, and Stefano, I think virtuals is something like 40% of all agentic transactions on Base right now.
That's right.
This is a category that didn't exist 12 months ago.
Yeah.
What are you seeing actually driving that adoption, and what does it feel like to be at the center of it?
Yeah, well, it's fantastic. So we actually released ACP, which is using X402 for payments back in October. So it's been about 7 or 8 months since it went live, and it's enabled about $500 million in volume. Now, a lot of the use cases, I would say 90 or more than 90% are DeFi related. So, you have swaps, perps, prediction markets, vaults are super popular. Now, we've seen it in production, it's working really well. As we look to the future, we're starting to look at first like non-crypto financial products, right? So, equities, RWAs, commodities, all these kind of things. And then even beyond that, and one of the main reasons we're here at Consensus is to also understand, what do institutions care about when it comes to, agentic commerce?
Mm-hmm. Yeah. I was just going to say, I feel like this is one of the things that can sometimes get lost when you hear the buzzword like agentic commerce or agentic payments. Mark Andreessen in our board meeting the other day said it just seemed kind of dull. But then you think about this, you said you've done almost $500 million of economic transactions from agents,
yes.
And they're trading, they're borrowing, they're lending, they're paying, and all of that is happening on crypto as a substrate. I mean, that is the starting point of what we think can end up being billions of economic actors that are agentic, that are AI, that are transacting trillions of dollars. And so that's not dull, that's not boring. Maybe we haven't found the right catchphrase yet, but it's huge, and it's going to change the way the world works.
Yeah, and I think part of that is why we came up with this idea of economy OS, like the operating system for the new economy, which is going to be agentic. I mean, our belief and part of our vision is that the agentic economy is actually going to be much, much bigger than, the non-agentic GDP.
Yeah, and I'm experiencing it firsthand. Like I'm on my computer here all day. I have 4 different agent windows going in parallel, running things. And I was prepping for this session yesterday because it's the first time I've ever hosted.
Yeah.
Thank you for
You're
having
doing so good so far.
Trying my best. I was prepping for the session yesterday, and I said, okay, I call my thing Jay. Jay, find me the breakdown of payments transactions and who's driving what. And it then went and used X402 to go gather a bunch of data from DeFi Llama and other channels and brought that back to me in full context. And that sort of access, I feel like it's not something that most of the world is experiencing, but we're seeing that by having these native rails for agents to be able to pay each other, get access to data, get access to capital. It's actually going to enable way more human impact in the scale of growth that we can do.
Yeah, and I think one thing that's interesting is I think a lot of people think as agents as tools for humans, which is true, but there's also a lot of teams that are building agents that are serving other agents. And so you talked about data, and that's like a very good use case where there are teams that are building agents that specifically find you, what is the right data you need to go and understand the market, understand opportunities, assess risk, and so on and so forth.
Let's talk a little bit about that risk, because I hear economic actor and I think risk. And I was at a dinner the other night and someone was telling me about a friend they have who has an agent that acts on their behalf, that gained access to their bank account, and they lost all their funds. How are you thinking about that type of risk, and how should people be thinking about when they're interacting with AI agents, what those agents have access to?
Yeah, well, so there's 2 parts of our protocol that address that. And so one is escrow and the other one is evaluators. And so escrows, these are I think escrow is the type of use case for which smart contracts are fantastic, right? So you can basically set a set of rules that says, okay, when a service has been completed to a certain degree of quality or whatever you call it, the payment can actually go through. So basically you're not paying for things that are not done the right way, right? But the second one is evaluators. And so these are basically, they can be agents, they can be humans, they can be, groups of either one. And they basically evaluate each type of job to say, okay, has this been done, to a satisfactory level, in a safe way, et cetera. And then finally, one of the things that we adopted into our protocol was ERC 8004, which is, a trust layer. So we're building this, trust and reputation layer on chain that tells you, hey, this agent has, 5 stars. Everything they do is perfect, it's safe, it's, minimizing risk. versus one that might have 1 star, which is like, hey, it was used by a couple of people, it took their money, don't ever use this again. And so, we're trying to build that standard of like, how do we actually bring the right level of, risk management compliance, but at the same time balancing it with making sure that, these products actually are better than what we have today.
Yeah, and this is what we're trying to do at the base side as well, is we're trying to figure out what are the primitives we can bake into the chain for reputation, for credit, for chargebacks, for all these basically payments primitives that enable us to operate on this trustless platform, but in a trusted way, where people can rely that if they pay an agent for something, they're going to get the right result, or rely that if they enter a contract, it's going to resolve in the way they expect. And so that underlying financial platform is really what we're trying to, I think, mature as an industry to make it so that these use cases can bubble up to the consumer level in a way that's totally trusted.
Awesome. Well, Stefano, we're going to have to leave it there. We hope you enjoy the rest of Consensus. Thanks for joining us at the desk.
Yeah, thanks for having me.
Thanks, Stefano.
That was Stefano Buri, head of US at Virtuals Protocol.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's public keys tracks the money, markets, and moves shaping digital assets.
Hey everyone, welcome back to CoinDesk Live from Consensus 2026. Coinbase just announced a strategic partnership and investment in Centrifuge, naming it a preferred tokenized infrastructure provider. DRWAs will launch on Base, starting with DSPXA, the first fully licensed tokenized S&P 500 exposure asset. Joining us now to dig into what it all means is Baggio Illuminati, CEO of Centrifuge. Hello. Well, thanks for being here. Thanks for joining us. Jesse is co-hosting. He's doing amazing. And we're diving deep into a few projects on Base. So talk to me about this news. Talk to me about DRWAs and DSPXA. Just lay a foundation.
So it's incredible. Jesse, we actually spoke on stage 3 years ago at the RWA Summit.
Yes.
Joined us because we had first launched our products on Base. So it's really great to see the continuity of our relationship, the growth, and the extension of what we've believed to be a great use case for crypto and tokenization and institutional adoption. So the announcement today is that we're joining forces to determine what the future of tokenization looks like. How are we building for this future where we're not just bringing assets on chain, but we're integrating them across DeFi, and we're making them composable, and we're making them usable to improve on-chain capital markets. So Coinbase, of course, the best for distribution. Centrifuge, very good. We like to think the best for tokenization. Joining forces to decide how can we collaborate, how can we build this future where every single asset can come on chain and those assets can be used effectively in on-chain markets.
What does that future look like? When you think about that, what you're building towards, what your milestones are, what is that, and why should our audience care about that? Like if they're thinking, like, I'm interacting with capital markets, it's fine for me today, what benefit does being on chain bring to them?
Yeah, so we want ultimate transparency. We want 24/7 tradability. We want global access for all of these products. And we want a future where every single asset, ETFs and stocks and bonds and real estate, can be available on chain and can move at the speed of the internet. So I can speak a little bit about DRWA. Historically, real world assets have been tokenized and issued on chain, and they just sit there. And that's a great first step. But the biggest unlock has been what happens next, and how can we see the benefits of on-chain and tokenization and implement that into these real-world assets in a way that is institutional grade, that can scale, and that can be something that large investors and partners can get very comfortable with. So we have a DRWA asset, which takes these permission assets and wraps it in a different construct so that it can be integrated into DeFi. What that looks like for DRWA and the launch we just did with Base is available on Euler and curated in a market by ClearStar, available on Morpho and curated by a market by Stakehouse, available with Multiply in their RWA USD stablecoin, available on DEXs to be traded. So it's more than just tokenizing this asset, and it's integrating it into the DeFi economy within Base to really grow adoption and usability and create new primitives where this asset can be held as collateral, can be borrowed against, can be shorted, can be traded 24/7, and can really start to see the power of on-chain in these traditional constructs that finance has been built on.
Yeah, and maybe just to talk about the first asset, the S&P 500 asset. The S&P 500 has been the most liquid asset for 70 years, but it's really only been accessible to people who have access to a certain trading floor and between 9:30 and 4. And now what you guys have built is making it 24/7, 365, plugged into these global capital markets, and then available to basically everyone everywhere. How do you think that changes the story for people who are investing globally? And when do you think tokenization stops becoming just a category and actually just becomes finance?
Yeah, it's been incredible working with the S&P team. We've been working directly with their chief product officer, Cameron, and just understanding their vision of how they want to build for the on-chain future gives further validation that this already is becoming more than just a small category and is becoming a core strategic part of the biggest issuers and asset managers in the world as they're thinking about their strategy for the long term. So when the generational wealth moves to the younger generation who is on-chain native from day one, they will have that expectation that all of the same financial products that their parents can access in traditional markets, they can access from their phone. So it's really great to start building these small steps and iteratively getting towards that future where we can work with these partners and we can determine that strategy together and build for that future collaboratively.
All right, Baji, we got to leave it there. Thanks so much for joining us at the desk, and congratulations on the announcement.
Thank you so much. Thanks for having me.
That was Centrifuge CEO Baji Illuminati. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hey everyone, this is CoinDesk Live. I'm Jen Sanasi, here with my co-host, Base creator Jesse Pollock. The next project has come up in so many conversations I've been having lately. If AI agents are going to pay for data, APIs, compute, content, and service across the internet, they need payment rails built for machines rather than humans. Eric Rappel leads engineering at Coinbase's developer platform and helped create X402, an open protocol for internet-native payments using stablecoins. Eric, welcome to the show.
Excited to be here.
Yeah, thanks. Okay. Thanks for being here with us. For folks who are just learning about X402 right now, lay a quick foundation for us.
X402 is just kind of the way to declare a payment. And so it's blockchain agnostic, it's fiat versus stablecoin agnostic. It works really, it's really meant to like add this missing layer of payment to the internet. And as such, it makes it really easy for agents to pay for stuff because there's now like a deterministic programmatic way to send and receive payments versus it kind of being, you know, there's never been like a standard way of doing payments up until this point. So that's really what X402 has been trying to solve.
And what's the, like, when you were digging in with customers and thinking about the founding of X402, I know there's now a lot of people around the table. How did that come together? And why do you think so many people are backing X402 as the standard for agentic payments?
I think X402, the like problem of, hey, we need to solve payments on the internet has existed since like the 80s. Like Mark Andreessen spent a bunch of time on this in the 80s, and the tech wasn't quite ready, and now I think the big unlock is one, blockchains and stables have gotten really fast and really good, and then two, we now have these like digital native entities and agents that, you know, need a way to pay each other. And I think X402 made a few correct decisions early, but then really kind of like came to be at the right time. Like X402 is not the first attempt to solve the same problem. It's just the right solution for the time we're in.
Yeah, and it does feel like it's the right time. You know, I think in the last two years, Base has gone from, you know, processing a few $1 million of stablecoin volume a month to now processing literally trillions of dollars of stablecoin volume per month. And that's because it's faster and cheaper and easier than it was even just a couple years ago. And you can really do these sub-cent, sub-second payments globally. Where do you think we're going over the next couple years? Like, how much faster is it going to get? How much cheaper is it going to get? And what's the impact going to be on agents globally?
I mean, Shiva, you're gonna have to talk to your team, but I think like we should expect, like I would expect that stablecoin payments track roughly, like look at overall payments, like overall payments volume globally, regardless of payment method. If it's 2 orders of magnitude cheaper and faster and settles instantly, like I suspect payments volumes go up 10x over the next 5-10 years or so, because it enables money to move at the speed of the internet. Like we started producing more data once the internet allowed data to be arbitrarily passed to each other. And so I'd expect the same to be true of money, where we're just probably going to pay each other a lot more.
Yeah, one of the things you got the game where we were
game time.
Game time.
Game time.
One of the things I've heard a lot of hype around over the last couple weeks is actually using cards for agentic payments. What do you think? Underrated, overhyped?
Oh, that's tough. I think I'm actually a.
Right now he has both. Right now he's both overhyped and underrated.
I think crypto people underhype. I think crypto people underrate them, and traditional payments people overrate them. And so, like, I'm a believer of you choose technologies to serve purposes, right? And so it depends on the transaction. Like, if your agent is going to buy, you know, access to an article or like a piece of data, or like help you with like a small value transaction, stablecoins are obviously the right thing to do that with. But then there's other places where, like, if your agent's going to book you a vacation, you probably want to be put on your card at this point, because stablecoins don't yet have like chargebacks and reward points and all these things. And so over time, I think that infrastructure will get built within stablecoins, but right now it's kind of a both. Like, and I think it actually is like, that's one of the goals I had with X402, is allow you to blend the appropriate payment rail for the purchase that the consumer's making. And so you may have something where an agent is using X402 and USDC on Base to pay for, you know, what are the best restaurants in Sicily, and, you know, what is the best walking tour guide, and hey, what is like this famous reviewer who's like posts you know, great content about Sicily, where should I go, to gain the information, and then the last mile transaction of, I'm actually going to go book the flight and the hotel, go on the card. And then over time, maybe that'll shift to be more stables, but you really have to kind of meet people where they're at. And the real thing is like making it so agents have a way of paying and then allowing competition to determine what is the best payment method on the planet.
Yeah, and I think one of the trends we're seeing is that I think we spent a lot of time talking about how do you bring businesses crypto, and now what we're seeing is actually crypto is going to the businesses, and it's replacing things behind the scenes. So for instance, Visa last week announced that you can now settle card payments on Base. And so there, you might be using a card, but then it's getting settled behind the scenes with stablecoins on Base. And then at the same time, I'm talking with entrepreneurs who are building credit cards on Base in smart contracts. And so they're kind of approaching the consumer problem from the other angle. And my guess is what happens over the next few years is that we actually see it all converge so that you have really powerful financial services that are 10x better, 10x more globally available, 10x faster and cheaper, and they're going to be powered by crypto under the hood, but they're just going to work for consumers.
I think that's the key thing, is like, if I often say, I really don't want people to think about X402. Like if 2 years from now, people are still talking about X402, I haven't done my job. All good technology disappears into the background and enables real use cases and real value to consumers. It isn't about the tech, it's about what does the tech let you do that previously wasn't possible.
Eric, thank you so much for joining us at the desk. I know you have a fireside chat tomorrow, I think, so we'll...
Fireside this morning, keynote tomorrow.
Keynote tomorrow.
Yes.
So we'll check that out. Thanks for being with us.
Thanks for having me.
Thanks for being here, Eric.
That was Eric Reppel, the founder of X402 and engineering lead at Coinbase developer platform. We are going to take a quick break. We'll be right back.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live from Consensus Miami, powered by MoonPay. I'm Jen Sanasi. I'm here with Base creator Jesse Pollack and CoinDesk's DeFi reporter Margot Nykirk. Hello.
Hey there.
Jesse and I have just been co-hosting for the past, I think, 3 interviews. And I have to say, I think maybe Jesse and I deserve a show. I think our audition went well. I don't know if you caught it. Did you
I caught the tail end of it, and I was, definitely impressed. So maybe you can have your own show.
You got some good energy.
I know. I think the
chemistry is there.
I think the chemistry is there. All right. Margot, day 1 of Consensus. Talk to us a little bit about what you've been up to and what you're going to get up to over the next 3 days.
Well, Jesse and I are actually speaking together in a few, I don't know, minutes, hours, or something like that. So
2 hours.
That's a little shout out to come watch us on the main stage. We're going to get into everything base. But otherwise, just been walking around. We're just getting started, I feel like. It's always interesting to sort of see who's coming to Consensus this year versus last year. Feels like there's a lot more suits, which I think shows the maturity of the industry or the type of people who are getting involved in the industry.
Every Consensus, there is a percentage more suits.
Yes.
And I kind of dread the day that we get to 100% suits only?
No.
I don't think we're ever going to get there.
Never, right?
Impossible.
One person without
I'm like out here in my athletic clothes.
Okay, good, yeah.
No, we won't do it. But I think it's a sign of the times. I really do think that we're seeing crypto just work its way into the way businesses are run.
Yes.
And so that means that more and more of the people who are on the traditional business side are trying to figure out, okay, how do I use this as technology to make our business be, faster, cheaper to run, more globally available. And to me, that's exciting. I think we have to figure out how do we keep the best of crypto even as that happens, and freedom, privacy, all these things are really, really critical. But I think it's really just a reflection of the fact that crypto's gone mainstream in trading, payments, tokenization, agents, where it's happening right now.
Did you think that this was going to be the way that crypto was going to go mainstream when you got into the industry?
Yeah, I'm a little, I've been here for 13 years.
I know, that's what I'm saying. I feel like you would have imagined a different...
I thought it was going to happen a lot faster. I mean, I thought this was definitely going to happen as well. If I honestly look at it, I think this seems about right.
Okay.
I think that there's obviously incredible innovation happening across every sector of crypto, but for this phase, upgrading financial services and then taking the I think it's like $25 trillion a year business and putting it on chain in a way that just makes it work better for everyday Americans, but everyday people all around the world. I think that is going to be a really good next 5 years, and I think through that work, we're going to learn a lot, and then we're going to set up the 5 years after that.
Are we going to see a lot less people, though, with the introduction of AI and AI sort of driving the industry?
I don't think so. I'm an AI bull. I'm so excited about the intersection of AI and humanity. We one of the things we track on at Coinbase and on the Base team is the number of pull requests or changes that an individual engineer makes. And year over year, in the last 12 months, it's tripled. So the same engineer is shipping 3 times as many things on the Base team. And what that says to me is that when you take really talented people, you give them this incredible new superpower that is AI, and then you cut through the noise and BS and give them the opportunity and ownership to ship, they can do incredible things. And I think that that's only going to accelerate as we see the AI tools get better and better. And I think with crypto serving as this underlying substrate, the future of humanity is bright. We're going to have this incredible superpower of infinite knowledge and infinite capacity. We're going to have this open global financial system, and we're going to put it together, and we're going to have an era of abundance for all of us who get to build in this new world.
That's a perspective I think we don't talk about enough, is AI is an extension of humankind, right? It's just humans getting better. It's not either or. So I think I really like that you brought that up.
Yeah, and it's what it feels like to me on a day-to-day basis. I mean, literally, I will jump into my, as we're on this call, into my 4-agent paying thing, and I will spin up some piece of work that previously would have taken, me asking someone, them doing a few weeks of work, coming back with a report that I have to review, and now it's like, nope, prompt, 30 seconds later, it's pulled all the data from our Google and our Slack and GitHub and given me exactly what I want to know. And that leverage of being able to take something that used to take weeks and require me outsourcing it to another human being, to being able to compress it into minutes and be able to audit it myself right there and then figure out what the next action is, it's literally letting us run the business in a totally different way.
All right, Jesse, Margot, we got to leave it there. It was such a pleasure co-hosting with you.
Awesome.
We got to do it again soon.
Yeah, I'm excited.
Margot,
Thanks for having me.
We'll see you later.
Yes.
All right, we're going to head on over to the main stage now. Ripple CEO Brad Garlinghouse is in conversation with Bullish CEO Tom Farley. Let's take a listen in.
And for those of you who aren't aware, to take the federal government to court and win a final decision. Did anybody see the Knicks beat the Hawks in Game 6? They beat them by like 60 points. That's the kind of ass kicking we're talking about that Ripple gave the SEC, and that was I
appreciate that. Thank you. Thank you. It needed to happen.
And it needed to happen. I won't say more. I'll tell you what I said on my investor call, and I'm curious to get your reaction to it. I'm close to what's going on in Washington as well, and I do think this stablecoin yield portion of the bill was quite important. There's been a compromise that's been reached. I don't love it. I'm sure the big banks don't love it. That probably means it landed in a relatively okay place. But I get the sense our brothers and sisters in the digital asset space are continuing to actively fight almost against this bill just because they can't rally around and say, okay, now's the time let's get it done. Let's finalize the DeFi language. Let's finalize the ethics language. And I think it's time as an industry we kind of shut the hell up in terms of fighting against this bill, and we say, okay, it's time to move. Call our local senator and get this done. I'm curious what your reaction is.
I mean, Tom, you and I are in violent agreement on this. In January, I tweeted out something to the effect of, perfection is the enemy of progress. I agree with you. Do I think the Clarity Act as drafted, it's moved a little bit since January, but do I think it's perfect? Hell no. I challenge you to show me any piece of legislation that we would call perfect. And there's trade-offs and compromises. But I do think clarity is better than chaos. And we have been living, particularly with I think a not well-intended SEC under Gary Gensler, we've been living with chaos, where it's just regulation through enforcement, and you didn't know where they're going to focus their enforcement battle. And as you already pointed out, taking on the federal government, you have an unlimited budget of the federal government to come after you, and a lot of players other than Ripple would have folded. In fact, a story that I don't think is well told is one of the key strategic mistakes the SEC made was picking on Ripple, because we were strong enough to stand up to them. It still took some cojones to do that, but I think they made a bad strategic decision as opposed to building more case law, going after weaker players and getting them to fold, capitulate.
So, Brad, you have built a company that's very innovative and growthy, and you've used inorganic growth, so-called inorganic growth, M&A, to build your portfolio. We too, in our own smaller, more humble way, but exciting way.
By the way, it's not smaller. The largest digital asset acquisition ever is the deal you announced overnight.
That one was bigger. Deal. That was bigger, yeah. Yeah, thanks for
That's why I feel like I should be interviewing you today.
Yeah,
this is your day.
No, I appreciate it. I appreciate it. And I've loved your acquisition strategy. I'll just say it unabashed, in part because I know the protagonist. I know you and respect you and consider you a friend, but so too Mark Ashe of Ripple Prime, so too Renat Variki, who's, depending on the day, one of my best friends, who are the most annoying people in the world to me. We grew up together. But I love it. Can you just give us, I have a couple particular questions. Can you give us a high level? How's the acquisition strategy doing for you?
Yeah. Look, I think Ripple, and I would say now Bullish, has taken a bit of a contrarian view relative to some crypto companies in their acquisition strategy. And I think a lot of crypto companies are buying other crypto companies and staying intra-echo chamber. And I think what I've seen Bullish do, and certainly what Ripple has done, is say, we're going to go outside the echo chamber and accelerate bringing those non-digital asset native companies on chain. And as you know well, and I'll use Ripple Treasury, formerly G Treasury, as the primary example here. They processed or orchestrated about $13 trillion of payments last year.
13 trillion. I had to ask Brad, I said, I want to make sure I heard that right. It's not really 13 trillion of payments.
Now, what's interesting to me isn't just it's a massive number and that's the opportunity, it's that 0% of those payments went through a stablecoin or through a digital asset last year. The opportunity is bringing that over time. And again, the last thing we want to do is for those customers, the American airlines of the world. I mean, these are big, ranging from Fortune 50 to mid-sized companies who are benefiting from a dashboard to manage their liquidity, to manage all of the interactions with bank accounts around the world. That's a great business that's growing, but it is bringing them along the journey gently. So, okay, your American Airlines making a fuel payment into the Peruvian sol. Okay, today that's going to take you 4 days and it's going to cost you this much because there's only one correspondent bank that'll enable that. Tomorrow, it's like, oh, we could just, in a UI, in the interface of G Treasury, now Ripple Treasury, presenting, hey, we can do that in real time at this cost, and having a treasurer who's managing that payment make that trade-off. And it's going to be crawl, then walk, and then run. And those 13 trillion, I'll go out on a limb and say 5 years from now, I'll say 30% of that in 5 years will be on chain in some way. And I think that is the opportunity. I think it's also the opportunity of Equiniti. Like, I think the powerfulness of accelerating adoption by buying the largest, I think, transfer agent out there in terms of real world assets, bringing things on chain, I think it's profound.
It's exactly, so what Brad's talking about is we for any of you who haven't seen it, we announced we're acquiring this business, Equiniti, this morning for $4.5 $4.2 billion. And it's exactly as Brad described. It takes me back when I was a young man.
Welcome back to CoinDesk Live from Consensus Miami. I'm Jen Sanasi, and joining me now is CoinDesk reporter Margot Nykirk and Will Foxley, co-founder of Blockspace Media. Before we took a break to go to the main stage, Margot and I said every time we come to Consensus, more and more people are wearing suits. I said I dread the day when I come here and it's 100% suits. And here we have folks, Will Foxley in a suit. Who thought we would have ever seen the day?
I know, I was supposed to be the crypto bro.
Yeah.
I've grown, I've matured.
What's going on? So, talk to us about your suit as a metaphor for where we are.
I think it's more of a personal journey rather than like necessarily something to do with Consensus. There's plenty of people in t-shirts here. There are more suits year over year, for sure.
Right.
Yeah.
Yeah, it's
certainly
a sign of the times.
Sign of the times.
Signal of maturity.
Yeah, tokenized stocks, stable coins, no more NFTs. Like, it's getting boring out here.
The road to boring.
Yeah.
If we were going to do a little throwback to the hash.
Yes. Yes.
Road to boring.
Forgot about that.
You forgot about it.
Yeah, I did.
Well, that's
lots happened since then.
A lot has happened since then, but that is a glorious memory in my mind. All right, well, Margot and I have caught up. Day one of Consensus. We got 2 more days ahead of us. What are you looking forward to? What are you going to be getting up to?
Tomorrow we have a Bitcoin stage, so I'm really excited for that. Bitcoin Summit. I don't know where it is in this venue because like a few of the stages change over the evening. But Colin on my team with Blockspace, we have programmed a bunch of things for Consensus, and we're super excited about that. We're going to have a lot of conversations around things that are old and dead, like Bitcoin L2s. Is there a chance for those to come back? Will they compete again with some of the other chains? And then more of like the TradFi stuff, of course, because Bitcoin is now just a digital asset on BlackRock's balance sheet as opposed to the cypherpunk dream we used to have. So we'll be talking about that on the Bitcoin Summit stage tomorrow. Very excited for that. And then I think in general, just like all the little side conversations you get at Consensus, always huge. See an old friend, that's always nice.
That's always my favorite when people are looking forward to seeing me, the old friend.
Yes.
That's the Bitcoin side of thing. Margot, I know we talked about like the events you're going to get up to, but what kind of conversations are you going to be having? What kind of reporting are you going to be doing?
Yeah, well, Solana Accelerate is also happening today. I feel like there's a lot of conversations happening around the Solana ecosystem. Obviously, Ethereum is also very much still part of the conversation. And, you know, I find AI consistently every year. There's a little bit more of AI, especially around payments this time and what that sort of means for what the future of crypto looks like. So I think that's sort of what I will be focusing on over the next 3 days.
More AI, more
chatbot?
To my chatbot?
That's like your plan?
Yeah, well, I will be conversing with my chatbot and also with other people about their chatbots and the whole spectrum of all of that.
Gotcha.
More AI, more suits. I think at every Consensus for at least the past 2 or 3, we've had a robot at the conference.
Right.
So I look forward to maybe seeing a robot.
One again.
Yeah. Last time I was told the robot could flip, but he just ducked and rolled. Made me look a little silly on TV. But
still pretty cool.
Yeah, I know. But
can you
that's
duck and roll?
Flip. I sure can.
Okay. Flip?
I sure can.
Okay, you're more impressive than a robot.
Well, there you go. You heard it here first. I am more impressive than a robot. All right, we got 3 days of programming coming up. This is day 1 of Consensus 2026 coming to you from Miami. We're going to take a little break. When we come back, Joe Lubin joins us.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
He co-founded Ethereum before most people had heard of a smart contract, built Consensus into the largest Ethereum development company, and is now warning that centralized AI is in the hands of a few big tech firms, and it could become a weapon of mass manipulation. Please welcome the founder and CEO of Consensus and co-founder of Ethereum, Joe Lubin. Hey, Joe.
Thanks, Jen. How are you?
I'm doing well. Thanks for joining us here at the desk. It is always a pleasure.
Thanks for having me.
Of course. Now, you heard my intro. We were talking about AI before you joined us on the desk. Talk to me about what made you feel it necessary to discuss this publicly. What are you watching right now as it pertains to AI?
Well, everybody is discussing AI all the time, I think. And I think I started talking about big tech a while ago, before everybody started talking about AI, and just pointed out that big tech has done so many great things for the world, globalized the world in healthy ways, enabled democratic access to information, but also big tech embraced AI early on, and big tech used it to essentially learn more about ourselves than we actually knew about ourselves consciously. And big tech has, in addition to doing those great things, has been very exploitative, and ultimately has, by driving polarity in discussions and addicting people to the technology, to doom scrolling, etc. Big tech has contributed, amongst some other economic forces and geopolitical forces, to the shredding of the social fabric on the planet. So is that what you were talking about?
Well, I mean, what a way to start
Shredding.
the interview. What a way to start the interview. I mean, okay, so you've laid that foundation for us.
Yes.
Where do we go from here?
Right. So the good thing is that we have decentralized protocols and democratic access to machine intelligence. So with these decentralized protocols, with wallets like our own MetaMask that are moving to become new kinds of neobanks, essentially a full financial service neobank that you own and control. You can walk around with it in your pocket. People, communities are going to have increased agency, financial, economic, social, political agency in their lives. No longer are you going to have to ask for permission to get your money out of a bank or to invest in certain projects. There'll also be some permissions in certain nation states. So we have this new self-custody, permissionless innovation, permissionless access infrastructure, and we certainly have big tech and big AI continuing to build the sort of giant machine intelligent brain trust for the planet, and I think that's great, because it's a wicked competition now to build great foundational models to move beyond just large language models to spatial models, etc. But we also have this decentralization movement, and so there are lots of ways to decentralize training, to decentralize inference. Most important to me is that people have control over their interface to the World Wide Web, over their interface to the world, over their interface to AI. And so taking the word agency and turning into agentic, we're going to have these agents that are digital twins of us, that know us intimately, that can do our bidding, and we're going to have access to the sum total knowledge of human civilization, best practices, wisdom, etc. Everybody is going to be able to level themselves up in real time on what they need to know and do. And so if you combine increased agency for people in communities with, oh my God, me and my agents can do anything. I can start a company of one person or 5 people and many agents. And so I think we're moving into, it's going to be complicated getting there, but I think we're probably moving into something that could evolve into a golden age for people.
I wanted to ask, you mentioned MetaMask. switching into kind of a neobank phase, and we're seeing this increasing trend of neobanks in the crypto industry. How do you think about MetaMask differentiating itself from a growing, crowded market?
Yeah, so in a couple of different ways. MetaMask has just giant distribution, and so we're bringing all sorts of financial primitives, perps, equity perps, prediction markets, etc. We have a rewards program. A lot of great projects are interested in our distribution, and so we'll make tokens and other sorts of value elements available to us and to our users. But it's really about people being able to make their own choices. The decentralized protocol world is probably going to spawn so many more vaults that enable different kinds of financial strategies to be encased, automated, semi-automated in these vaults. I expect that MetaMask and just vaults in general are going to proliferate so much so that the number of ETFs and mutual funds in the world will be dwarfed pretty soon by these vaults that can sort of emerge in real time and be accessible globally.
Mm-hmm. I'm going to go over to DeFi really quickly. So how does this AI agent landscape play out with DeFi protocols? We've obviously had a lot of hacks the last month, and that's been unfortunate, but seemingly there's more on the horizon even for TradFi institutions that have tons of history of security best practices. Is it going to become more of a Wild West the next 12 to 18 months, or do you see like something on the horizon to be able to protect DeFi apps, maybe play more defensive than offensive?
Yeah. So first, the obvious ways that that protocols are impacting AI on decentralized rails is X402. So it's the hybrid human-machine economy paying each other in these tokens, because that's going to be much easier to interact with different services, AI services and other services, and for machines to collaborate with each other and pay each other. And it's going to get real economic soon because it's getting so expensive, and so we're going to have to make sure we make it affordable. 8004, ERC 8004 is a registry system to enable people to register machine intelligences or machine intelligence to register themselves and share what their characteristics are, but also provide feedback onto those things. In terms of, is this going to be crazy Wild West? It has been crazy Wild West for the first 10 or so years, but we're actually moving into a world where machine intelligence is going to enable us to clean up all the bugs in traditional software. It's going to do the heavy lifting to formally verify decentralized protocols, and we're going to take the 15 or so years of innovation, like breakthrough disruptive technology innovation of our technology, and we're going to marry it to the 400 years of innovation of traditional finance, because they pioneered everything up to a certain point, and the kinds of rigor that we are hearing about that they can bring to our technology, and that we can help increase in traditional finance technology as we bring private permissioned and layer 2 and layer 1 systems to TradFi. It's going to be a great world of finance when the next merge happens.
I want to follow up on what you were saying on big tech, right? With the institutionalization of crypto, it feels like we're getting a little bit more centralized, right? With the launch of permissioned chains, it feels like there's a little bit more centralization. Do we run the risk in this industry of enabling some of the same types of issues we've seen in the past? Like, are we maybe at risk of recreating some of the issues that we're trying to solve?
So yeah, at certain layers of the stack, that can happen. So the base layer needs to be rigorously decentralized. Ethereum and Bitcoin are really the only two that are sufficiently rigorously decentralized so that they are credibly neutral and censorship resistant. And the traditional finance actors love that about the technology. They love the modularity. They love the increasingly composable, scalability, reliability, security of the Ethereum technology in particular. And so as long as we have this rigorously decentralized trust layer at layer one, and then layer twos can be modular and differentiate themselves in different ways, and they can inherit the security guarantee from layer one. And then corpo chains make a lot of sense. It makes sense that Stripe wanted to control, they wanted a token, but they also wanted to control execution in their platform. I like the decision Robinhood made. I think that was really smart. And so we're going to see lots of corpo chains. It's going to be increasingly clear that the best way to do a corpo chain is to do a layer two. A, because you get cheaper, much more rigorous security. B, you're going to get full scalability. C, we're moving into a world of synchronous composability, where we're going to have, and the Ethereum Economic Zone project is doing that. We're doing that in a couple of different ways at Consensus. And so we've achieved scalability, we gave up composability, we introduced fragmentation, and we're converging now. So synchronous composability means that we're going to have execution zones that span different layer twos as collaboration zones, and will be available so that a block in layer one or a block in layer two can speak in the same block to different smart contracts on different networks. So it's all a result of real-time proving, and so the holy grail of real-time proving and synchronous composability is just about here, and it doesn't even require hard fork.
All right, Joe, we're going to have to leave it there. Thanks so much for joining us at the desk.
Cool. Thanks, Joe.
Thank you.
That was Joe Lubin, founder and CEO of Consensus.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Welcome back to CoinDesk Live from Consensus 2026. Our next guest invented Hashcash, helped shape Bitcoin before it was worth anything, and now runs Blockstream. He also happens to be back in the spotlight after a New York Times investigation suggested that he could be Satoshi Nakamoto, which he flatly denies. I'm just going to say that before we introduce him in. Joining us now is Adam Back, co-founder and CEO of Blockstream. Hello, Adam.
Hello.
All right, you deny the New York Times allegations. All right?
Right.
And so I'm not going to ask you if you are Satoshi, but I am going to ask you how you navigate this, because this isn't the first time we've heard this theory, and what you think this conversation keeps popping up.
Well, I mean, it's part of Bitcoin's mythology and history, so of course everybody's kind of curious and fascinated. It's a very novel and unique situation that, you know, you have this immensely valuable discovery for humanity and nobody knows who did it, right? And so in a way, like a big startup exit with an anonymous participant, right? So No, I think in practice it's actually beneficial for Bitcoin that we never know who it is, and it seems likely that that will be the outcome because I think Satoshi stopped participating on the forums in 2011, so a couple of years after Bitcoin launched. And so, lots of people have looked at all the information they could find online, all of the writing, and not really come up with anything conclusive, just kind of circumstantial guesswork about people who are working on Bitcoin-like things before, or developers, or mathematicians, and so on. So it's kind of the status quo, and of course, it's a fascinating topic, so it keeps coming up. There was the HBO documentary last year, which was, quite a good educational tool, did a good job of explaining things, and John Carreyrou, did quite some research in reading some of the old cryptography list posts, and actually maybe spotted a few new kind of historic connections to Bitcoin, like early ideas that relate to Bitcoin.
Totally. So we have that conversation, the Satoshi Nakamoto stuff. I personally think there's a lot more interesting things happening in Bitcoin right now. So I'm gonna toss the ball to you. We had some really important announcements last week at another Bitcoin conference. One of them being that there's going to be a possible merger between Tether 21 and then a Bitcoin mining company called Electron. What's your take on that merger, Tether going public possibly, and then what's your take on the larger scheme of these Bitcoin treasury companies? Pro, fan of them, how do you think about them going to the rest of the year of 2026?
Yeah, I've been investing on a personal basis in MicroStrategy quite early on, and then I knew actually Batara Eto, who was the guy that got the Metaplanet company into Bitcoin when it started as a hotel company. So they're interesting things to trade from a Bitcoin basis trade, effectively, a kind of swing trade versus Bitcoin. So I'm quite a fan of that, and I do think, why I invested in MicroStrategy was that I thought he was doing a very interesting thing, Michael Saylor there, when he was CEO, to try to introduce Bitcoin into the capital markets, into public companies. And so one way to support him is if lots of Bitcoiners bought, a bit of his shares, it's much smaller than Bitcoin. So if some of the fiat investors left, the Bitcoiners could support his mission. And I think that's generally happened. Presumably most of the shareholders at this point are Bitcoin interested. So I think there are sort of benefits of public markets. And then of course there are different treasury companies in different jurisdictions, often some local tax advantage in Japan or in Paris, with capital B or H100 in Sweden. So you have that phenomena, and then there are different flavors, right? So BSTR, which I'm the CEO of, which is waiting regulator approval, is focused on active management of Bitcoin, where evidently 21 had been signaling that they were intending to do, M&A, and so they have actually proposed, I guess these haven't happened yet, but they've announced that they'll merge with Strike and then with Electra, this big privately owned mining company. I don't think they actually talked about Tether being part of it, but the mining company, which Tether is simply the majority stakeholder in. So I think it'd be interesting. It's a kind of hybrid between a public mining company, of which there are many, and they do tend to suffer a bit of volatility, but a hybrid could be interesting to see.
I wanted to ask, though, about the Satoshi obsession. I typically cover Ethereum, so I'm fascinated by this conversation from sort of an outsider perspective, mainly because, Vitalik is at the top of basically the Ethereum ecosystem, and I'm wondering, from someone who's basically spent, the entire of Bitcoin's existence in the core circle, why you think people from the outside are so obsessed with uncovering Satoshi's identity, and whether that's helpful or not for the Bitcoin community?
Well, I think it's a fascinating part of Bitcoin's history, and so this kind of mythology at this point that people are curious about, and so, there's a book called Atlas Shrugged, and in the book there's a phrase people use, who is John Galt? And that's actually the person, but most people don't know who it is. And so it just became a kind of rhetorical question, like in Game of Thrones, winter is coming, who is John Galt, who is Satoshi Nakamoto? So I think it's becoming effectively a rhetorical question at this point, but of course it is interesting, right? And so everybody has their theories, or who it could or couldn't be, or why, and it's actually a very specialist question because it involves a lot of esoteric areas of technology.
Sure.
So it's quite a mystery, effectively, yeah.
And it is for sure not you.
That's correct.
Do you know who it is?
No, I don't.
All right, Adam.
What if just on this stage right now we figured it all out?
We'll never know.
Yeah, I mean, people also ask, if you knew, would you say it? And I think most people you can see in the community discussion clearly don't want it to be known.
Yeah.
As well, right? So there is an element of, if you know, you'd probably try and be quiet about it. But as far as I can tell, nobody knows.
All right, well, we're reading between the lines there. I want to talk about your Bitcoin outlook. I know that you've maintained that Bitcoin will hit $1 million before the 2028 halving. Talk to us about what goes into that.
Well, I mean, it's more of a proposition bet, but so we'll see if it happens. So it's a bit of a fun bet. Another bet that I did with the same fellow, which is Vikingo on Twitter, is that Bitcoin could hit parity with gold in the same time frame. Now, this bet was made last year, and gold has gone up an awful lot. So
that's a little tough.
Going against me, but we'll see if we get there. And I think people forget that in the last halving period, there were two tops, 69 and 64,000, and then at the tail end, another one at 73.5, right? So, and of course we had a bit of a pullback, but Bitcoin is up quite a bit in the last few weeks now. So we're like 81.5 or something now. So we'll see, but I think that there was some tactical selling. Some of the miners, kind of pivoted to AI. I think ultimately that's fine. It should, in my view, bring the sort of arbitrage, the profitability between the AI workload and the Bitcoin workload. So effectively make the miners who stay the course more profitable. And I think ultimately people can only sell once. So the people that have sold, the number of coins that are left on exchange is diminishing. So at some point we'll see a pickup. But of course, short-term Bitcoin is quite unpredictable.
So Jonas Nick heads your research department at Blockstream, and he's recently proposed a few different ideas for how to quantum-proof Bitcoin, which obviously is top of mind right now with some of the projections from Cloudflare and other companies about what's going to happen with quantum in the next 5 to 10 years. What's your perspective from Blockstream specifically on any research or BIPs proposed to quantum-proof Bitcoin in the next 2 to 3 years?
Yes, I mean, we focused on the signature technology. Our research team was a major contributor in the Taproot and Schnorr signature work and Musig. So we have a strong kind of applied cryptography team. That's my background also, so that probably relates that you hire people with similar skill sets, but they have been working on the post-quantum topic for over a year now, and released a few papers, and most recently this pair of proposals, shrinks particularly, which makes optimizes actually it's a sort of similar to the NIST standard, SLHDSA, which came out I think October 2024, the first NIST standard for hash-based post-quantum signatures. We think that is the most conservative choice because it's all based on a 1979 paper, so it's withstood many decades of analysis, where many of the newer schemes are a bit novel or new. Many of the proposals to NIST during the design competition actually got broken classically, so you have to be careful to not rush very new things into Bitcoin, because there's nothing worse than trying to protect against quantum computing and then making it insecure against regular computing or just against mathematical analysis effectively. So I think post-quantum is the way to do that with the hash-based signatures. The shrinks proposal reduces the size so that it's less of a burden. And then I think the last bit of the formula is to introduce it in a way that's kind of an optional spend. So you can be ready, quantum ready, while continuing to spend with Schnorr signatures today, but have a kind of hidden optional way to spend using shrinks or something like that in the future, if and when it becomes necessary. And another benefit of that is, people are not paying for expensive signatures today, which might impede adoption. And if it's done with a format that's distinguishable, then we should get an indication of the adoption level. How many Bitcoins are quantum ready, let's say. So I think that's the constructive thing. Otherwise, people get stuck in like predictions of how long it's going to be until quantum computers become relevant. Like where they can do a calculation that starts to be interesting and relevant for cryptography today.
I've had guests come on my show and say all the people who are worried about quantum and Bitcoin are focused on the wrong thing, because quantum is actually going to probably break the traditional financial system before it breaks Bitcoin. Curious what your response is to that.
Well, I mean, it's true that a lot of things would need upgrading, but ultimately, traditional finance is based on trust. And so they have a database behind their firewall. So long as they have good backups of the database, they can repair it and undo things. Bitcoin has no undo, it's a bearer asset. So I think Bitcoin's reliance on cryptography is another level because it's bearer, and final. So, yeah, I mean, I think it's, whatever the time frame, I think Bitcoin has plenty of time to, integrate quantum-ready tech. The post-quantum signature is still an active area of research, so you can expect in the next decade maybe some improved quantum signatures, but Bitcoin can start with readiness with some of these hash-based signatures and then possibly add another one down the road. So it may be that actually the hash-based signatures never get used, they're just there for readiness and something more efficient gets added, down the line.
All right, Adam, we are going to have to leave it there. Thanks so much for joining us at the desk, and we hope you enjoy the rest of Consensus 2026.
Thank you.
CEO and co-founder of Blockstream. We're going to take a quick break. We'll be right back. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to our program. This is CoinDesk Live coming to you from Consensus Miami. I'm Jen Sanasti here with Will Foxley, who's been with us for just about the past hour. Will, we've so far talked about your outfit. We've talked about AI, but you are really embedded in the Bitcoin ecosystem. We just spoke to Adam, but curious from a Bitcoin perspective, what you're watching, what's getting you really excited. You mentioned that 21 Capital merger potential merger that we heard about at the Bitcoin conference. What are you watching?
I'm watching Public Keys, your new show.
Woo!
Let's go. No, what am I watching right now? I mean, I think the quantum debate is something I wanted to bring up with Adam specifically, because there's this whole conversation out there, the New York Times and elsewhere, it was HBO last year, who is Satoshi Nakamoto, who created Bitcoin, who has this few $billion stash of Bitcoin, or however much it is now. It's a huge amount of money, it's a huge honeypot for the ecosystem, and it's a risk for the network. Always will be a risk for the network until we totally know what's going to happen with those. Even if we do think like Satoshi is no longer with us, or perhaps somehow lost the keys, there's still a risk unless you have a definitive knowledge about that, and we won't ever have that. So I think for Adam, it's probably unfortunate that he will always be asked that question forever and ever. It's just like how it's going to be for him.
I don't think he minds.
I think it's good from like a public CEO standpoint, right? Because like there's always a soundbite. You can always get onto a big network and talk about that. And you know they have a public company that he's the face of, and then Blockstream also is like pretty important player in the Bitcoin ecosystem. So that end, it doesn't hurt. On the quantum side, I do think it's interesting that he is so interested in the quantum debate, and Blockstream is funding a lot of the research for understanding what's going to happen next for Bitcoin. If quantum comes, if a quantum computer pops up next few years. I mean, I would disagree with that guest you were talking about.
A few guests have said that to me.
I think that's like the uninformed opinion on it, honestly, which is unfortunate. It's like the TradFi system will have backups. There will be problems for sure, but there's going to be problems with everything. But Bitcoin is that honeypot because it's one thing that researchers are going to optimize for. We're already seeing that with some of the research out of Google and some of the applied quantum labs in California. It's like, hey, we're going to work on Bitcoin first because it's just sitting there. It's like this big stash of money behind this wall. If we can figure out how to scale the wall and get back out again, then we're fine. So those are like the interesting tidbits happening in the Bitcoin ecosystem. A lot of other boring stuff that you've never really enjoyed talking with me about, so I won't bring it up.
Maybe things have changed. Maybe I've grown.
You've grown?
Maybe. I've grown.
Sure. I'm wearing a suit now,
I know. You're wearing a suit.
Yeah.
The last thing I want to ask you about is if we were to marry the conversation of quantum and the idea of Satoshi, is this proposal to hard fork Bitcoins, like what happens to Satoshi's coins? There's a big debate happening about that right now within the industry that has spilled over onto social media. What side of that debate do you sit on?
Everything spills to social media, especially topics involving money and anger. So that's the perfect little nexus for us. It's hard to know. I mean, I think that's been a conversation that's been stirred up more so the last 12 months. I think this whole quantum debate would be less interesting if there wasn't Satoshi's coin sitting there as like the first thing to crack. I mean, there's like a few things within like cracking Bitcoin with quantum. It's like you could crack the mining itself, you could crack some old forms of different addresses, which would be Satoshi's, and there's a few other things that you could also kind of break. The easiest ones are those early public keys that people have the knowledge of, the Patoshi keys, if you will. That's what they're kind of known as. And yeah, I think that like it's kind of a catch-22. You don't want to like ruin one of the values of Bitcoin, but you also don't want to let whoever gets this market dump a huge amount of Bitcoin on the market and crash all our bags. That would also be unfortunate. So.
Yeah. All right, we will dig more into that as the program continues, but I think it's now time to get to our next guest. Robinhood built its brand by letting retail investors trade stocks for free, and now it's building its own blockchain and tokenizing assets that most global investors could never access before. Joining us now is the SVP and General Manager of Crypto and International at Robinhood, Johan Kurbat. Hey, Johan.
Hey, how have you been?
Yeah, I've been good. It feels like it's already been a long conference, but we're just at the beginning of day one. We're just starting. When you were with us at Consensus Hong Kong, that's when we first heard about Robinhood launching its own layer 2. Talk to us about the progress that you've made since then.
Yeah, so we launched a testnet then, and we have more than 100 million transactions now. So really, we've seen a lot of demand from developers and people excited to build on a chain that is going to be integrated within the entire Robinhood ecosystem. And the mainnet is coming soon. So once it's live, we'll be able to see a lot more of the features that we are preparing for everybody.
How are you seeing user behavior within those analytics you just mentioned? When you launch a new network, a lot of times it's just like test transactions or things like that. So are you identifying anything early with this group versus like your already very large user base that uses like the more traditional parts of the app?
Yeah, right now it's mostly, like you said, test transaction, but we're also seeing a lot of developer. We saw perpetual DEXs being built, normal DEX, AMM. We saw also some fun games and NFTs platforms. So, a bit like whatever you see on every platform. I think what has been really interesting is to see how people are using it for financial instruments. So you can use our stock tokens in the testnet, and you can see a lot of people starting to build. And I think that's really the interesting part. It's not just about doing transactions like on any other blockchain, but being able to use equities and US stocks and ETFs to build a new set of tools for the future.
You're going to be on stage later today. This session's called The Future of Global Portfolios. Just let us into your brain. Talk to us about that future you're working towards. What's going to change when we're looking at portfolio management?
Yeah, if you think about it, there is the US where a lot of customers already own equities and they're able to access the market very easily with opening an account on Robinhood. But if you think about a lot of the places of the world, it's still very complicated to access the markets, either the local market or even the US market. And so we think we can level the playing field for all these customers, no matter where they are, and being able to access our tokenized product will allow them to really contribute to the economy and get access to a new financial system that so far was not accessible for them. So as long as you have a phone, as long as you have an internet connection, you will be able to really contribute to the economy and really build for the future. Because for a lot of these customers, they are not able to plan for their retirement, they're not able to plan for how to hedge against their government or whatever policy is being put in place. So we think that tokenization is really a tool for them to access any markets, any economy, private equity, maybe real estate, maybe more. And so that's what we're going to talk today.
So I want to go to some of the DeFi hacks, which is kind of like an odd angle to take this conversation. But I think it is interesting just to kind of look at what's happening with the DeFi landscape, which I would say is like the tokenization 1.0, right? We had like these assets, some of them were kind of like make-believe, they didn't really have a value. Some were governance tokens, some were tokens that gave you yield based on like the protocol's revenue or whatnot, or we're increasingly seeing that. We're seeing that there's been a lot of hacks over the last 6 months, which pretty devastating ones. As major institutions like NYSE, NASDAQ, yourself are looking at tokenizing stocks, how do you guys think about that risk parameters and like those risks that have happened on chain for assets that don't really have like a stock bearer asset tied to them or don't really have like a fundamental value tied to them, but they do with you guys because they're tied to a company or they're tied to a real entity that's producing revenue?
Yeah, it's one of our top concerns. So any product that we launch, goes through multiple audit, multiple security, pen tests, like all these kind of things, red team test. For us, it's not about just being first and launching a product as soon as possible, like some of our competitors. It's more about when we are putting it in the hands of 27 million customers, we want to make sure that it's ready for prime time, right? So that is why sometimes we've launched features a bit slower than others. But we feel pretty confident about what we've been building with the Robinhood chain, and we really think that we can find new ways to get people into the economy and the system. But obviously, all these hacks are detrimental, I think, for the industry. I think we are losing credibility with the rest of the public and the customer base, and so it's important for us to also try to gain that back and make sure that everybody is putting enough time to build the right proper tools and security.
I mean, you just said it, right? Finding new ways to get people into the ecosystem. Is your bet that tokenized real-world assets and tokenized equities will bring that retail crowd back that has been gone for the last little while? I know we heard Robinhood's earnings report, crypto revenue down 47%. Is the thought that tokenized equities and access to these more tokenized TradFi products will bring retail back into the fold?
I think it's part of it. We think there is a need for real utility in the space before people just come back. I don't think the strategy of last year for listing tens of thousands of tokens on some of these dexes can keep going. There was a lot of bots, there was a lot of trading activity that was not natural and made by customers. And so I think what you see on the market in the past year is just a result of maybe a bit of fatigue from the customers. And so for us, our focus has been in the past 6 or 7 months to not just build crypto product, but also bring utility on the crypto rails. And that's what we're doing with tokenized assets. We think we can use crypto rails to rebuild some of the brokerage traditional system and actually improve it by offering 24/7 instant transfer, instant settlement, fractionalization by default. All of this actually bring value to the economy and to the system that people are going to use. And I think because of that, people are going to start using it more.
Okay, this might be a kind of off-the-wall question that's not that intelligent.
Will just keeps coming with the off-the-wall question.
I know, but I'm thinking like Robinhood, the way that Robinhood got popular was like not only that you had access on your iOS device really easily, but there's no fees, right? It was like, there's no fees. But with crypto, like there's always a fee. So how do you guys think about on the tokenized side with these things that you just bury into it, or like you're controlling your own chain so you don't have to think about that? And then how do you like kind of communicate that to the public when you're competing against other networks that are also going to have tokenized stocks?
Right, so fees for us has always been very clear. Like either on the crypto side, we have two systems, one where we charge clearly a fee and it's very much displayed on the page. The other one where we get a rebate from our market maker, we also show it on the page. So the customer can see the spread, they can see how much Robinhood is making from it. And I think that was always very important because in this space, you have a lot of ways to generate revenue. You can pass it on the spread, you can charge a markup. There is so many ways that we felt customers were not able to compare in a fair way between the different platforms. So we've been a pretty big advocate of transparency. And same thing for our tokenized product. When you will use one of our products to buy them or sell them, there will be a fee, we'll show it to you. Currently it's available already in the EU. We have 2,000 stock tokens available. And we don't charge any fee there, we only charge a FX fee when you go from euro to dollar. So, it's something that I think everyone can follow. The goal is really transparency because as a customer, if you have a doubt, then you're not really excited to use the product.
Totally.
All right, we got 1 minute left. I think I ask you this every consensus, but we're here at day one. Talk to us about what you're looking forward to throughout the rest of consensus. Is it being here, making deals, interacting with the firms that are here on the showroom floor? Is it the side events? What are you getting up to?
There's a lot here, to be honest. I think Hong Kong was already busy, but this one is, I think, even more busy. What we're excited about is, I think there's a lot of discussion around the Clarity Act, especially after this weekend and all the discussion around the yield. There's also a lot of discussion around perps and the CFTC. So we're excited to see what's going to happen there because there are products that people want to use, and so we want to bring them in the US as well.
If the Clarity, just tell me a little bit more about that. The Clarity Act passes, what are some of those products that you're thinking about bringing to market?
For us, it will just mean that we have one regulatory framework for the entire country, which I think will simplify a bit the type of products that our customer can access. Right now, for example, staking is not available in 4 states in the US. So we get a lot of frustrated customers for that, and I understand them. So, for us, having a clear rules book will allow us to really unify what we offer to our customer here in the US.
Johan, thanks so much for joining the desk. I hope you enjoy the rest of the conference.
Thank you. Good to see you guys.
That was Robinhood's SVP and General Manager of Crypto, Johan Kerbrat. Thank you. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Bob Diamond spent decades at the top of global banking, building Barclays into one of the world's most powerful investment banks. Now he's made a full pivot to crypto. He's chair of Hyperliquid Strategies, a NASDAQ-listed company that holds the Hype token as its primary asset, and he's been betting that all of traditional finance will eventually move on-chain. Bob, welcome to the show.
Jen, it's great to be here. Will, nice to meet you.
Yeah, great to meet you in person. Every time we've spoken, it's been over video chat. But before we dig in to the Hype ecosystem, what's your experience at Consensus been like so far?
Well, I've got to tell you, there was a mob downstairs. I thought I was going into an airport during the long TSA lines. What a great testament for Miami. What a great testament for crypto. What a great testament for Consensus and CoinDesk. So, an unbelievably excited crowd down there getting registered since early in the morning, and I think it augurs well for the next couple of days. I have to say, first time I've come to the Miami event, and I'm really, really glad I did, so thank you for the invitation.
Well, thanks for being here. One of the major themes we've been talking about at the desk is the intersection between TradFi and crypto. We've been talking about the amount of suits growing every year at Consensus. You come from the TradFi world.
You're only halfway there, Will. You haven't got the
I know.
He's getting there.
Keep a little independence still.
He's getting there.
Still a Bitcoin bro at heart.
If you think back to your banking days, I mean, like, when was the point that crypto really started to make sense for you?
You know, for us, it was around Circle and stablecoins. And it was in 2020 and 2021 when there was kind of the SPAC craze. So like everyone else, every other investor in financial services, we issued a SPAC and had a long period of discussions and negotiations with a number of firms. And there were 4 or 5 people looking to work with Circle. And that was the beginning of a very, very fruitful relationship. It was, Jeremy Allaire was very, very thoughtful, helpful, did he want to go public, but the whole way he approached, you know, his view of Bitcoin. You know, for someone from a TradFi background, I really understood the store of wealth and why this made sense. But far more importantly, blockchain. And in my relationship with Larry Fink, my relationship with Jamie Dimon at JP Morgan, and the times I was at Barclays, we had all been talking about the potential for blockchain. And that really came to life. I think the last piece, which was, are we going to have a institutional digital version of the dollar? Of course we are. Like, that was not hard to get to. And we also knew, we worked closely with Eric Rosengren, who was the president of the Boston Fed, and he was responsible for the white paper for the Fed in terms of should there be a central bank digital currency in the US. And it's clearly not going to happen in the US. I mean, even the Fed wire is not, you know, developed by the regulators. It was developed by the private sector and then highly, highly regulated by the regulators. So exactly the way the Fed has approached this, which is to allow the private actors to develop the technology, blockchain, to develop the digital version of the currency, USDC, to do exactly what Jeremy and the team did, which is to become the most regulated, the safest, the most pure, you know, a dollar behind everything. That was our education. And I think the only thing that we have invested in since then is Hyperliquid. And it was really the same kind of analysis, which is the layer 1 blockchain. Can it truly house finance? You know, what's the capability of it? And not just the native token and other cryptos trading on the exchange, but the opportunity to bring other assets, particularly real world assets, on chain. And it's been an unbelievable journey in the year since we've been working on this. And I guess it's about 6 months that our public company has been listed. The outperformance of the hype token versus their competitors and versus the decline in Bitcoin has just been astounding. So we're very, very happy with where we are, but we got a lot of work ahead of us.
Speak to it a little bit more on the hype ecosystem. What differentiates it from all the other treasury assets that we did see pop up over the last 12 months?
You know, we did a back of the envelope analysis, but it's not really hard to do. Of all of the most profitable private companies in the world in terms of revenues and profits per employee, and there's no one that competes with Hyperliquid. I mean, the people that do are the NVIDIAs of the world. So 967 million, I think, was the number in revenue last year in 2025. 97, 98, 99% of that was used to acquire the native token hype. That says it all. Yeah. And I think what Jeff Lowe and Sophia and the team have been doing in the, I guess it's, I used to say 3 years that they've been working on this, it's almost 4 now, has really developed not just an incredible layer 1 blockchain that can house finance, but an incredible ecosystem. We're just one part of it. I was in Washington last week with Jake Chervinsky and his team, Adam, who just joined the team, in the halls of Congress and meeting with senators and meeting with House of Representatives around the regulation coming. And, you know, we had some pretty good news of that just today, I guess, or yesterday. Hyperliquid, which was a year ago, I had to figure out what it was, but anyone I talked to said, what is Hyperliquid? Today, you sit with senators, you sit with Congress people, and they know all about Hyperliquid, what's happening with decentralized exchange, real world assets. Like, you have that conversation about the potential that real world assets like gold and oil can someday trade on chain, and they're already doing it. And they're already doing it at a time, during the conflict in Iran, where Friday nights, Saturday, Sunday, Tuesday at midnight, airlines need to be able to hedge out their risk in energy prices. Miners need to hedge out their risk. So it's not just investors, it's real companies in the US and around the world that are using the facilities of Hyperliquid to be able to manage their risk in times where previously they were not able to.
Arthur Hayes was on the desk this morning. He said he has a $150 price target for Hype. You've probably seen that in the headlines before. It's not a new price target. What do you think of that? What's your outlook for Hype?
Listen, our outlook is quite positive. Again, the outperformance since the beginning of this year, I guess our public listing started in December, and since the beginning of the year, we're about double the price. I would love to think 150 is the target. I don't look that far out. Incrementally HIP-3 really took hold, and people understood what happens when silver is traded 24/7, when NASDAQ futures are traded 24/7, when pre-IPOs are traded 24/7, when oil is traded 24/7. And now with HIP-4 and the option and the opportunity for more option-like structures, we're continuing to grow the business. So I hope 150 is right. To be perfectly frank, if we could just continue growing with the business growing at 15 to 20% compound annually, we'd be pretty pleased.
All right, Bob, we're going to have to leave it there. Thanks so much for joining the show.
Thanks for asking me.
That was Hyperliquid Strategy CEO Bob Diamond. We're going to take a quick break. When we come back, we will have more.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hey everyone, welcome back to CoinDesk Live. We are coming to you from Consensus 2026 in Miami. I'm Jen Sanasi here with Will Foxley, here with Sam Ewan. Things are getting going. It's almost lunchtime. Sam, you've been away from the desk. I think you were on some stages. What's going on out there?
Yeah, there's a lot of people here, which I love. There's still a big line to get in, so if you're trying to come to the convention center, come early, because going through that security takes a minute. But we've had some amazing conversations on the main stage. The other stages are popping. Everyone's at the booths. It's a great time.
I heard there's a Ferris wheel out there.
What?
I heard that there is a Ferris wheel in this convention center.
I feel like I should be able to see it.
I also feel that.
I think it's by the carnival.
Okay.
Right when you come in.
Okay.
Which also has a giant inflatable Pepe. So we know crypto is not dead.
Crypto is not dead. NFTs
Yes.
are making a bit of a resurgence.
So true.
Allegedly. How do you feel about that? I know you're not the biggest fan of NFTs.
Who's saying this?
I don't know.
You?
Sam said it. Sam is the one who brought this up. I
mean,
actually.
floor prices are raising.
Okay.
People are selling out again. I mean, it's small, but it's happening.
The small resurgence.
Okay. I mean, I don't have much more to add. I mean, he's saying that the numbers are going up. I like that. I'm not against that. I'm just saying
Will's
I
a number
that
go up
before.
kind of guy.
I totally am a
Will
number
is
go
a
up
number
kinda
go up kind of guy.
guy. Yeah, even slight number go up.
I appreciate that about Will.
Yeah.
What were you talking about?
I interviewed Rajamannar and Mayor Gupta. So Mayer's the CMO of Kraken. Raja was the CMO of MasterCard and is now their senior fellow. And so I really wanted to create a conversation for builders in the audience to understand what it means to actually build a financial brand.
Mm-hmm.
Yeah.
And these are two guys that really know their stuff, not only talking about how to build it today, but building it for the agentic economy in the future.
Yeah.
How are you going to sort of adjust your comms plan, your marketing plan, your community plan, when half of those people might not be actual people?
Oh, that's really interesting.
The crazy thing is crypto marketing has kind of had a bad rep for a really long time. Right? Crypto companies have famously not really been that good at comms and marketing.
What are you talking about?
And now, Sam, there's this whole other layer that's added into it that introduces a different way to think about how you tell your story. And so that is a really interesting conversation. Give us one takeaway.
I think the real takeaway is that if you're looking at an agentic sort of audience base, there's still a human behind them at some point.
Mm-hmm.
And so, yes, if you set your agent to say, hey, find me the lowest price way for me to get from A to B, that they can do that. But if, Mayor brought up a great example. If I want my AI agent to find me the best nutrition program, it may not be the most inexpensive. It might be the most that works for me genetically. Mm-hmm. There has to be more care brought into that.
All right, we are going to take a quick break. Conversations like this are going to be happening all day, again tomorrow, and again the next day. So we're going to take a quick break, we're going to reset, and when we come back, we'll be joined by Roman Storm's lawyer.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live. We are coming to you from Consensus 2026, brought to you by MoonPay. Next up, Roman Storm's Tornado Cash case has become one of the most important legal tests in crypto. When does writing and maintaining open source software become operating an illegal financial service? Brian Klein, Storm's defense lawyer and a partner at Cooley LLP, joins us now. Hey, Brian.
Good afternoon. Good to see you.
Yeah, you too. Thanks for joining us at the desk. As everyone knows who's watching, we are at Consensus 2026. I want you to set the stage for us. You know, when you come to a conference like this, what do you want people to take away from Roman Storm's experience? What are you hoping to educate folks on?
Sure. Well, our case right now is at a little bit of a critical juncture. We have a motion to dismiss pending in front of the judge. If she doesn't grant that motion, we'll have a retrial in October. So I think for me and for the defense team and for Roman, just want to say thank you to everybody who's been so supportive of him, been so helpful, but also say we may need your support going forward if the judge does not dismiss the case. We'll be going back to trial in October.
And Brian, just to pull on that, how would that support show up? How do you want to see it show up?
Sure. I mean, a lot of people have given money for his legal defense fund, freeromanstorm.com. But truthfully, in addition to that, there's also just giving moral support. You know, I think the community reaches out to Roman, people support him on X, on various social media platforms. It means a lot because being under investigation, being charged for many years is a very stressful, trying situation. It takes a lot out of you. So just having both the financial support, but also the moral support is critical.
Just for our audience watching at home, really quickly just catch us up on how we got here. I know it's been a few years, but just take us through like the quick milestones so people watching at home get caught up.
Sure. A few years ago, OFAC sanctioned Tornado Cash. About a year later, Roman was charged federally in the Southern District of New York, which is Manhattan. And then last summer, we went to trial in July for 4 weeks. And so we were in court for 4 weeks. The jury deadlocked on the two most serious charges, conspiracy to violate sanctions, and conspiracy to launder money, and then they did convict him on conspiracy to commit unlicensed money transmittal. But that is more of a technical count, and we feel very bullish about our chances of winning that on appeal.
How's Roman holding up? How's he doing?
You know, overall, he's fantastic in the sense of like, he has a lot of moral courage. You know, he knows he didn't do anything wrong. He knows he didn't break the law, and he is resolute in defending himself. And, you know, as a defense lawyer, you couldn't ask for anything more, but it's still hard, right? It's hard because you've got the full weight of the federal government trying to put you into prison for a long time, and that hangs over you. So, you know, there's good days and there's bad days, but overall, he's doing well.
So you'd expect with the Trump administration's like very bullish takes on crypto assets and even getting involved in it so much that there might have been some sort of like movement or change around hot button cases like this. Now, of course, the US system is not created like that. There's 3 branches, they don't always work together with it. Was there optimism though at first when a new administration came in that there might be the ability to see this in a different light, and as more projects have kind of opened up and regulations have opened up the last 2 to 3 years, was there more optimism from your team that this case could be dismissed or moved on or whatnot?
There was a lot of optimism, and we are still optimistic. You know, we never give up fighting for him. So we're not going to stop fighting for him in the court, and we're not going to stop, you know, appealing to the Department of Justice to do the right thing here, which is to dismiss this case. So unfortunately, that hasn't happened so far, and I think hopes did get up after Trump came in and certain things happened, but, you know, we will keep fighting for him.
If you lose this case, what precedent is set?
Well, so I don't think we're going to lose ultimately. So I think we may end up, worst case scenario, he's convicted at trial. We get another bite at the apple, which is on appeal. And I think we have very good chances of winning on appeal on all 3 counts if that happens. So we will just keep fighting for him. And I think I'm very hopeful that ultimately he will prevail.
I mean, Brian, Jen and I yesterday were talking to Patrick Witt. Patrick was talking about how the number of crypto developers in the US has now dropped to about 19%. It sounds like there's a lot of people who frankly are just scared to even develop in crypto these days. And I think Roman's a great example of what can happen if people are aggressive in how they look at software developers. How should we look at those who are trying to develop software through the lens of giving them certain freedoms to allow them to develop, allow them to try? Because I don't think Roman sort of came out through the idea of, I want to create something that's going to be used for evil.
No, the idea was suggested by Vitalik, was help develop a privacy tool for Ethereum. Yeah. And it was never his intent to develop something that was illicit or was illegal. He's lived in the United States. The company was a US-based company that helped develop this. He was very public and transparent on X, Twitter back then. So it is a concern what you're raising here, which is that when you prosecute people for building neutral tools, they're going to be scared, because guess what? Every software tool can be misused, just like every physical tool can be misused. A hammer can be misused. A knife can be misused. At trial, we talked to the jury, and this is no surprise, about the thing that we all use every day that's attached to our hip, that's on my pocket right now, our phone. Everybody uses that every day. It's one of the most important tools we all have, but guess what? Bad actors, criminals use phones too. And a lot of them, they all use them. Doesn't mean you should take it away. And so you're keen on what's the important precedent in this case, which is that this case is allowed to continue to go forward. If we're not able to win a trial, it really does set a dangerous precedent for developers, not just in crypto, but software in general.
I mean, Brian, just to jump in on that, like we have Reid Hoffman coming on tomorrow. Reid, when they were developing PayPal, they had the government targeting them because even the idea of moving money on the internet was seen as so threatening, until finally they said, oh, we can figure out the way to work together. So to me, there is a precedent that technology, especially around money, can feel uncomfortable to governments. But I think you hit on the head. We have to allow legitimate software to have its place in the world, and then really go after the actors, not the people who are developers.
Yeah, and this fight isn't just, again, to crypto, it's software in general. Look at the fight Apple had a few years ago about unlocking phones. I mean, this fight is bigger than Roman, truthfully, and bigger than crypto. And and the government, if you let federal prosecutors, not all of them, but many of them, say, well, what should we have access to? They'd say everything. You know, they say they believe in privacy, but the reality is they don't, because they want the back door. They want the secret key that can allow them to look into stuff, which strips us all of our privacy.
I want to come to the government's argument just to bring this conversation full circle here. They're saying that Tornado Cash wasn't just code, but a service that promoted, maintained, and was used by bad actors, including North Korea. This conversation feels really pertinent now, given the two big DeFi hacks that were just done by North Korean hackers. Just talk to us about your response to that government argument.
Sure. I mean, first of all, there's no evidence, nor was there any contact ever between Roman and any North Korean hacker. He didn't promote it to North Koreans, never contacted them, never was any ever communication. It wasn't built for North Korean hackers. So let's just keep that point front and center, because it's an important point. Are North Korean hackers going to try to hack into things, take people's money? It doesn't have to be crypto even. Yes. Do we all agree they're bad guys? Yes. Do we all want them to stop? Yes. Is that realistic? No. Okay, they're in a rogue country that we can't reach, and so unfortunately that's a reality we all have to live with. And it doesn't mean that Roman Storm or anyone else who builds a neutral software tool that gets misused by them should be prosecuted and potentially go to prison. Those are two different things.
One last follow-up question on the precedent side. So Keanu Rodriguez of Samurai Wallet was also recently placed in federal prison for his involvement in building Samurai Wallet. Is there like a stacking element to these cases where the government over here looks at one case and decides negatively, and then the other case they might look on that? Can you speak more to precedent in the last 18 months around some of these cases?
Sure. I think the prosecutors want to build precedent, and they want to, there are factual differences in all these cases that are important, and I don't represent them, so I can't speak to them, but they do want to stack precedent, and they want to be ready, and this is my opinion, for when Trump leaves. I think there is some containment of these cases, but President Trump's going to be here 2.5 more years, and I think they're trying to build precedent so that when he leaves and the administration changes and things may change, they can really go full force and full throttle into attacking crypto. That's what I think is going to happen, and I think that's why not only is this case important regardless, but it's important because what's going to happen in 2, 3, 4, 5 years from now.
Brian, thanks so much for joining us at the desk, and we'll see you around the rest of the conference.
Thanks for having me. Nice
Brian.
to speak to you.
That was Brian Klein, partner at Cooley LLP and counsel for Roman Storm. We are going to keep the program going. Sam,
Yes.
it's almost lunchtime.
I feel like you're hungry.
I am. I'm getting a little
peckish?
snacky, a little peckish.
Have you been around the food areas? Or
No,
anything?
I've just been right here.
You've not left.
No, Sam did bring me a Cuban sandwich the other day.
I did.
It was the very first time I've had a Cuban sandwich, and it was delicious. So Sam, thank you for giving me that experience.
We're in Miami, home of the Cuban sandwich, outside of Cuba, I would assume.
Yeah, I think outside of Cuba, maybe, I don't know. It was the first time I ever had a Cuban sandwich. But let's see if our next guest has had a Cuban sandwich. KYD Labs co-founder and CEO Ahmed Namali joins us. Hey, Ahmed.
Hey guys, what's up? You excited for Consensus in Miami?
It seems like you are.
Hell, guys, the market's cold, but the city is hot. And I am stoked to be here.
This city's kind of damp.
Hey, listen, beggars can't be choosers,
Yeah.
all right? I'm coming from New York. The weather's great.
Sam and I were just unpacking our food journey. Have you had anything good to eat yet?
I came in on a red eye, but I'm looking forward to having some Cuban sandwiches as well.
Have you had a Cuban sandwich before?
In Toronto, but I don't think that qualifies.
No.
You've never had one here?
I have not. All
right. Ahmed, what's going on in Kid World, Kid Land, KYD? Tell me everything that you've been working on, the TIX protocol. We've spoken to you over the years, like things just keep moving forward and there's sort of no better time, it sounds like, than now, especially with the recent judgments on Live Nation.
Right.
I just want to hear what's happening right now in the ticket world.
Yeah, we spoke to the LA Times, New York Times about this. Regulations coming down hard. Fans feel like they don't know where the fees are going. The artists and venues are seeing their tickets being scalped for 10x the price. And TIX was made to solve all of that. We're really super excited to be doing some early and formulative work with StubHub right now, which is something that we hope to announce very soon at Breakpoint.
Sounds like you just announced it.
Yeah. More details to come later?
It's not real until you can see an artist sell a ticket on StubHub and make 10% on that, 20% on that, and that goes back to the people that create the value. So we're really excited to see this happen in real life and have this happen with a major partner. But ultimately, I think for us, it's really expanding too, right? We onboarded recently 2 venues in Cedar Rapids outside of New York, which has been great. And now looking towards Chicago, the LA area, with some really exciting new additions. And I think it goes to show everybody's ready for a change. They're ready to own their data, know their customer, and keep their distribution. And that's the thing that excites me. And also spending time here in Miami at some of the local venues, Lib 11, and Miami Beach Hall, which is a mainstay if you're looking for jazz. So stoked overall.
We've unpacked Kid Labs various times throughout our career, but I think it's important for our audience that's watching now to just kind of take a step back. You know, you just described a really innovative solution to a problem that's plagued an industry for a really long time. Talk to us about the artist experience and the fan experience. Like, take us into a real use case.
Yeah, it's great to be here in 2026 where you have to have a real business and deliver a blockchain-enabled solution without people knowing or caring that it's on-chain. For us, what it really means to deliver something that's impactful is we know that ticketing, and we've unpacked this with you guys, that ticketing is a credit business. Ticketmaster has built one of the last standing American monopolies that's been very much so recently addressed. But lending money to venues in order to secure exclusivity. Now that within itself should not be a blocker for an artist or a venue to throw a show. And at Kid, we've done 2 things on chain really well. We've brought on institutional capital and let them earn 10 to 15% by funding artists and venues and giving them an option on the software side and on the ticketing side that lets them own their data, that lets them control their resale, and have software that actually makes a real world impact. Now, I want to call out one big thing here. The blockchain was never a value prop for Kid Labs. Since 2022, our value prop has been one simple thing: deliver a great experience for music venues, be in service to artists, and enable fans to get fair value tickets and give everybody a shot, not just bots.
Ahmed, when we look at the recent ruling with Live Nation,
yep.
They've been accused of being a monopoly. You used to work there, right? Ticketmaster.
Yep.
You know this business. Do you think that this ruling stops them?
So, candidly, Live Nation will definitely appeal this judgment. That's, there's another 2 to 3 years to go. But what this does is something that's more emotionally and spiritually impactful. Everybody, whether you're on the blockchain world or in the music world, Ticketmaster and Live Nation is the boogeyman. They are the people that, they're untouchable. And what happened with this ruling, 32 states said, hey, listen, they're not. And what that shows to venue owners, team owners, and stadiums is that, hey, listen, there could be something that changes here. And that change has them looking at alternatives like us. So all in all, I trust in the American legal system. I believe justice will be done, and I believe there will be a better solution for it. This DOJ and the states have taken down bigger companies like American Tobacco. I think Live Nation as a whole is, ultimately going to have to use something like TIX to be able to be regulated the right way. And what that means is being able to control resale caps. That means ultimately building on something that actually saves their butt too. In a world where very dumb bots built in 2002 can easily buy hundreds of thousands of Taylor Swift tickets, what happens with AI agents? It becomes, the elephant, like you're really seeing who's behind the curtains at that point. So all in all, we were really excited about the future. We think this is going to be a renaissance for musicians and artists and creatives, and this judgment ruling is a good tailwind for that.
Ahmed, we've talked to you at a bunch of events just like this one that we're sitting at here.
Yeah.
Why is it important for you to show up at events like Consensus, given what you're building?
So I think that's a great question because our core customer isn't at Consensus. It's at Polestar, it's at, Ticket Business Forum in Manchester. Why we come here is we want to also work with teams and show that, hey, listen, we have 2 million fans that use our platform. We're built on Solana. We want teams to build loyalty solutions on us. We want vaults like Morpho, Maple Finance to curate the yield and expose crypto investors to a Bitcoin resilient yield source, right? And ultimately, we're a crypto business. We're built on chain. As much as I like to say, I at times resent this industry, this is an industry that made all the things possible for our customers, my team, and I'm excited for the next 3 to 4 years.
All right, we are going to leave it there. We are just getting things started. We are halfway through day one of Consensus 2026. If you're just joining us now, this is CoinDesk Live. We are going to be live for the next 3 days, bringing you conversations with the top of the top guests who are going to be in attendance. We're going to head on over to the main stage now, where Solana Labs CEO Anatoly Yakovenko takes the stage.
Heard it here first. So now for a fireside chat on Solana, please welcome co-founder of Solana, Anatoly Yakovenko, and general partner at A16Z, Ali Yahya.
All right, it's great to be here. Thanks everyone for coming. Toli, it's great to have you.
Thanks for having me.
Yeah, we have a fairly short session, so we'll just jump right in. So we are at a very unique time in the space. I think we all collectively have an opportunity to help this space break out of its OG niche and become a mainstream technology. Solana has been at the center of that from the very start. I'm curious, what would you advise the Solana community to do to really take advantage of that opportunity?
I think, if you kind of look back at the early days, 2017 and prior to that, people had like a ton of ideas about everything that could be possible with crypto. And they were just 1 or 2 cycles early. I think basically when you see technology go through stages and maturity, just like with the .com era, pets.com was a little too early. Yes. And now that the technology is mature, it's time to build those businesses and try to find product market fit. All the ideas were the right ideas. They were just, the timing was off. And that's usually how it goes with tech and startups. So rethink of what's possible today, given the speed and the reach and the throughput of Solana and try to build those businesses from the ground up.
There has always been a tension in this space between, on one hand, building systems that are completely decentralized, censorship resistant, permissionless, and then on the other hand, building systems that have a few more levers of control, that are a little bit more centralized, more pragmatic. I feel like this tension has only become more pronounced recently as institutions, major financial institutions, are entering the space and they have a demand for additional levers of control. How do you think about navigating that tension and preserving some of the ethos of the space from the very start, whilst still meeting institutions that require more control halfway?
I think if you really actually dig into it and think about it deeply, they actually want to build on a base layer where they know nobody else has control. And they have the absolute guarantees of what they're doing is deterministic. There's no way for a third party to interrupt or screw up the financial systems that they're building on top. So this permissionless, trustless layer is really critical as a foundational building block. And then the ability to express whatever controls that are needed for an institution to operate in whatever regulatory environment they're in, those have to be expressible by that particular actor. What they don't want is the ambiguity, that they don't understand the system that they're operating in and the rules of it are opaque and hard to enforce. So Solana being open source and permissionless is this really great foundational bedrock, and the fact that it's cheap and fast is what allows them to build businesses on top that can actually scale to consumers.
Yeah, I agree. I think this is a bet that credible neutrality is the thing that ultimately will matter the most. That is ultimately the thing that blockchains provide that no other computer system offers.
Of course, and I think if you want to eliminate that layer of finance that depends on a trusted third party, you actually have to prove it that there's no trusted third party there that you're relying on. The only way to do that, as far as I know, is open source and permissionless.
What do you see as the most important upcoming milestones in the Solana technical roadmap?
For me, I think we kind of hit the critical milestone, which is the client and the operating system, that layer, that the validator client, has kind of disappeared from most of the application developers' point of view. Nobody's asking me about when is this feature shipping or what. There's people that are complaining to me directly, but most devs that are building on Solana, they're in hackathons that are shipping applications, don't even think about the layer anymore because it's continuously improving. And it's doing that, release after release. But personally, obviously, some core amazing features that are getting ripped out as proof of history, which is what I pitched to you 7 years ago at this point. So the Alpenglow release is basically due sometime this year, I think next quarter. So that to me is this exciting step in the evolution of the protocol, because we're going from the ideas that proved out this core innovation that I think Solana accomplished, which is you can scale the throughput of the chain with the bandwidth available on the hardware, to what we can theoretically guarantee in terms of safety and liveness with really, really hard bounds. And at the confirmation latency, that's basically 1 round speed of light around the world. So I'm really excited about that as being kind of, in my mind, the last lines of my code being ripped out of the validator software means that I'm kind of done.
For sure. How do you see privacy as a feature ultimately weaving its way through the Solana roadmap and ecosystem?
Everybody wants privacy. I think every individual wants it at a visceral level, we all deserve privacy. Every business wants it from a practical point of view, because when you're selling widgets, you don't want your competitors to know how many widgets you're selling and which ones.
Yeah.
All that, everybody wants it, but I think privacy is not a leading feature that will change consumer behavior. It's a lagging feature. Once you establish PMF and everybody's using it, and then you can add privacy because this is a kind of a core thing that is better for your consumers, then that becomes a moat. So I think as crypto matures and develops and we get to tens of trillions per month transacted on chain. Like I think we're about $1 trillion right now in terms of stablecoin volume. These issues between competitors and between consumers are going to start to become serious differentiators, and they'll actually start becoming the requirement. But I think it's more of a lagging, like technology indicator, like a feature. My hope is that, like the challenge here is like there's always tension between privacy and what we want as individuals and what regulators want.
Yeah.
So how that shakes out, I think, is going to be kind of the critical thing in the next 2 to 5 years.
100%. Well, in the past, you and I have had this debate as to what the end game of scalability ultimately looks like. I think you've once made the case to me that we'll only really ever need something like 700,000 transactions per second. That will be enough to put the entirety of the world's finance on chain. I'm curious how that has evolved, if it has evolved at all, given now that agents are becoming potentially now a source of transactions. And you could imagine a world where you actually have maybe the majority of transactions, financial transactions in the world actually driven by agents as opposed to humans. And maybe there's a world where the number of transactions is actually much, much larger because of the fact that it's all machine to machine. Curious what you think. Do you still feel like that may not be the case and actually we're good with something like 700K?
Yeah, I think the nuance to that question is that what is the median fee per transaction?
Yeah.
And if you start going below half a penny, that means that all the transactions you're not including are basically financially insignificant. So it's kind of like saying, well, Google doesn't actually handle all of the search in the world because every website has their own search, Wikipedia has their own search, but none of those are financially important searches.
Right.
Like Google has 90% or whatever of the search market that matters, that is monetizable. So the layer that matters for, I think, blockchains, or especially layer ones, is that layer above the median fee. And I think without demand, the median fees are completely insignificant. And it doesn't matter if you're transacting in that chain, if the fee is below a fraction of a penny. It means there's not enough demand to actually warrant scale. Like, there's no point to add scale there. So I don't know what that number is. If it's 700,000 TPS, it was my back of the envelope estimate for 1 gigabit, 1 gigabit of block space. We're not even near that, right? I think Solana, handles half of the world's blockchain transactions, and it's maybe 2 megabyte blocks right now or something like that. NewYorkTimes.com website is 20 megabytes. Yeah. So in terms of how much stuff we can add to the chain and capacity and all these other things, we're not actually adding that much capacity that people need that's monetizable. If you just simply scale throughput. What people actually care right now is how big is your economic tick? Is it 400 milliseconds? Is it 1 second? Is it 50 milliseconds? How fast are you basically synchronizing the state and the world's information? And that allows people to actually put more expensive transactions on chain, and kind of more revenue and more important stuff actually goes away from traditional markets into these decentralized ones. Yeah, I think while the world of agents may, at raw amount of whatever transaction throughput, may be unlimited, the amount of transactions that matter are all probably going to fit in 1 gigabit networks.
Mm-hmm.
So that means what you're actually optimizing for is the quality of that 1 gigabit. How fast is it? How low latency, the reliability, and all these other kind of much harder engineering problems, frankly. Yeah. Like adding throughput is somewhat easier.
Well, final question to round us out. You've been on an incredible journey, having built Solana from scratch. We've known each other for something like 7 years. There's lots of founders here in the room. I'm curious, what words of advice would you have for founders in the space today?
Founders are different than funds or investors. Yes. Investors can take multiple bets, and founders can only really take one bet. This is, in retrospect, you kind of have to be a little stupid almost, or a little crazy, and kind of build on this vision. And the problem is that the vast majority of founders will fail, like no matter what you do. And if you change your mind and chase too many visions and kind of too many product features, you'll definitely fail. And the only ones that survive are basically the ones that get lucky. So you're competing against a whole bunch of dumb idiots that are moving as fast as they can, and effectively they just pick the right kind of market and the right products. But this is the only way you can actually succeed. So, and that's somewhat hard for intelligent people. Like a lot of founders, engineers, or whatever are very analytically intelligent, and they analyze risk, and they're like, well, I'm not 100% sure that I need to do this. But at some level, you kind of have to make that gut decision that the only way I can win is if I pick, a horse and I stick with it. So, yeah, good luck.
Fantastic. Well, that's an excellent note to end in. Thank you, everyone, for being here. Thank you, Toli.
For sure. Thank you.
Hello, how are we doing? I know it's close to lunchtime, but we have a great talk coming up. Up next for a conversation on the next evolution of capital markets, CEO of Bullish, Tom Farley. Woo!
Thank you so much. Hello, everyone. Nice to see you all. Let me see if I can figure this out. I'm going to pop open some notes. Excellent. And so are we just waiting on the presentation here? Anyone? Who do I ask? Excellent, excellent. Okay, excellent. We announced this morning a really exciting transaction, and I just want to take you all through the rationale and the logic of it in warp speed here. We're going to do it very quickly. So, I started at the New York Board of Trade in 2008, and I was a young man. I was also scared to death, and I went down as the new CEO to the floor, and there was just friggin' paper everywhere. There wasn't anything electronic in sight. There were carbon copies crumpled up. There were trade tickets being thrown around, and wow, what's my job here? And my job was take this paper era, which obviously was inefficient, and turn it into an electronic era. And it was an absolute blast, honestly, because when you introduced electronic trading, what did you get? The obvious stuff. More speed, more transparency, everybody was happier, we look like heroes. We stand here at a generational moment, which is moving markets to a blockchain era. Let me get into what exactly it is I'm talking about. So, tokenization, let me start with a definition, because different people use the term of tokenization slightly differently. So just for rules of engagement here, I'm talking about the process of turning an asset, the ownership of an asset from off-chain onto a blockchain. You own the token, you own the asset. That's what I'm talking about. But that undersells it. That absolutely undersells it. What it's really doing is it's taking this static record, and through this process of tokenization, it's turning it into an active asset. I think there's an analogy here that makes sense. Bear with me. Think about the typewriter. You know, when I was growing up, it was still typewriters. I know I'm like granddad here for most of the people in this room. And you know what? You know what was interesting about the typewriter? It worked. The typewriter worked. You typed something out, then you had a piece of paper, and you filed an account. Oops, I made a mistake. That's cool. I'll just retype it. And if you had asked somebody, hey, do we need something new? Nobody would have said we need something new. They would have said, hey, the typewriter's fine. And then, of course, the computer came around, and it took this active, this static asset, you know, the piece of paper comes out of a typewriter, turned it into an active asset. All of a sudden, you can program this piece of paper, this electronic piece of paper. It's editable. It's searchable. Of course, in this analogy, the blockchain is the computer, and the electronic era is the typewriter. And so that's why we're so excited. And what does it allow? It allows always-on infrastructure. I ran the New York Stock Exchange, the most important exchange in the world, bar none, or tied with NASDAQ, because Tal's right here on the side of the stage. So I'm gonna acknowledge NASDAQ as well. It's open 32.5 hours a week. What the hell? Here now we have 24/7, always-on infrastructure, instant settlement, unlike the certificated share world, the traditional share world, and dynamic functionality. You can program corporate actions into the actual smart contract of the token. You can't do that in the existing world. So let's talk about the movement to the blockchain era. Good news, it's already happened. It's already happened. And if you listen to any of the bullish earnings calls, I hope you all do, but I suspect very few of you do, you have heard us quarter after quarter say, tokenization's already happened. The first major success was the stablecoin. The stablecoin is just a tokenized US dollar. Actually, Bullish was very involved in that. We've been building since 2020 a tokenization services provider, albeit focused on stablecoins and traditional digital assets. Stablecoins are now 300 billion, up from zero. They are 12 trillion of annual payments in stablecoins, which is worth noting. And digital commodities, think Bitcoin, Ethereum, the market cap of those, round about 2.6 trillion. The global securities market, and this is not drawn to scale, so look carefully at the number. $270 trillion is the aggregate size of the global securities market. And this isn't pie in the sky. This is just the valuation of these securities. This is factual. This isn't my kind of guesswork or estimation. And guess what? Tokenized securities are next. That, to me, is super exciting. So, okay, at Bullish, we've been saying really since the fourth quarter of 2023, when we first partnered with Brad Garlinghouse, who was on stage here earlier, we've said we want to be the ultimate tokenization services provider because we want to unlock this $270 trillion opportunity. Selfishly for ourselves and for our shareholders, but collectively for this entire digital assets industry and this programmable layer, this financial programmable layer that we all believe in. And we sat around, we said, what do we need to provide in order to be successful? Number one, we need to provide end-to-end tokenization services. Number two, a unified transfer agent ledger. And number three, we need a broad base of issuers in order to turn this vision into reality. Until today, we didn't have those three requirements. We are acquiring Equiniti. There are 3,000 blue chip issuers. There are 15,000 corporate customers in total. There are 20 million KYC shareholder customers who are only a wallet address away from being able to participate in this tokenization vision. They're fully KYC'd, those 20 million. They're only a wallet away. So we're combining these two companies. On the left, you have Bullish. On the right, you have Equiniti. And in the middle, you have the financial profile. $1.3 billion of revenue, $500 million of EBITDA, round numbers, because this is 2026. So this includes some forecasts and projections. Please understand that these are just forecasts. And the 15,000 clients that I described earlier. An analogy comes to mind here for me. Way back in the beginning of this century, Intercontinental Exchange had this really great technology. They had this thing called electronic trading. And they looked and they said, gosh, we don't have any embedded customers. We don't have any real products. We don't have any reputation to be able to kind of just get this thing rocking and rolling. They went and they bought the International Petroleum Exchange. They went and they bought the New York Board of Trade. They combined those two businesses, and they created one of the most valuable, frankly, fintech successes in history, but certainly exchange successes. That's exactly what we're doing here. We're buying Equiniti, a great global leader transfer agent, and we're combining it with the digital assets know-how of Bullish. First one, I'm going to go through these very quickly. End-to-end tokenization services. So this is the one that really Bullish comes to this partnership already having a really goodly set, and you're going to see more in just a moment. But what I mean by end-to-end is the ability to create the token, work with issuers or corporate companies, design the token, launch the token, operate the token, but then also make sure it's a success. List it for trading, help provide liquidity, marketing, so on and so forth. A unified transfer agent ledger. For those of you who have followed tokenization, you may have heard about this idea of, well, hey, we'll tokenize and we'll have one transfer agent doing tokenized shares, one transfer agent doing, certificated shares. That's not going to work. That's not going to work. We hear from issuers every day. You need one source of truth. You need one transfer agent that can do both. As of today, we now have that. And then finally, the broad base of blue chip issuer customers. Look, I respect the heck out of CEOs who are going issuer by issuer and selling this tokenization vision. We just felt like in order to really catalyze this thing, throw gasoline on it, we couldn't do onesies and twosies. So we picked up 3,000. That's what this acquisition was today. We can go sell to those 3,000 customers. But before I go to the next slide, I do want to just speak out of turn here for a second. For those of you in the room who aren't total nerds like me for market plumbing, the transfer agent is required by law and regulatory dictate in most Western-style economies to be the ultimate arbiter of who owns what with a security. So if you don't know what a transfer agent is, I recommend you just remember that incredibly important fact. Without a transfer agent, a token is just a IOU. Or a derivative, or something contractual. With the transfer agent, the token is the share is the token. So we combine these companies and $1.3 billion, as I said, super exciting. Honestly, I focus less on the financials. My CFO focus more. I'm talking about the current financials. I'm focused on the growth opportunity for the issuers and delivering massive value to them, the ability to see who trades their stock more easily, providing transparency, the ability to bring in new pockets of liquidity. It's much like we saw with the stablecoin. Who would have thought that the Peruvian cab driver would be owning the stablecoin, bringing new pockets of liquidity to the US dollar and US treasuries? Same exact thing's going to happen here. Ultimately, it's going to benefit the issuers who are our primary constituency. So with that, I'd like to, while I give you a little bit of a preamble, I'd like to call Equiniti CEO Dan Kramer to the stage, please. Dan. Now, so Dan and I didn't think it was enough to didn't think it was enough to announce a $4.2 billion deal today and put our teams through that. We also thought, let's just prove it. Let's prove it. Let's get a beta, an actual production version right now and be able to demonstrate an idea of the power. And your minds will have to imagine all the future use cases. We're about to do the riskiest and maybe dumbest thing at Consensus. We're going to show it to you live, the actual production version. If it screws up, I can promise you it's not our teams that screw it up. It'll be me. But let me introduce Dan. Dan, great to see you.
Great to see you.
So what do you think? What are your thoughts today? Big day?
The big day for us. We're since we started talking 6 months ago, we realized that the best way for a transfer agent to figure out how to best serve their issuers was not through an integration, was not through a partnership, but to find the opportunity to be part of one company. And as of this morning, that's what we became. And when we look at how this works, we see is we are the holder of the record. We perform a critical function in that we know who owns what. What you have at Bullish is you have the engine to do the tokenization. And together we've got the vision to deliver that for our issuers. We're hearing it from our issuers. I've been on the phone with them all morning. They're extremely excited about what this means, and they want to know when can they start.
Awesome. So let me set this up. Bullish plays two roles in what you're about to see. Number one, Bullish's board voted last night to tokenize our entire cap table. It's done. We've done it on the Solana blockchain. We've created 151 million tokens corresponding to Bullish's total share count. Two, Bullish has been working with Equiniti to provide digital assets expertise to their technology team to work with them to create the first digitally native transfer agent ever. And incidentally, I suspect this is the first company ever that's capitalized their entire cap table, what you're about to see. And what we found, incidentally, the Equiniti tech team is awesome. I think they needed our help with some of the digital asset stuff, but I'm not totally convinced based on what I've seen. I am now on shareholder. Can I get yeah, here we go. I am now on what's called Shareholder Central for Equiniti. This has the record of all Bullish shareholders. I'm logged in as Thomas Wells Farley. And you can see my shares here. And 80,000 shares shows the current price. I'm going to go ahead. I'm going to hit withdraw tokens. What I am doing.
And bring some of the ease of use and adoption that Robinhood prides itself on to the institutional space. Because honestly, I don't think a lot of people have really been spending a lot of time on institutional infrastructure because we weren't sure if it was even something that was going to be on the table.
You have a good business otherwise, I guess.
Yeah, for Ondo, you mentioned we do tokenize treasury, stocks, and ETFs. At this point, we feel like we've gotten a very good tokenization engine and distribution rails. Our products are growing very healthily. It's mostly offshore, but it really is limited to spot trade, right? There's no ability really to do leverage on stocks, although you've got Trade XYZ, Hyperliquid really going in that direction. That's also where Ondo is starting to focus more and more. We're going to launch a perps platform pretty soon. The ability to use your stocks as collateral on those perps, I think that's going to be pretty meaningful from a capital efficiency perspective. But really leaning in on how do you use tokenized stocks as collateral on chain, and how do you make the trading experience ultimately better than what exists in a normal brokerage account? Paired with that, for the first time, we now have tokenized stocks living on the same rails as commodities, crypto, ETFs, everything together. Prediction markets. How can you create portfolios and construct these things in a way where you can really do things that before in normal asset management you couldn't, right? All of a sudden, anyone permissionlessly can probably create the equivalent of an ETF and throw in some crypto, some commodities, throw in a prediction market, stocks, whatever it is you want to create. Doing that in a permissionless way with vaults or a different implementation. And then how do you bring the two together so that those same vaults in an active capacity can do the carry trade on the perps?
right? Bringing together that ecosystem is where Ondo is going next, and all the stuff that we're building now. From your other angle of like, how does TradFi come into all of that? Right now, as the issuer for a lot of things, we are mostly capped and limited by what TradFi can do. Because we are operating 24/7, TradFi is not. Whenever TradFi is on, we can mint and burn and buy the underlying assets for all of our tokenized stuff. When TradFi is not on, we run into issues on chain. And so all the stuff that the DTCC is doing, the NASDAQ, the New York Stock Exchange, moving towards 24/7 trading, I think that's going to be so helpful for companies like Ondo, because then we can take all of that liquidity, wrap it up permissionlessly into our products and platforms, and make it available offshore wherever needed. So like that interplay and solving a lot of our infrastructure needs, particularly over the weekend, is where a lot of our TradFi partnerships come in.
Got it. Regulatory clarity for us definitely is important, but we look at regulatory clarity and regulation as being region specific. Obviously, regulatory clarity in the US would help us a lot and grow with traditional institutions. However, a lot of these institutions that I speak to, regulation isn't the main blocker, right? It isn't the biggest challenge for allocating capital. There's offshore vehicles, there's very different ways where they can allocate that capital. So for us, regulation's important, but I think it's more of the value prop is what they're chasing. And what the value prop we're providing is safe, native Bitcoin with the cheapest borrow that's going to be in DeFi. And that is something that is a very compelling case to a lot of folks. Again, as capital efficiency becomes more of the forefront of the discussion, especially with kind of asset prices where they're at, folks are trying to figure out, how do I squeeze out every little percent basis point of yield I can on my digital asset? But obviously, look, I would love to be partnered with JP Morgan tomorrow, right? I won't say.
That was going to be my next question. So every time we spoke about this in the past, it was, is Wall Street coming? And the reality is, we don't necessarily want Wall Street, we want their capital, right? Like, the reality is, we would prefer not to deal with Wall Street and all of their, sort of antiquated ways of doing business. We just want their money. Now at this point, we're starting to see the money trickle in. We're also starting to see a lot of the capabilities or lack thereof trickle in as well. We're trying to break molds. They have molds that they're very comfortable with that have made them tons of money over the last century. So I guess I can ask this question first. And I'm going to go off script on another question following this about this, we're on and they're off kind of thing. And then I'm definitely bringing in Agentic finance now, because I didn't think about that in our pre-panel prep. So do we actually feel like do we want to continue down this path of full integration? Let's just say the administration wraps up in 2 years and a more contentious one steps in, and we haven't quite gotten where we needed to, and we're relying on that completion. Or do we want to carve two parallel paths where we're trying to kind of run experimental, lesser regulated activities while we're also trying our absolute best to, do right by the SEC so we can get JP Morgan as a partner?
Well, I think you're already seeing both happening in a way. Like, there is an entire offshore ecosystem of crypto and tokenized stocks and DeFi that is flourishing. That's where stablecoins also originally found product market fit, right? And you're starting to see the same thing with tokenized treasuries and tokenized stocks, in particular ETFs, et cetera, and novel product structures, right? Take Hyperliquid, perpetual swaps, very much offshore. Mm-hmm. I don't see a world in which everything that happens offshore finds a home in the US the way that it's happening offshore. That's just not going to happen, right? There's always going to be more permissionless innovation happening offshore. Now, that doesn't mean that what's happening in the US is irrelevant. Quite the contrary, because a lot of the rails that you need in order to have the permissionless stuff also work better with better liquidity and all these sorts of things can still occur in the US. And I think that's what's happening right now and what we're also trying to build with our partnerships at Ondo. But I think both worlds will always remain a little separate. I don't see, banks get fully comfortable with permissionless stablecoins anytime soon. They're going to do tokenized deposits, right? Just in the same way that you're going to have the DTCC, NASDAQ, New York Stock Exchange, name your TradFi, do tokenization and tokenized securities, but probably in a permission environment. But running 24/7, so it's going to be a step-up improvement. But they're not going to be issuing the wrappers that work in DeFi in the way that Ondo's doing.
And I think if you look at where capital sits today, right, a lot of capital still sits at large banking organizations. And I think, if you're asking people to move from those, I think that's going to be a pretty tough ask, right? Like my mom's not going to take her money out of the bank that she's banked with for 30 years, but she might put 5% of her crypto into a portfolio, her portfolio, if that bank had crypto services available. And so one of the things that we're spending a lot of time on is how do we help banks and platforms unlock the crypto offering to their broader client base in ways that feels comfortable and natural for those client base, right? You kind of have to meet some of these people where they are, right? You're always going to get, to your point, the DeFi community that's going to go where they want to go. But for everybody else, you need to meet them where they are. And part of that is unlocking this through things like, we offer a Bitstamp as a service platform where we'll partner with banks so that they can access our liquidity and offer crypto out to their customers.
Right.
That's how we're going to break down those barriers and get access to that capital. But look, another big unlock is clarity, right? We need to wait on that because a lot of these banks are building, but they're building waiting for clarity to pass.
Yeah, your mom is comfortable with a Morgan Stanley ETF, but if you told her she lost money because of a kelp DAO hack, I don't think she'd be too thrilled about.
I don't think she knows what a DAO is, but we can start there.
Anything to add?
Yeah, look, I kind of echoing what everyone's kind of said here is we've been building in two paths forever, right? There's always been the offshore and the onshore path. And the onshore side, the US domestic side, and a lot of these institutions are seeing the efficiencies of the technology. And they are picking and choosing those specific components that make the most sense and that'll ultimately drive costs down and bring their bottom line higher. At some point, though, that does merge, right? When that merges, I don't know, there's probably a poly market for that as well, but end of the day, it's not going to continue like that forever, in my view. I think it's going to get to a point where both sides are going to have to kind of come together, and it becomes stronger, right, that way. Because when liquidity gets aggregated in that sense, right? Otherwise, you have two separate pools of liquidity. You don't get the same efficiencies when you have one larger pool of liquidity.
Yeah. There might be a HIP-4 market for that soon, too. Right? So when you think about product development, for example, you mentioned you go and you speak to the banks and you meet them where they are. So you understand their client base, how can we help you with our offering, but you prepare offerings for this. How do you think about product development? Robinhood has incredible distribution across both institutional and retail. Ondo has, a scaling, distribution channel through their products, and then similar with Babylon with your community. What is the process? What's the most recent product you've developed, and do you feel, is it a push or a pull situation, is what I'm trying to get at. And this is in tech broadly when you have a product-focused business. You guys kind of have a product-focused business. How do you think about that?
So our latest product rollout was perpetual futures in Europe. And we had a couple banks that right from the get-go said they wanted to partner with us, so that was more them like pulling than us pushing. But we do a lot of pushing, right? We do a lot of education. I think the one thing that has landed well with these more traditional finance regulated firms is regulation. And it's maybe an unpopular thing to say on a crypto panel, but it is one of those things that the crypto industry hasn't done itself any favors in the last couple of years, right? Whether we look at October 10th flash crash, where we look at any of the lending stresses that went through the market a couple years ago, I think that where you're going to get this adoption is by spending a lot of time on that regulated infrastructure layer, right? How do you think about trading limits and circuit breakers and some of those things so that they can offer those out to their customer base? And again, we go back to this bifurcated world where you're going to have less regulated platforms and venues where there's probably less rules and people that play in there hopefully understand what they're getting themselves into, and then there'll be this more regulated space, and hopefully, to your point, they'll come together at some point. But right now, we're operating in two very different places because, again, we have to meet people where they are.
So those banks, they came to you, right? So the Wall Street herd came to Robinhood and said, we really want to start looking at and trading perpetual futures in any specific, in equity indices, or was it?
In crypto in particular.
Crypto.
So it's a MiFID-based product. So it's in Europe. They're European banks that have come in and said, like, we want to start looking at this. How do we do it? It's a place that they're used to working in, right? They understand MiFID regulation. It fits broadly.
Unfortunately, that's a rough
I mean,
one.
I've operated in MiFID for a while now, so pretty familiar with it. But yeah, it was something that they understood that fit into their risk framework, that their boards would understand. And so it was a pretty easy conversation.
Yeah, and so you roll that out with a few banking clients, and it's, does it automatically hit across the board, or you kind of ramp things up with them over time? Or?
So we're still rolling it out, right? Like, I mean, one of the things, I worked at a large bank for over a decade, so I can say this, like, integration takes a really long time at these banks, so we're in the process of rolling it out.
Yeah.
But yeah, it starts small. It starts with a small percentage of their customer base, and then it ramps hopefully quickly.
Yeah.
But probably more slowly than I would like.
Price action helps, probably. And then
I think for us, so one of the partnerships we did was with JP Morgan. And it was with our permissioned tokenized treasury product. So most of our products are permissionless offshore, but we have one that's global. It's permissioned. It's a tokenized treasury fund. People can subscribe into it 24/7. You earn yield on a daily basis, and you can even do this on a Saturday, right? That in and of itself, as a value prop, is mind-blowing to many in TradFi. So you don't really need to go full-on permissionless perps with some of these TradFi clients. Just offering them where Ondo started, quite frankly, 3-4 years ago at this point, is in and of itself a good place to start. Now, the problem for the JP Morgan clients was, they want to be able to actually subscribe into this product with their JP Morgan bank account. They don't want to use stablecoins. Oftentimes, they don't really trust it, or they don't know how to. They don't have the infrastructure set up. So we said, all right, we're going to enable you to essentially subscribe into this tokenized treasury fund just with your JP Morgan money. And we turned that on 24/7 with the Connexus platform. So JP Morgan clients that are also onboarded to us can use their JP Morgan money to subscribe to our tokenized treasury fund even on a Saturday, and we'll mint them the token instantly so they can start accruing the yield. That is a small place to get started, but it essentially for a lot of the JP Morgan clients is a pretty big deal. And then from that, you start building into other things where they can't just do it with tokenized treasuries. Maybe down the line they could do it with tokenized stocks or other types of products. But you have to start small with your, in their eyes, least risky product. Get some adoption, very small flows initially, and then really just build from there.
Yeah, for us, we definitely listen to the market.
Hey everyone, welcome back to CoinDesk Live, coming to you from Consensus Miami, presented by MoonPay. Here with me now is Senior Research Analyst at Bloomberg Intelligence, James Seyfert. James, a pleasure to be co-hosting with you.
Thanks for having me. Happy to be here.
Yeah, all right, let's get to our first guest. Anthony Pompliano has been one of Bitcoin's most prominent advocates for the last 8 years. His company, ProCap Financial, holds nearly 400 million in Bitcoin and just completed the acquisition of Sylvia, an AI agent lab for finance, making it what it calls the first publicly traded agentic finance firm. He joins us now. Hello.
Thanks for having me.
Thanks for being here. How's your Consensus experience been so far?
It's going great. I think that there's a lot of people who, they're lost in the sauce, but it's all right. We're here to correct the record.
All right, well, let's talk about being lost in the sauce, because I saw you tweeted just 22 hours ago that most of the crypto industry is dead and never coming back. What did you mean by that?
75% of the companies here aren't going to be here in 5 years. There's a lot of people who are still stuck in the 2018 dream of how the world's going to play out, and I think that the maybe industry needs a little bit of a wake-up call. There's 4 areas that I think will end up being really valuable: Bitcoin, equity infrastructure, stablecoins, and tokenization. If you're not working on one of those 4 things, I think you're going to have a tough road ahead. If you're holding a bunch of the long-tail assets, the odds that it goes back to an all-time high is pretty low, and so you can dream or you can live in reality, but I don't think you can do both, and so I'd rather live in reality than be holding on to a dream.
So you just said all the things you think are going to survive. Like, what is something right now that is out there that people are bullish on that you think is just not going to work out?
Go on CoinMarketCap, take from the 10th or 15th position, just scroll down. They're all zombies. They're dead. It's over. Game over. How are these assets going to come back? There's fractured energy, there's fractured capital in this industry, and now there's a lot of different ways to play it. And so if you don't have an institutional bid, well, where is the retail capital going to come from? Why should they come and allocate capital to your crypto asset versus something else? And so if you think about how many coins have been created, go and pick the 47th or 48th coin on that list and tell me why should that thing survive. And so if the 47th one shouldn't survive, the 100th, the 300th, or the 400th shouldn't survive either. And so the thing that's interesting about crypto, though, is you can get these kind of ghost chains or these zombie type projects. And so in the traditional world, what happens is the three of us start a company, we're hard charging, think we're going to be successful, and it doesn't work out. For some reason, the company doesn't work. So what do? We return capital to investors. We shut down the company. Maybe we even file some sort of protection with the bankruptcy courts, et cetera. But there is a starting point and there is a finish point, and that did not work. In crypto, that doesn't exist. The coins don't go to zero. The chains don't actually shut off. And so there's a bunch of people who are still caught up in well, it isn't at zero yet. It isn't yet not being used by one person. And so I think that's ultimately, those people are dead in the water. Let's just call it what it is. Let's move on to the things that are working. Let's get rid of that, because an important part of business cycles is to reallocate the capital and the talent to things that are working rather than get caught in these kind of ghost chains.
Okay, well, you're talking about ghost chains. I have to say, from my perspective, been sitting at this desk for the morning, I've talked to a lot of projects that are working on tokenization, a lot of projects that are thinking about agentic finance, a lot of Bitcoin companies in different capacities, whether it's digital asset treasuries or building layer 2s, building on Bitcoin. And so...
You think 100% of them are going to survive?
No, I don't. but it sounds like what you're saying is we're going to see even more of that, and then there's going to be some kind of consolidation within each of those sectors.
This isn't very different than what we've seen in the industry before. I think that people have just gotten very comfortable with the fact that, if the chain doesn't go to zero, but also look at the companies, right? How many companies were around 5 or 10 years ago that aren't here today? And some of that is consolidation. You get acqui-hires or stuff like that. Some of it's startups shutting down. But I think what you're starting to realize now is it used to be the Wild West, where all you needed was an idea and a little bit of effort, and there wasn't a lot of competition. But now you're competing, right? Take investing, for example. It used to be that you could set up in a basement with a computer, and you could be a 22-year-old kid who's never traded before, and you had a shot to make money. Well, now you're competing against Citadel or Jane Street or DRW or some of the best hedge funds in the world. A lot of the easy money or the low-hanging fruit's been arbed away by much more sophisticated people with more resources, more experience. And so that's true in trading, that's true in building companies, it's going to be true in a lot of aspects. And so I just think that as an industry, we got to grow up a little bit. And we walk in and there's the Crypto Carnival is the first booth that you see. And I thought that was a very telling thing. It's there's the carnivals and then there's the major leagues.
Yeah, there's the serious folks.
Yeah,
right?
Come on, let's go. If you want to win in the major leagues, you can't be playing JV baseball, right? So let's go to the Major League Baseball.
Yeah, I guess I would say part of it is I agree with you wholeheartedly. There needs to be there is an institutional push. There is a more serious nature that's coming around. But the ethos, the vibes of crypto has always been more free-spirited, more of those smaller guys. So you kind of got to find a way to marry what crypto was with what it's becoming. And you don't think so? You think it's going to go all institutional?
Where'd the internet start? The internet was the pirates were going to take on the man, all this stuff. Well, guess what? The man is now controlling the internet. And one of the great things, remember Bill Gates? Bill Gates was the pirate, right? Steve Jobs was the pirate. Now all of a sudden, they are the man. So if you stay around long enough, you become the man. That is how this game works. And so Bitcoin, in a very weird way, was the challenger. It was the pirate. Well, now, if you go and you watch mainstream television, if you listen to very large capital allocators, I would argue that BlackRock is now a Bitcoin company. It's their largest, most successful launch in history. That's where their most profitable product is. And so why don't they get labeled as a Bitcoin or a crypto company? It's not a knock against them. I think they are incredibly big pioneers in an industry. And so it's just it has now been so successful that it has become part of the man or the machine. I don't think that's necessarily a bad thing. That's what happens when you succeed.
Yeah, Bitcoin up above $81,000 as the conference got started this morning. What's your outlook?
Is that the consensus bump?
That's the consensus bump.
Got a little,
I was just insinuating it. Thank you for clearing it up for me. What's your outlook?
No, I mean, look, I think that in a world of uncertainty, what you're going to find is people want certainty. And so what is uncertain right now? Is the war going to survive? What's going to happen with AI and deflation? Who's going to be the Fed chairman, right? What's the political regime going to do? All these components. Bitcoin is the single asset that provides the most certainty that you can hold. I can't tell you what the cost of capital is going to be next month, let alone later this year. I can't tell you what a public company is going to do. I can't tell you what's going to happen in the debt market, if private credit is a bubble or not. What I can tell you, though, is how many Bitcoin there's going to be, how many are going to come in circulation today. I can tell you exactly who owns all the Bitcoin right now today, and I can tell you what the monetary policy is going to be for the next 100 years. That type of certainty becomes very valuable in a world full of uncertainty. And so I think that Bitcoin in particular has this very strong bid because people want something that's certain, they want something that no one controls, and they want this non-sovereign kind of neutral asset. And that's what Bitcoin provides, and no other asset in the world does that.
So do you have a price target over the next
higher?
Okay.
Higher.
How much higher?
Higher. It doesn't matter. Like that's
all-time high.
I think this whole thing is like it doesn't really matter anymore. Like does it go to 100, 110, 120, 130? We kind of left the like will it survive or will it not? And now it is basically a game not of hey I buy at this price and I sell at this price. If you understand Bitcoin, you buy it and you never sell it. It is like passing down the family gold. Once you own it, you don't want to sell it. And the whole key to that is it's less about a price target, and it's more about a time target. And if you're smart about it, what you do is you continuously dollar cost average into a great asset, no different than, think of all the wealthiest families in the world. What'd they do? They bought real estate, they bought gold, they even bought the S&P, whatever. But they bought it and they just never sold it. And it was the right asset to hold for a long period of time, and I think that's what Bitcoin ultimately is going to end up being.
So when you come to a conference like this, what's your
I do laps and get yelled at as everyone's like, oh, that's the guy who said that half of crypto's dead. I'm not in that half. That's what they all tell me, right? They say, oh, no, I'm in the other half. I'm like, okay, maybe.
So is your goal to convert or sound the alarm?
No, I'm here to have a good time. A lot of my friends are here. I've come for many years. I think you guys do a great job at the conference. And look, I learn a lot, right? I talk to people, kind of understand what are they interested in. Even you can learn a lot from bad ideas too, right? So I think that it's important to hear the good ideas, the bad ideas, see what people are working on. Also talk to investors. Where are they putting capital, right? And sometimes that's a good idea. Maybe I should, look at that area. Or, hey, that's a really bad idea, and maybe there's a counter trade to it or a counter investment to make. And so information is very powerful, and I think that when you can bring this many people together, it's helpful.
Best and worst idea you've heard from investors you've talked to on the consensus?
I don't want to call anybody out, but there's a lot of people. I've been doing this now long enough where I can tell you that we went from a bunch of bad ideas that the kind of 2015 to 2018 cohort of people realized were bad ideas, but there's so many new people who came in the industry over the last 5 or 6 years that they're back revisiting some of those ideas. And so, you just got to let it play out a little bit, but I think that's a key piece to it.
One of the major narratives we haven't talked about yet is prediction markets. Curious about your outlook there. I think I've heard you're bullish on prediction markets.
Well, I'd have a very nuanced view of prediction markets. I think there's a lot of nonsense going on. I don't think that it's good for America, nor do I think that the platforms are doing anyone a helping hand by having people betting on, mention markets or the color of someone's tie or how long a press conference is going to be. But I think it's going to be very helpful for investors to isolate economic data points. Is Tesla going to beat on car deliveries or not? Is there going to be a recession or not? These are not things that you can get direct, explicit exposure to in the traditional financial system, and so prediction markets are really helpful for that. But I don't think that necessarily we want to be encouraging people to bet how long is our show going to be today, right? It's not probably the best use of capital in our economy.
I mean, I know at least one person who could make some money on that.
Yeah, I mean, I actually
let me bet real quick.
Yeah.
I actually wrote a note that came out this week about prediction markets because we're going to have prediction markets ETFs coming to market in the next week or two. So I don't know
bullish
if you're
or bearish.
I am extremely bullish on the prediction market ETFs. I think it's going to be one of the biggest new categories. But again, within reason, like the ones that are coming to market to start are going to be Democrats or Republicans are going to win the House, are they going to win the Senate, or are they going to win the 2028 presidential election? We know going back to Trump's first victory, everybody's like, oh, the market's going to tank. And then the market did go down. The exact opposite happened over the next months and years. So it kind of takes out this macro uncertainty, the third, fourth, fifth level thinking of like what this outcome is going to be.
You want to know one of my theories as to why the market's been so wrong so many times in the last 2 years? Because the market has surrendered itself and is being held hostage by the academic terrorists who have all of this economic policy of how the world's supposed to work. That's not how the world works. And so what is now happening is the market has been beating up the academics. All the economists who told you tariffs are inflationary when it's not. They told you that all of these issues were going to happen. They didn't. And so now what you're starting to see is people are waking up to the fact that maybe I should actually listen to the market, not to the academics. And ultimately, over the last 15 years, we have a very different economy. There is a world where the central bank is not going to allow us to enter into a prolonged bear market. That game is over. I do not personally believe we will see an 18-month or longer bear market in the US equities for the rest of my life. And that sounds crazy, but the central bank has perfected it. If we have any sort of weakness in the market, what do? They turn QE back on, they drop interest rates, and they print money. It's a manipulated market. You can yell and scream and say it's a bad thing for the dollar or whatever, but that means that equities are going to continue to go up over a long period of time, and so there's an entire generation of people that realize just buy the dip.
All right, well, on that note, Anthony, we got to wrap it up. Thanks so much for joining us at the desk, and I hope you have fun for the rest of the conference.
Absolutely. Thanks, guys.
All right, that was ProCap Financial CEO and Chairman Anthony Pompliano. We're going to take a quick break. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live from Consensus Miami, presented by MoonPay. I'm joined by Chief Operating and Legal Officer at Gita Labs, Rebecca Redding, CoinDesk's Managing Editor for Global Policy and Regulation, Nick Day, and our guest, GSR Chief Legal and Strategy Officer, Josh Reisman. Hey, everyone.
Hey there.
Hi, guys.
How's it going?
All right, we are going to dig into a block that's kind of focused on the regulatory space, the policy space in the U.S., so I think great three people to kick this off with. Josh, going to start with you. Some recent GSR news. I talked to GSR's Andy Bear about it recently, the BASO ETF, but want to hear about it from your perspective. Talk to us about GSR getting into the ETF business.
So we've been kind of on this interesting journey as GSR, right? Starting all the way back in 2013 and providing really being one of the main market makers in crypto for a long time. I'd say over the past 5 years, we've been on this evolution of a journey to really expand into more products and more product areas. And as we've thought about that and started to build out the asset management side of the business, one of our core constituencies now, we thought about what is the first thing we'd want to bring to market? And it was really like, when your friends ask you, what is it we should invest in Bitcoin? We wanted to have that answer with GSR flavor. And so we launched BASO ETF. It's really core holdings of Bitcoin, ETH, and Solana with signals, proprietary signals from GSR that does some rebalancing based off of performance and other matters. And so we think over time it's just a core part of our portfolio. As people start to go beyond kind of the natural, single name or Bitcoin ETF and say, hey, what do I really need to own in crypto? And I think we want to have that answer for not only our employees, but for everybody else as well.
When people ask me that, I say I don't give financial advice. I leave it there. But how far we've come from the approval of the spot Bitcoin ETF in the United States. It feels like that was just yesterday, and now we have these products that are so much more sophisticated.
And it looks really a lot like the trajectory of traditional finance market, right? Where in ETFs, you kind of start out with very simple products, and over time now you see very active products coming in all different flavors, because you kind of get to a natural saturation point of different wrappers of the same equities over and over again. And I think it's kind of the same thing in crypto is, all the major assets are going to want an ETF, and they deserve an ETF and have a natural name. And there'll be some kind of index-related products. But I think with Beso, what you're going to see is the come to market of some active products as people look to take advantage of, what is generally, maybe not in this market, but generally the natural increased volatility in the market.
And I do think we are just seeing the tip of the iceberg on ETFs, as you indicated, because we'll see these index products, but there are so many complex and different types of products in crypto, including like wrap tokens, liquid staking tokens, and things that give you a lot more optionality. So where do you see that going after we do indices, ETFs, and stuff like that?
I mean, really, the sky's the limit. I think we saw a filing just the other day that may be coming to market sooner rather than later, not from GSR, from others, on prediction markets, right? Mm-hmm. So taking returns around prediction markets and bringing those to market. So basically, any return that you can generate on chain, I think we'll see people look to find an avenue to distribute via the ETF wrapper.
So switching gears to the Clarity Act, which may or may not happen. Obviously, we saw the text released last week, the compromise yield provision. Any thoughts on if that's enough now to move this bill forward and through the Senate?
Look, the best that I can tell is it's any good compromise. Neither side's extremely happy. And I think what you saw, at least coming out of the initial compromise, is both sides don't seem to be screaming from the rooftops that they're very happy. Maybe the bank lobby's even a little less happy than the crypto side. But I think what you're going to see is a good faith attempt by the legislators to get us where we need to go, and they're ready to move on from this debate. There's other issues that are outstanding in Clarity that we need to solve in order to move the bill out of the Senate. From my sense is the senators have been working on this extremely hard and diligently, are ready to move past this issue and have found at least a bipartisan solution that they can live with. And I hope the lobbies can live with that as well.
And Josh, you must have been thinking about this for a long time, but in a world where Clarity does pass, we'll just say that, have you thought about how Clarity will positively impact GSR's business?
We think Clarity is one of the most monumental pieces of legislation in digital assets, obviously, that we can possibly consider. If you go back to the Gensler administration, we had what I would consider an increased period of regulation by enforcement, which led firms like GSR to spend millions of dollars on basically guessing what kind of tokens that we could deal with were via threat of, or face threat of enforcement. In fact, a lot of us did face threat of enforcement in that phase. So what we hope from Clarity is we can come out on the other side and have that, we use the word clarity, but I'll be more specific, is we should be able to know what is a security, and we should be able to know what is a commodity. And I should know that with diligence and with kind of high standards, that if I apply those, I shouldn't be caught off sides by accident. And that's what we think will change from a regulatory and compliance perspective, our business, to know this is what's good to deal with in the US in the commodities markets. And by the way, this is what's okay to deal with now in the securities markets and making a pathway for those assets. And I think if you kind of zoom all the way back and you look at what do we hope to come out of this, we hope two things. One is that the US becomes a center for innovation in the digital asset industry. We think it is, and we think here places in Miami like we are today, and New York generally, you see a ton of activity, but it wasn't that long ago that people, including myself, were looking at the real estate in London and saying, maybe it's time for us to consider moving out of the country. And I hope those times are behind us. And the second thing, specifically at GSR, that we hope for is really deep and robust markets here in the United States in the digital assets industry. We call it the CME-ification, is that if we provide regulated, trusted markets in the US, we'll bring a lot of that volume that's still today offshore back into the United States. And we're actually a long way from that. It's still 80% or some of the volume is offshore. So what do we need to do to set the scene both for institutional and retail to feel comfortable trading in the United States? And if we can get legislation like Clarity Act back through, we hope to see that transition.
Josh, thanks so much for joining us at the desk. We'll see you around the rest of the conference.
Awesome. Thank you all. Great to be here.
Thanks. That was GSR Markets Chief Legal and Strategy Officer, Josh Reisman. All right, Jayan Silva is on the floor of Consensus. He is a creative technologist and artist, and I think he's checking out one of the booths. Let's take a look.
Hello everyone, this is Jay and Silva reporting live from Consensus Miami 2026. We are here for 3 days of the most exciting programming. If you're not in Miami right now, you should really pivot to being in Miami right now because this is where it's at. So stay tuned and check out everything we have in store for you.
Binance is the world's largest crypto exchange, and it's spent the past 2.5 years rebuilding its regulatory standing after a $4.3 billion DOJ settlement. Stephen Mcwarter is Binance's global policy lead. He's a former FCA official who came to Binance, specifically to navigate that process. He joins us now. Hey, Stephen.
Hi. Thanks for having us.
Thanks for being here. Now, you heard my intro. My first question is, why did you take that job?
So, obviously being an ex-regulator, consumer protection is something that you think a lot about, but you can only do so much in a regulator relative to being at the world's biggest crypto exchange. So I believe, from a policy perspective, that I can influence the outcomes far better at Binance than potentially within the regulator.
Makes a lot of sense. Have you, Jen was talking about what you've been doing in the US, but what have you been doing specifically in the UK? We've seen a lot of interesting guidance come out from the FCA of late on crypto, and have you been interfacing with them?
Yeah, absolutely. So, the UK is on its journey at the moment, but it's one country that we obviously take an active interest in and engage with. The UK is at the stage now where they've decided to create their regulatory framework rather than prohibit or enforce. It's coming together. They've got their market structure, they've got their stable coins. So hopefully, all being well, it should all come to fruition later this year.
On stablecoins, I'd be interesting to, we have Genius here and we have a very robust regulatory regime in the United States, and we've seen a lot of growth there. But from time I've spent in the UK and from a lot of rumors that are, the policy rumors that are coming out, they are definitely seeing challenges to getting something across the line on the stablecoin side from the UK. Have you experienced the same?
Yeah, so I think what the UK has been in the context of stablecoins in particular is on a journey, and it's been slightly political in the sense that they've not really decided how they want to treat stablecoins. So the initial legislation was we'll just put it out there. And then there's been a lot of industry lobbying, a lot of pushback because that was less than clear for everybody. There was some discussions around various thresholds and limits, which commercially were seen as unattractive. But now, literally recently, there's a new statutory instrument that came out 2 weeks ago, I think, at the FinTech Week. And they've clearly said we're going to treat stablecoins as payments instruments, which aligns it quite nicely with the Genius Act.
That's right.
So one of the things that's been kind of fascinating to me is, we saw the European Union come up with MiCA. We've seen a lot of regulators around the world dip into crypto and stablecoin regulations, as you just were talking about. But now the US has created Genius. EU, I think, looks to be reopening MiCA. Is there an extent to which countries are looking at, the U.S. as a market, generally speaking, a large market, as, something to follow or look at when it comes to reopening or revisiting crypto regulations?
Yeah, ex-regulator, and I was always mindful in my role as a regulator that whatever the US did, it had an outsized impact on the rest of the world. So I think it's exactly the same situation here in the context of how's this crypto legislation going to evolve? What's the Genius Act going to look like, and how's that going to potentially impact the rest of the world? Because obviously you've got reciprocity, you've got the mutual recognition for foreign issuers, so you need to get some form of alignment across borders for the whole system to work properly. So I think everybody's looking at the US to see how the legislation lands, to make sure that A, it's commercially viable, but also it works globally.
From your perspective too, as someone who deals with compliance issues, obviously there's a lot of as you mentioned, reciprocity agreements between the U.S. and other countries. At what point do you have to start paying attention, as the U.S. works its way to building this legislation and getting it through? what's the point where you have to start saying, okay, now we know what rules we have to look for as an exchange that's not necessarily operating in the U.S., but you have obviously U.S. arms and touches.
Yeah. I mean, you're right. We don't operate in the US, but the legislation is obviously incredibly impactful globally. And I think the big key takeaway is that it's clear in many jurisdictions globally what the rules are. And when I say the rules, I mean the legislation. And you've got that in Europe, as you say, but it may be reopened. You've got it in many other jurisdictions, including APAC and the Middle East. So I think what America needs is that clarity, and it needs to get that legislation finalized so that everybody knows what's involved. And that brings the adoption because, within some of the large institutions, the risk, the compliance, the legal functions, they need to sign off on these decisions. And it's very difficult for them to do that when you don't have the legislative clarity. So that's ultimately what we're interested in seeing as well, because that will inform our broader strategy.
On the topic of stablecoins, I do want to ask you about a story that made headlines recently. Binance taking a significant position in USD1, the stablecoin obviously connected to World Liberty Financial. Just talk us through, how you make those decisions about concentration in an issuer, and what kind of conversations were being had when that partnership, or not that partnership, but when that was evaluated.
Yeah, I mean, Binance has many stablecoins listed, and as a large global entity, it obviously has to engage with very many different entities. But the actual investment of the USD1 into Binance came from a separate legal entity based in Abu Dhabi. It was their decision to purchase those stablecoins. Obviously, as a digital asset first company, we're quite happy to have a stablecoin investment into our business rather than traditional fiat because it aligns very well with our values.
All right, and lastly, I know I said that was the last one, we're here at Consensus 2026, lots of buzz happening around the conference. What do you hope to leave here with? What kinds of conversations are you hoping to have?
I always like to take the temperature. Yeah. It's just good to kind of level set and make sure that what I'm thinking and what I'm doing aligns with what's happening on the ground. So I'm always keen to try and pick up as many of the events and panels as I can, just to understand exactly what the vibe is, rather than me kind of living in my ivory tower and being slightly out of touch.
Well, I hope that you get to do that, Stephen. Thank you so much for joining us at the desk. It was a pleasure.
Thank you.
That was Stephen Mcwarter, Global Policy Lead at Binance. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Mike Cagney co-founded SoFi and then built Figure, which has originated nearly $20 billion in on-chain credit and just launched the first stock to be issued, traded, and settled entirely on-chain without touching the DTCC. He joins us now. Hello.
How are you?
We're doing fantastic. How are you doing?
I'm doing well. We're close to $30 billion in on-chain credit at this point. So.
Okay, 30. Thank you for correcting me. We got 10 extra $billion on there.
It's a 50% increase.
That is actually insane. I mean, I was going to start with a little game, but let's start with that number, $30 billion in on-chain credit. Talk to us about what that signifies for where we are.
So it's interesting because over the last couple of years we hit an inflection point where in the beginning we were using blockchain under the thesis that we could improve capital markets, reduce costs, improve efficiency. But it was hard in the very beginning. The hedge funds that would buy the loans didn't want to deal with blockchain, they didn't want to deal with wallets. And we actually left money on the table. People would pay us more money to buy loans if they didn't have to deal with blockchain. At some point along the process, we were able to capture and realize and demonstrate the value proposition, the transactional efficiencies, the liquidity, the access to DeFi, and that's when it flipped. And everyone wanted to be leaning in on blockchain and really accelerated the growth. And so, if you look at the last couple of months, we did 1.4 billion last month, 1.3 billion the month before that. We're still growing 100% year over year, which, as a 7-year-old public company is not a normal growth rate. But it's really just demonstrating the value proposition that blockchain brings.
I've been on the Hill and people have actually referenced your company and you being there as something that they find to be pretty compelling and a great use case. And it's really around talking about needing clarity, the actual bill, not just the clarity it will bring. But have you thought about how clarity will impact your business and in a positive way?
Yeah, there's two key things at Clarity that are important to us. One is the protection of DeFi. And what we've been able to do is go out and convey to a lot of the senators and Congress folks that are working on Clarity, look, if you take a Warner from Virginia, for example, we've done $1 billion of loans in Virginia, and we're able to lower those costs because of DeFi. If you look at Warnock in Georgia, same thing, well over $1 billion of loans there where we've lowered the cost because of DeFi. And so it's important to codify those protections because while we have regulators today that allow for activity that we're doing, it's not clear under law how that plays out, and a different regulatory regime can have a different interpretation. So getting that clarity, no pun intended, is so important for the industry because we future-proof it. So it's hard to make significant CapEx investments and things that might go away in a couple of years because of a change in the regulatory regime. And so that's a really important thing. The second thing that we're advocating for is what we call modernization of the transfer agent. So we have a yielding stablecoin called Yields, YLDS. It's a public fixed income security. It's backed by treasuries. It looks just like a Genius Act coin, but it's a security. It pays interest. And the benefit of that, obviously, is that as a holder, you get interest. The downside is, as a security, you need a transfer agent to actually keep track of who the holder is. So it doesn't have the same utility value that USDC or USDT would have in DeFi applications, for example. And so what we're advocating for is that the transfer agent can satisfy its responsibility by simply knowing the wallet address. Because what is a transfer agent supposed to do? They're supposed to drive quorum when you need to vote on securities, when you need to distribute dividends, things along those lines. You can do all that with simply the wallet address. And that opens it up and brings the same utility to yields that you have with USDC or USDT and levels the playing field. And kind of ironically makes the whole yield on coin somewhat moot because now you have a coin that yields, that has true utility.
So you mentioned just now that the SEC has been pretty friendly towards the crypto industry over the past year and change. Most of that's been, I think, staff statements and guidance, but is there anything you're looking for that would be more concrete in lieu of legislation or while we wait for legislation that would make you more comfortable with CapEx expenditure?
Yeah, I think the crypto task force has done a good job engaging and talking through issues that are important to industry. I'd like to see them start leaning in with some exemptive relief. For example, in the transfer agent issue, one of the things that we're advocating for beyond clarity is potential exemptive relief from the SEC to that end. The crypto task force has the ability to provide that. And so, I think Commissioner Peirce and that task force has done a phenomenal job leaning in and really trying to advocate for the industry. And so we'd like to see, a little bit of traction and some potential exemptive actions that help the industry move.
All right, are you ready to play the game?
I'll reluctantly play the game.
Get those paddles out. So for everyone who's watching, who's just tuned into the stream, two paddles, right? You can hold them up. You can show our audience.
Yeah, but where's the one that says not enough? Like these are both negative, like overhyped and underrated. Where's the awesome paddle?
You can hold them both up.
Yeah, you're the Goldilocks of this game.
Ground.
It's like two negatives making a positive. All right, I got it.
All right, we'll give you an easy one first, and then we might just throw in an oddball.
All right.
You got it?
Yes, I got it.
All right, easy one coming at you.
All right.
Clarity.
Oh, underrated for sure.
All right.
The Clarity is such a monumental bill and so important to pass. So I'll call it still underrated, underappreciated by the broader universe.
All right. Tokenized real estate.
Overhyped.
Why?
Way overhyped. Because why do you put something on blockchain? You put it on blockchain primarily to allow for collateral in DeFi applications. Tokenized real estate isn't liquid. And so the idea that you're going to take an office building in Topeka and put it on blockchain and all of a sudden it becomes liquid and you can use it for all this cool stuff, it doesn't exist. And so it's been, I don't get invited to the RWA conferences anymore because I always say this and everyone gets mad because everyone's favorite use case is putting that dumb office building on blockchain. That's definitely overhyped.
I have a spicy one, the DTCC.
Way over. Because all DTCC is trying to do is take the old system and put it on blockchain. And the reality is blockchain, you don't need the DTCC. Right. It is the registry, right? And this is some of why, some of the disruption that blockchain can cause is somewhat slow coming because the normal incumbents who would be driving that disruption usually disrupt at the margin. And it's very difficult for them to disrupt when their whole business model goes away. And so, I understand why there's urgency to do this. I think certainly our launch of our equity on public blockchain has brought a whole flurry of press releases from the NASDAQ and the NYSE and DTCC, but I just don't see anything substantive different about what they're doing.
All right, we gotta leave it there. Thank you so much for playing that game with us. It was fun, Mike.
Excellent.
Thanks for joining us.
Thank you.
Thanks. That was Mike Cagney, CEO of Figure Markets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. But new polling from Public Opinion Strategies commissioned by CoinDesk shows the industry still faces a major trust gap with voters. The survey finds skepticism around crypto's economic role, strong support for more regulation, and significant concern about senior government officials having ties to the industry. Joining us now is Jim Hobart, partner at Public Opinion Strategies. Hello.
Good afternoon.
Well, a lot to unpack there, right? So I just want to level set here. CoinDesk commissioned this poll. Talk to me about how many people were surveyed. What were some of the things we set out trying to find?
Sure, so it was a survey of 1,000 voters nationally conducted online, and it was really a pretty broad survey. General perceptions about cryptocurrency, and then a specific look at the role crypto could or could not play in the 2026 midterm elections.
What was the age, just especially because there was some skepticism and things like that, what was the age range of people who were surveyed here?
So age representative of a likely electorate, which means it's about 22-23% age 65 plus, around 40% age 18 to 44, and then the rest in the middle there. And it's good that you brought up age because that is, not surprisingly, but the biggest divide we see on perceptions of cryptocurrency is driven by age. What 18 to 44, really 18 to 34-year-olds, the way they perceive crypto is much different than those age 45 plus.
Can you put a little fine point on that?
Sure, it's much more favorable opinions among younger voters than among older voters.
And generally, I know you said that the age range was representative of the electorate, but in terms of projecting what the electorate will look like in 2026, do we think that there will be a stronger position of younger voters coming out? Because that's a lot of what you hear about in the media.
That is going to be the big focus of both sides as we look into the 2026 election. What Republicans want to do is turn out a lot of these younger voters, especially younger men, who voted in fairly large margins for Donald Trump in 2024. What Democrats are hoping to do is return younger voters more back to their columns. So that's going to be one of the key fights as we get closer to Election Day in November.
Nick and I were talking about some of the stats yesterday, and some that stood out to me were 73% disapprove of senior government officials having ties to the crypto industry. They didn't mention any specific. 62% don't trust the Trump administration to oversee crypto. And I believe that Nick also told me people are more in favor of banks than they are of the crypto industry. Nick, feel free to jump in with any numbers that stood out to you, but talk to us a little bit about what that tells you.
Sure, I would say a couple things. One is there's very much a perception, and this crosses partisan lines of, hey, we don't want politicians invested in things that they are going to have a role in regulate. You see that a lot with like the Nancy Pelosi stock trades, right? There's a tracker that's like, hey, what's she doing? And I'm just going to follow that. So I think some of that. On Trump and crypto, that pretty much tracks his overall approval rating, and more we see that right in this red shirt, blue shirt form of politics we're in right now is, hey, if I approve of you overall, I approve of you on this issue. If I disapprove of you overall, I disapprove of you on that issue. So we don't see much of a delta there. And then on the banks, look, people are still going to retreat to prefer what they know, right? People are very familiar with banks, they understand banks, and so that's going to be easier for them to side with something that's frankly still quite new to people.
So, one of the things that was kind of a bit surprising to me from the poll is neither party really had a plurality, wow, I can't speak today, of, trust in terms of crypto regulation. It was a slight edge to Democrats, 27% to 25%. Is there anything we can really draw from that split, though, in terms of how voters might think, okay, do I want this party or that party to craft rules overall?
What I think it really represents, Nick, is an opportunity for both parties, right? This is not, and we see the same thing with AI. AI, crypto, they are not issues that have a real partisan bent yet, right? Both parties are trying to kind of figure it out. It's not like immigration, right? Traditionally a Republican issue. Healthcare, traditionally a Democratic issue. Cryptocurrency, AI, still very much up for grabs in terms of which partisan is going to take that mantle.
I think that's right. In the current environment, I think there was a very heavy anti-tech, anti-crypto feeling prior to this, and now there is this understanding that it's up for grabs, as you said. Is there anything in the poll, at least, and I want to go back to the age thing, that sort of indicated the split there on that kind of front?
Yeah, I think where we do see some differences is the gender gap, which has always existed in politics. We're starting to see more and more of a gender gap among younger voters. Younger men, much more open to, supportive of Republican candidates. Younger women are the strongest voting bloc for Democrats right now. And so you're starting to see more of a gender gap open up specifically with younger voters, and that certainly shows signs right now of continuing.
Jim, thanks so much for joining us. It was a pleasure having you on.
Great to be with you.
That was Jim Hobart, partner at Public Opinion Strategies. All right, Nick, we are going to say goodbye to you. Thanks for joining us at the desk. I know you have a busy conference ahead, so maybe we'll catch you on one of the stages.
I'll see you tomorrow.
All right, we're going to take a quick break. We'll be right back. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
If you're just joining us, we're coming to you live from Consensus Miami. I'm Jen Sadassi, here with Rebecca Reddick, and we're joined now by TRM Labs Global Head of Policy, Harry Redboard, and Principal and Founder at Sternhill Group, Alex Sternhill. Hello to you both.
Thank you so much. So excited to be here with you guys.
Absolutely, great to be here.
Oh, look at that.
No,
we should do it too, yeah.
This is the most exciting regulatory conversation, I think, that's going to happen at Consensus.
I agree.
Not to put the pressure on anyone.
Yeah.
All right.
I am doing the regulatory panel tomorrow, but agree this is the most fun one.
Today.
Today.
The most fun one today, all right? Okay.
Every year we sat here just like this. And I'm talking Boston, Toronto. Last year in Toronto, you said we're going to run together in Miami.
An international thing. I don't know if I have the shoes for running. All right.
As you are.
We'll see. I gotta start training. Maybe we'll see you in Hong Kong or Miami again next year, and we'll see how it goes. All right.
Awesome.
All right. Okay. So maybe I'm gonna run in the future.
Okay.
But we're gonna play a game right now.
Yeah, we should do the over/under hyped on you running.
Let's do that. Oh yeah. Okay. Ready? If everyone looks into their desk right now, you're gonna find 2 paddles.
Not me.
Not us. We are the hosts of the game.
Fine.
All right. We have an overhyped paddle. Everyone hold up your overhyped paddle so the audience can see. That's
that's
wrong
underrated.
One, Ari.
Oh my gosh, Ari.
Why isn't it just on one panel is what I want to know.
There were some logistical issues that we couldn't work out.
Giving direction. All right, let's get to substance.
Let's get to substance. All right, so we've got it, right? We're going to hold up the paddles once we say a topic. Rebecca's got us with the first topic.
I'm going to start with Ari. Ari, especially in light of everything that's been going on in the crypto space, a lot of the headlines, North Korea, DPRK, overhyped, underrated.
Yeah, you and I talked a lot about this on your first episode. North Korea is still underrated. And we're spending a lot of time on North Korea, obviously. You and I have had a lot of conversations. But the reality is 76% of all hacks so far in 2026 have been attributed to North Korea.
Yeah.
They have been attacking the ecosystem at scale and getting better at it. And when I say underrated, I think it's still obviously we saw drift and the social engineering went that. It's chilling to be at a crypto conference and know that story. But to me, drift is probably one of many protocols that they were having those conversations with, and that's why I'm going to put the underrated up here.
So I'm going to take the other side of that and say I think DPRK is overhyped because I think the industry actually has the tools to do things to prevent the type of hacks we've seen, and we haven't put enough time and resources. You have, Alex has with his clients, many people in this space have been working on this, but there's more the industry can do to put preventions in place.
Yeah, no, I think North Korea has a playbook, and I think the industry does too. So I think that is what we're going to see in the rest of 26 is the industry fighting back. And I have all kinds of views on how to do that.
And everybody needs to be running to do it. All right, Alex, we have one for you.
Well, I think Alex should answer the same one first.
Oh,
no, you don't want to get involved?
Poor guy.
I'm sitting next to one of the guys who's best in business in dealing with threats like this. So I have to agree with him. He's absolutely right. I think some of the things that are happening in Washington right now are designed to do exactly what Rebecca's describing, which is, helping people get the tools in place and legal certainty to be able to fight the threats that are certainly coming and will increase in nature.
I have to agree it's underrated. I mean, we had Roman Storm's lawyer at the desk earlier today, and one of the major arguments that the government has against Roman Storm is that Tornado Cash was used not to only code, but a service for North Korean hackers. And so I think it's really still a huge part of the conversation that's happening over in DC. And if Roman Storm is not successful in this case, it could set a precedent where we hear more of this narrative.
Yeah, I think that's a hard case, and I think we'll see that case sort of play itself out. One thing to flag that's really wild is in the last 24 hours or so, we put out a report last week on sort of overall hack numbers and that 76%, and just yesterday, North Korea came out and said, we're not behind these attacks and disputed these claims. And I thought, wow, what a crazy world I'm living in where North Korea is coming out to dispute our reports. But look, I think they've become more and more sophisticated and they're using more and more of these services. And we have to make sure bad guys aren't conspiring with them and are in fact just developers who are building important tools for both lawful and illicit actors.
Yeah. Alex, we'll put you on the hot seat now with your paddles. And you did, you referenced clarity and that it would, put a few things in place that would, I think, help to prevent these hacks and really motivate the industry and push the industry to do that. But where are you on clarity's passage? Overhyped or underrated?
It's... do I put my paddle up?
Yeah, you got to put the paddle up. Hold your paddle up now.
I actually want to know what he has to say on this. Yeah.
No, look, I think that I think we're going to get it done. I think it happens. I
so
think it
underrated.
happens. I think that's an underrated.
Okay.
It's not underrated for me because I've been there for a while.
Yeah.
I will tell you, this is a critical next 3 or 4 weeks. Members are really going to have to, and staff are really going to have to make some very difficult decisions. It feels like there's a clear path forward, and in the next 3 weeks, as soon as we can get through this next sort of work period, which is the end of this month, the smoke signals should come up, and if the final touches aren't done, it's still going to be sort of a resounding. We'll be here by the end by the end of the Congress. So I'm a big plus here. I think it's going to happen. Pray with me.
What do we got to watch out for? It's going to be another 3 to 4 weeks that we should be watching. What are the things that we should be watching
Right,
for?
so here are the data points that I would just quickly do. So number one, on Friday is not the last day, but pretty much the last day for a bill to be noticed and a new ANS or a chairman's mark to be put out in front of before the Senate banking can mark it up next week in committee. That, if it's not done by Friday, it may slip an additional week. And those 2 weeks are really the main time period that members of Congress are focusing on, that the chairman has talked about in marking up this bill inside the Senate Banking Committee. And if you see that notice of a markup, it means it's on, and we're gonna have some votes, and hopefully it will be a bipartisan markup that can then get 60 votes on the floor of the Senate.
Alex Airy, thank you so much for joining us at the desk. I feel like it wasn't long enough.
It wasn't.
Definitely not long enough.
No, but you can finish it tomorrow when we all go running together in the morning.
Okay, I didn't commit to that.
See you out there, too.
All right, maybe you'll see me out there running. That was TRM Labs Global Head of Policy, Ari Redboard, and Principal and Founder at Sternhill Group, Alex Sternhill. Rebecca, I think you're also leaving me.
I am.
Everyone is leaving me. I think I also get a break, which is awesome for me. We're going to take a quick break. We'll be right back. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
I am Sam Yu, and we are back at the live desk. Jen is taking a break. I am joined by Farouk Sarmad. Farouk, Myriad Markets, King of Social. You are just doing everything. Welcome to the desk.
Sam, thank you for having me. 5 years doing media and crypto, and I finally made it to the big leagues. Look at me.
In addition, yes, you are finally in the big leagues. Although I would say interviewing the president maybe ranks number 2.
This was more stressful.
Of course. We also have Leah Callan-Butler, and of course joined by Mert Mumtaz. You have been on fire recently, talking about everything from Zcash and privacy, what's happening on the Solana ecosystem. I assume you've been to Accelerate.
Yes, sir.
What's your take of what's happening over on the Solana side?
Well, Solana is, I would say, the top 2 contender for the house of finance, so to speak. It's kind of between Solana and Hyperliquid. And we are really focusing on trying to make decentralized trading venues and markets and the rails for money and capitalism to be on par with centralized counterparts, but while giving users all the benefits of crypto. One of the things that Solana has been lacking on, which we can talk about, has been privacy. And so we actually, Helios, we just acquired a little team, which it's not super public yet, but whatever. And we're going to be starting to build Solana's privacy layer from the ground up.
I know you're somewhat of a Zcash maxi. What are you going to be taking from the ideas and the ideology of Zcash and bringing to what you're bringing to Solana?
Well, so Zcash, many people don't know this, but everybody's heard of zero knowledge and ZK proofs. What you might not know is Zcash was the first production system on Earth in history to have that actually live in production.
Really?
Right, so they had some of the absolute top-notch best cryptographers in the world working on this, literally the inventors of ZK. And it took a long time, right? Zcash was released a while ago. It took a long time for ZK to make advancements such that it's usable at scale and it has good user experience and whatnot. And now, over the past year, 2 years, it has progressed to the point where it does scale at planetary scale. And that's the story kind of we've been telling, which is why Zcash has been just starting to accelerate. And from Solana, we obviously take the cryptography, the patterns of user experience. So Zodal Wallet, which is the new team on Zcash, they've kind of laid the way. And so, but it's, I call it Zolana, right, with a Z, where Solana is where you do trading, but Zcash is where you kind of encrypt your money, where you have your little Swiss vault to the side that nobody can take from you.
Now, Lily Lu at Solana very recently kind of came hard against on-chain gaming. That's the world you spend a lot of time in.
Yeah.
And I'm just wondering if you had any thoughts about the realities of on-chain gaming, where we are today, and was Lily mistaken in her opinion about it?
I think if you look at the iteration that we've just been through, the first cycle, from play to earn in late 2020 all the way through to today, there was just a report out, I think, in the last couple of weeks that said 93% of blockchain gaming projects are now dead. And it's true. If you look at the industry, it's very much struggling. There's been a lot of high-profile studios shut down, games shut down, VC money appears to have evaporated, which is quite sad. But I also think that we've learned a lot in that cycle, and I really don't think this is the end of Web3 gaming, but we have learned a lot in terms of things like incentive models that are too focused on token rewards and things like that. We realized that people were coming in for the wrong reasons in those games, and it was very difficult to keep them in the game, keep them playing. They didn't necessarily find the games fun. And very difficult to monetize. But there are some bright sparks on the horizon. I would have to say Eve Frontier, which is a game that we've been advising for the last year or so. That's made by CCP Games in Iceland. I think they're really in a category of their own. They're building a very much blockchain-based, deep blockchain integration game. They just finished a hackathon, so it's all built on Swede. Sorry. But I would actually love to hear more from you, Mert, in terms of what you think of the use case. But it was really interesting to see what people were doing in terms of building these blockchain-based solutions for this very expansive universe, when there's actually nothing in that universe right now. Players can create everything right from the beginning. So, I think I'm still extremely bullish on the future of Web3 gaming, but I think it's going to look very, very different to what we saw in, say, 2021. But what do you think of gaming as a use case on Solana? I mean, it sort of sounds like it's been abandoned somewhat based on Lily's tweet. I was a bit like, oof.
Sure, well, first of all, I think Lily was trolling because that tweet was followed by an entire new X account by Solana, gaming on Solana. So it's kind of a rage bait. I would say two things. So one of them is that I would say on-chain gaming already exists, but nobody thinks of it this way, which is meme coin trading. I would say meme coin trading has everything you actually look for in a game. It's a PvP environment. There's no real value being created. People kind of just do it for fun. And that's one form of it. Now, I do think gaming in crypto will work. I do think that, and I wrote a piece on this, you first need the obvious use cases to mature, right? You need the financialization, you need everybody to have public-private key pairs, and the integrations with crypto rails. And then obviously AI is going to make things abundant, and the word economy literally is the study of scarce resources, right? If resources were infinite, then there is no word economics, because there's nothing to reallocate. And so, as I would say, maybe in the next year or two, crypto really scales to everybody with a phone, that's really when you're going to start seeing non-hyper-financialized use cases, which will involve gaming.
So I want to bring it to what you said, because I was going to say this, like meme coins are kind of the gaming on Solana. We saw last cycle was the Solana cycle, arguably. Meme coins were at the forefront. That's actually why Fortnite kids are so good at this meme coin stuff. What do you think is going to be the narrative this time around for Solana? Because if meme coins are less popular, though I do believe they always come back, we're seeing Dogecoin, Farcoin, Pengu, lead the way here alongside, of course, Zcash. But what is going to lead this cycle? What's the narrative for Solana this cycle?
Well, I would say the way I think, and if you look at the history of crypto, right, how has it progressed? The first wave was Bitcoin and people speculating on Bitcoin. Okay, the second one was, we have programmable Bitcoin now, which is Ethereum. Okay, then you have the ICOs, then you have the NFTs, then you have the meme coins, and then now you have perps. But the theme is pretty similar in that you are speculating at scale and you're trading and you're trying to increase access to markets. So I think of Solana as the unified API for money markets and capitalism. Yeah. Which is to say, anything you can trade, you will be able to trade on Solana without permission from somebody at basis points that are similar to an exchange with transparent fee structures and most importantly, composable things, right? So you can, one example is like you can lend your fart coin and then take out some NVIDIA stock against it. and so you can do all sorts of interesting things like this. And there's going to be obviously a lot of, so Solana's been pioneering things like prop AMMs, which are these super fast market maker structures that have emerged on Solana. And it's crazy that a global blockchain of thousands of nodes can give you the same price execution as a Binance without having a single source of failure. And so anything that can be traded will be traded on Solana. That's what we rely on. I think privacy is something that was lacking for the hedge funds of the world, the institutions of the world to come on chain and place encrypted trades. But my team is going to solve that one.
All right. I'm surprised, Farouk, when you were given the option, you could have just said on-chain gaming has moved to prediction markets. That's where I think we're at today, to be honest. Like meme coins will come back, but prediction markets are where everyone's putting their attention right now. And I don't know if it's that dissimilar from the gaming sort of ideology. Mert, we only have a minute with you left. You did a session today, privacy, the future of privacy on blockchain. We have a lot of folks here who've been talking about privacy. It still feels like early days. And we have institutions coming in, and they want privacy, but they may want it in a different way than the sort of core crypto G-Gen don't want it. So what's your thoughts, like what were some of your talking points for your session?
Well, I would say, so I have a few one-liners here, which is to say that crypto without privacy is not crypto. Which is to say, how did the industry start? It was started by the cypherpunks. The cypherpunks' entire operating module is using cryptography for privacy such that you have individual choice and freedom. That is how the entire thing started. Somewhere along the way, we were so busy trying to get legitimacy for Bitcoin. The TV ads would be like, people are using Bitcoin for ransomware, which it would be the worst possible tool to use for that because it's completely trackable. So somewhere along the way, we kind of made these compromises without really realizing them. And now we're in a state where institutions want to come on chain, but then even they're surprised. They're like, hold up, we can't just put everything transparently on chain. Our users are going to be exposed. I don't want to, go to a vendor and pay for coffee in USDC, and then he's like, oh, Mer, I see you recently gotten a hair transplant in Turkey. And it's like, look, man, you weren't supposed to see that. Okay? And so that is to say, and by the way, this is a problem that is, it's a network effect.
Yeah, of course.
Meaning, the more transparent you become as a chain and you remain that way, and let's say I interact with Farouk on chain, now people know that we are related forever, right? And so anything you do on chain can and will be used against you perpetually going to the future unless you encrypt the money. And that is what crypto was supposed to be about.
Yep.
And we're at the very beginning stages of that coming back with things like Zcash.
All right, well, Mert, that's all the time we have. Thank you so much for stopping by. Farouk, Leah, you guys are going to hang. We're going to bring on our next guest, but first we're going to go to a break.
All right, y'all, we're here at the National Cryptocurrency Association's booth. Here they have this little amazing hideout called Crypto Confessions. People can pop in, give us their hottest take, 30 seconds. Let's check it out.
I wish more people knew how crypto is freedom, how crypto is empowering, how crypto gives us the ability to control our own finances on our own terms. This is giving us an opportunity to take advantage of early financial innovation tools that can help us advance in our life, in our wealth, in our families.
I mean, when I think about the word crypto, I think about freedom. I think about the ability of people to be able to take control of their own economy, to be able to learn a new way, to be able to build wealth and to be able to grow in their lifestyle. And I think it's exciting what's happening. And so crypto is all about freedom for me.
I wish more people knew there is more to just investing in Bitcoin about crypto. Like, there's so many use cases for cryptocurrency in our world. If you're in a controlling relationship, crypto and cold wallets could be your way out. There's lower fees. You can transact all over the world. There's more to the, just becoming a millionaire from crypto. There's real world use cases that can change our entire lives.
I wish more people knew that crypto doesn't have to be scary. Crypto isn't for the crypto bros. It's not meant for the super wealthy. It's not meant for the institutions. It's meant for the people. It's meant for the masses. Crypto is self-sovereignty. It's the only thing that gives you full control over your own money. And it doesn't have to be scary. So that's what I wish more people knew about crypto.
Which part of it? And welcome back to CoinDesk Live, sponsored by MoonPay. Rajamannar, you spent 12 years as MasterCard's Chief Marketing Officer. What a run, by the way.
Thank you.
You are someone, we spoke on the main stage a little earlier, and you are someone who has really seen fintech grow from just finance into true financial technology. When you look at a conference like this, what sort of comes to mind for you as the idea of the evolution of finance?
First, I would say is optimism. And the second thing is excitement. So those are the two feelings which come to me, because if you look at the possibilities of how you can bring more trust into the system, more transparency, more efficiency, taking away all the friction that is there from a consumer experience point of view, the possibilities are incredible, absolutely incredible. One small thing, if you will see, say I'm sending money to my sister in India. I want to send her $100. There are so many middlemen in the remittances process that she barely receives $93. But if I were to convert my money into a stablecoin, my sister has a corresponding account, we spend a few pennies, and the efficiency is incredible, and the transfer is almost instantaneous. So those are the kind of things which we are not even beginning to scratch the surface, and therefore I feel very excited about the possibilities. And I think given the kind of infrastructure which has gained a certain level of critical mass, I think we are at a good place where there would be a point of inflection for mass adoption pretty soon.
Farouk here is one of, I would say, crypto's best storytellers. He's been doing it for a long time. He's got a great following. He puts it out there and has recently started a number of crypto companies. What's your advice to someone like Farouk who really wants to be the next MasterCard?
Pay me a lot of money and I'll take care of you.
All right, perfect. All right, you heard that, Mr. C? Was my CEO watching this?
Cut that.
But on a serious note, I think, firstly, people who are in the technology world, including crypto and fintech world, they tend to underestimate the power of branding.
Absolutely.
And the power of storytelling and the need to simplify consumer experience. What happens behind the scenes is incredibly complex, and it's the sophistication is when that complexity happens only in the back end, but when it comes in front of the consumers, it's a seamless, frictionless, delightful experience. One part. Second, people are scared about this field. If you're an early adopter, you say this is almost non-brainer to get into this space. But if you're not an early adopter, two things happen. One is it's all mumbo jumbo. Too technical. People have that mental resistance even to learn about it. So as an industry, if you want to grow, not just as a company, but even as an industry, you need to educate the consumer without freaking them out.
Yeah.
That's true. Third, because people are dealing with money mostly, you need to make sure that there is trust. And trust is not earned automatically. It has to be intentional in every single one of your efforts to be able to get that kind of, earn that kind of a trust. I would say that's what is true for any company within your space as well as for the entire industry.
So do you think, so obviously you're a branding expert. For years, I believe, crypto had this branding issue towards Web 2, whatever you want to call it, the normie world. And I somewhat feel that 10 years later, we still have this branding problem, right? Like almost we try to hide the blockchain from the lingo in crypto to the outside, because people still see this as a scam for some reason, which is pretty insane to me. How do we fix that once and for all? Like what's going to be the click?
It's not going to be a click, it's a journey.
Got it.
It's a long journey. Like till today, for example, people misunderstand MasterCard as a credit card company.
Yeah.
And I'm sure that's what 90% of the people think. We try to tell them, we are not a credit card company. We are a technology company which provides a platform which can be used by anyone to issue cards, debit card, credit card, prepaid card, whatever the damn card it is. But it's a long journey. In this case, where people don't even know the category, you have to really educate people. There has to be a concerted industry-wide effort. One company cannot just stand up and say, this is what this entire space is about. It has to be a collective effort. And I don't know if we have any association, for example, has to get together and say one of our key, priorities or objectives is to educate the consumers and the regulators. And that's a journey that they have to be on sooner than later.
Love that.
I guess shifting gears a bit, but there was something I really wanted to ask you, because I was looking at what you've been talking about with this idea of quantum marketing.
Yep.
I guess there's so many people in this room that are building crypto companies of their own. How do you even describe that concept to someone who maybe didn't even have a brand 5 years ago? They're trying to build trust and credibility in a deeply skeptical market. What would you say to them in terms of this fifth wave that's coming through?
See, always you start with a real problem that you're solving for the consumers. And give them a reason to believe your story, which has to be very simple, almost I would say idiot-proof, as to why they should believe your story.
Yeah.
Right? And it's all about making them understand emotionally and in very simple terms. It might look simplistic, but it's not simplistic. It's anything but. And if you know that this particular thing, whatever that mumbo jumbo crypto is, if it solves a real problem, whether it is my remittances or whether it is my tokenization of my assets, done in consumer speak, plain English, plain language, not in the techno speak, you do actually accomplish that. It has to always be, it's not like I have crypto, now what can I do with it? On the other hand, you have this problem, guess what? This crypto is the best solution for you. That's what creates a positive association between the use case and the entire space of crypto.
I guess there was a follow-up to that. These core tenets of marketing in terms of establishing that emotional connection, solving a real problem, does that even apply as we move into a new agentic world where now we're marketing to algorithms, not people? Like, how does that apply now?
This is such a good
Does that
question.
throw a spanner in the works?
It's such a good question. I'm asked about it most of the times, right? What is agentic? If you look at agentic in a very simple way, if it is a consumer's agent, it interprets what the consumers want, codifies it into a series of decision-making algorithms, and that's what the agent is. Now, if I delegate, I want to buy teacups, I delegate it to my agent. Now, if the agent is giving me the wrong size cups, the wrong colors, the wrong material, whatever it is, I'm dissatisfied and I disintermediate my agent completely.
Yeah.
So the agent has to learn my psychology, my sociology, my preferences, what do I like, what do I don't like, my mental makeup, emotional makeup. Now, so if you look at it, the fact that consumer is delegating it to an agent only means there is a better codification of the consumer psychology into that agent. As a marketer, I need to understand that, and it's much easier to understand today because human beings in their abstract are much more difficult to understand
Absolutely.
than the codified psychology which goes into the agentic.
Yeah.
And then I as a marketer, program my agentic to cater completely to this codified psychology of the consumer and make the magic happen. So I think that this is actually a very positive step in the right direction, and that's fascinating to me.
Fascinating to me too.
All right. Raja, thank you. That is all the time we have with you. Thank you so much for joining us.
Thank you very much. I appreciate it.
We're going to take a quick break, and we'll be right back with Yatsu.
That was fascinating.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live from Consensus Miami. Yatsu is joining us. We could not be more excited. Co-founded Animoca Brands, one of the most prolific Web3 investors, and I would say thought leaders in the space. You dropped a bomb the minute you sat down. You said, we have the right crew here, NFTs are back.
Let's talk NFTs.
Let's talk
Absolutely.
it out.
Let's go.
I haven't done it for 3 years.
Yeah. Just for the audience to know, right? The last time Bored Apes was basically over 10 ETH was in August 2021, and we all know what happened right after that, right?
We're so back.
You know, but other than that, I think it's the technology use case of NFTs have also expanded. I mean, one of the #1 use cases is basically trading of Pokemon cards.
Yep.
And a lot of traditional Pokemon card traders are like, what's going on? Why are the prices up? Because guess what? They've all moved on the blockchain, more liquidity, more demand, all that type of stuff. So super exciting in that area. And I know a lot of people, I know there was a chat earlier about Web3 gaming. Web3 gaming is absolutely not dead, sorry Lily, right? But I think this is the other thing. When we talked about the metaverse, I actually just gave a talk before where I think the metaverse is back, but it's not back in the way that we thought, because I think we all had this impression that we would go into the metaverse, but AI agents are showing us that it's actually the metaverse is coming to us, right? They're affecting our life, they're basically handling our calendar. They're also like basically NPCs, except they're real characters, and that's actually where it's going to be. We're going to have hundreds of billions of agents, and they're all going to affect our life, and that's the metaverse, and they're all going to use crypto.
Yeah, and I want to ask you though, when you say NFTs are back, are we talking PFPs? Are we talking Jack Butcher and Snowfro? Like, how back are we with NFTs?
I mean, look, I think, remember back in like summer of 2021, when I think Bored Apes was like 5 ETH, we were like, oh, it's amazing, it's great, right? I think we just have to remember that the prices were not that high, and I think a lot of people like to take those doomsday scenarios that, oh, look what it was and where it is right now. That's like Bitcoin. Bitcoin is far from dead, right? But now people are like, oh, 81,000, that's great. Remember, it was 120 something, right? But
we don't talk about that.
Yeah, exactly. However, compare that to just even just 4 years ago, incredible. And we're kind of at that moment as well. But as is with everything, just because you have a lot of NFTs, just like you have a lot of meme coins, not everyone is going to rise to the top, and that's normal, right? But we can see who the winners are. Bored Apes, Pudgies, CryptoPunks. We would like to say Mochaverse, Cool Cats. They're kind of older, they're kind of smaller, but they still have a community. You can measure that, and not everything has to be worth $1 million. I think there's strength in that.
So I have a question on that.
Yeah.
So how do you think the utility thesis has changed then? Because, back in the good old days, we talked a lot about things like ownership, we talked about identity, all sorts of things like being able to play your NFT in a game. How do you think the utility thesis has changed now? Because it seems a lot of people aren't really using their beloved NFTs for the things that we thought that they would.
Well, I mean, one of the things we've always kept saying is that NFTs are ultimate status items, right? In the sense that they represent basically your digital status. And so as digital wealth increases, the sort of things in your digital world matter. But I also believe that one of the buyers of this is not going to be humans only, it's going to be agents. Because agents need digital reputation as well. I mean, we might say, oh, it's the same, doesn't really matter. But actually, if you have an agent that you're doing business with, because it's an abstraction of something, and he happens to own a Bored Ape or a CryptoPunk, you'll take that agent a lot more serious than the agent that has nothing, right? Right? Not just because it's an asset, because it stands for something, right? And the thing is, we ask people, how many agents do you think you'll have? I have 200 right now, but most people will have, in the tens, and maybe in the hundreds, and maybe in the thousands in the future, right? We're all going to do stuff. The future is going to be for those people who can leverage those agents best, right? And what's their representation? For instance, digital identity is not important for humans as much as it is for agents because they don't have an identity at all. And I say it's a little bit like children as well, right? Like you could, because you have an agent, you could have 10 agents as you have 10 children. Well, not many people have 10 children, but let's just say, right? Not everyone has the same reputation. They could come from the same family. Same thing for agents, right? And if there's going to be 100 billion plus agents, digital identity is going to be a huge thing, but it's not going to be what we thought it would be, humans using it. It's going to be agents because they have to prove it, they have the reputation. They're going to be our representatives in the metaverse.
All right, I'm going to call my future kids agents. Yeah. All right, agent number 1, agent number 2, agent number 3, right? That's all the names are. I want to take this somewhere else.
And then put them to work.
Exactly.
Yes,
Oh, definitely. I call my little brother, he's somewhere around there in my personal Claude bot.
Yeah.
I just text him, get this thing done. Dude, done, it's finished, right? Anyway, so it's somewhat like agents. I want to take this somewhere else. So crypto is heavily institutionalized now. I'm preparing for a panel tomorrow with the big dogs. Thanks to Sam, put me on main stage. But you got to prep now. Everybody's got compliance. Everybody's IPO'd. Everybody's public. Everybody's so serious now and buttoned up and polished. It's not like the good old days, right? I got to watch what I say now. You guys are eyeing NASDAQ listing via a reverse merger later this.
Well, we're not listed yet, but
eyeing one, right?
Yes, we're working on it.
That's right. Do you think crypto has become almost too institutionalized, or like what does that mean for the OG crypto in your opinion?
Yeah, I mean, I think so. First of all, I mean, just to go back, a lot of the crypto culture changed originally when a lot of the people came in with NFTs, in fact.
Absolutely.
Right? They came in, and that was actually the widest amount of people that went on-chain. And then we've had really 4 years of really a terrible time, ranging from sort of, basically SPF, and then, of course, Gensler era. And then, unfortunately, Trump hasn't been as positive as we had all hoped, unfortunately, right? So that sort of took away a lot of that. And so the crowd that was left, I would argue, the meme coin crowd, brought in a different culture, which is different from the NFT crowd.
Yes, it is.
They didn't come in from purely for the money originally, but for a lot of people in meme coins, it was really about the quick buck, right? And so that's kind of part of where the culture changed. I think it can come back, but we'll talk about that. And now, of course, what's holding is the institutions. In fact, if it wasn't for the institutions, I don't think Bitcoin would be where it is right now. It would feel a lot more like 23, 24, for instance. But it also means that a lot of the big assets are now in the hands of what's happening in the institutions. And actually, I think that's the opportunity for that next wave, because we care about consumer mass adoption. And the consumer mass adoption, the altcoins, I know people are saying, it's dead or it's not that important, but actually, that's actually the opportunity spectrum for the new wave of retail that comes in. Bitcoin is valuable and it's one that you want to have, but you're not going to get the kind of returns that you expect. You're also not going to have the opportunity to invest in businesses early on by investing in Bitcoin. It's a macro play, right? But the altcoins are that. The only thing is you have to back those companies. And what like with the NFT space, what I tell people is invest in things that you have fun with, right? Invest in things that you love. And even if it doesn't work, it's like wine, right? At the end of the day, you can drink it, you can enjoy it, right? Don't put everything in it, right? I think that's the other thing. Because of financial nihilism, people just went all in and they just did crazy stuff, which is really not smart. But if you're having fun, it's kind of like table stakes. You can still make money, it's great, but also you can enjoy it. I think that's the attitude that we lost. If we bring that back, which I think will happen, then I think crypto will go for a really big consumer renaissance. Just make it fun again.
Let's do it.
All right, we got to end it there. Yacht, always such a pleasure. Seeing you, bringing your thought leadership, we love it. That was Yatsu, co-founder and executive chairman of Animoca Brands. Leah, we're going to say goodbye to you as well on the desk, but thank you for your contribution. We'll be right back with the rest of our show.
Thanks, Yat.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
All right, we are back. Richard Whitman. Richard, you have been at Consensus many, many times. We always love it because Richard is with Google Cloud, and I love the fact that, you know, whether it's Google, whether it's an Amazon, Meta, like we get people coming in who I think are really passionate about the blockchain and understand what it means to scale technology. So I'm really excited to talk to you, Richard. I want to start with just saying this conference has a ton of conversation around agentic commerce. What's your take on what's happening in the agentic economy?
Yeah, so I think there's two developments that are happening right now. I think everyone here, if you've been in crypto for any time, has been thinking about like open, permissionless systems. Yeah. And that's obviously great for all the things like economic liberty and freedom and people being able to transact without using proprietary rails. But if you think about where we're going with Agentic, those open permissionless systems actually work really well with agents. In other words, a lot of the unhobbling that we see around AI and payments is, well, how do you get an AI a bank account? And it's not just a technology problem, it's a legal problem, it's a policy problem, contractual. And those problems actually don't really exist or manifest the same way when you say, well, how do I give an AI crypto wallet and fund that crypto wallet with stablecoins? So what I think you're seeing is like two tectonic pieces of innovation that for a long time were thought of as separate things. You have AI over here and crypto over here.
Yeah.
And both camps are starting to realize that these technologies are accretive, right, for one another. In other words, AI and agentic commerce gives crypto a horizontal use case that it didn't previously have before. And for crypto provides a substrate for AI to be able to transact in a way that didn't natively exist with AI without the permission rails that we're all used to.
So you're saying that if I'm in crypto, I shouldn't have pivoted to AI?
Or you should be the crypto guy for AI,
exactly.
Right? Like I think that's maybe the story. If you pivoted to AI and you didn't take some of the lessons of being in crypto,
yeah.
I think it was a missed opportunity. And we're seeing a lot of this happen with respect to things like X402 and sort of the wider experimentation happening with how do I create a machine readable or an agentic first consumer experience. And people don't want agentic commerce to be, my agent does all the fun stuff, the shopping and everything, and then it just hits me up for a credit card, and then I've got to go to a website and do the thing I don't want to do. That's the least enjoyable part of commerce. So I think in many ways it's actually going to change how we buy and ultimately how we pay or settle those transactions with third parties.
I'm interested, Richard, when we think about the idea of agents running our financial lives. Yeah. I can imagine you guys have gone through this round, should we let agents run our Gmail accounts? Should we let them be able to sort of chart our directions with maps? I mean, you've had to go through a lot of this stuff. People, I think, are too comfortable saying, if it's simple, I'll take it. What are the hazards that we should think about before we just give the keys over to the robots?
Yeah, so I think we shouldn't be giving keys over to robots unilaterally, right? I think there's a sliding scale of control, and I think ultimately what you'll have over time is there will be levels of comfort along that scale where people will be comfortable saying like, my agent can do this deterministically, right, predictably, and I'm okay giving it the ability to do that. So if it wants to negotiate car insurance rates for me or something like that, I feel like there's a good outcome. I'm still in the loop, I can talk to it, but I think there are other aspects of agentic and experimentation that we've been thinking about. And one of these things is, if I have an agent that's operating in commerce on my behalf, I hope it's talking to an agent for the merchant I'm looking for, and not some other third-party agent that's sort of standing in for a merchant, but is actually posing and is actually a risk. And so we've actually thought about this, and we've built out some protocols, open protocols, in the sense that they're rules of the road for agents. So it says, look, we have a payment intent mandate and a cart mandate. So if I have an agent, I could do a simple prompt that says, please buy me shoes, I'd like a pair of Nikes, white, don't spend more than $500. Now, we've all seen a situation where we've given an agent a very clear prompt, and it's not really responded in the way that we wanted it to, right? And so if it comes back with Reeboks or something else, I'm going to be pretty upset. And so what we've decided to do is actually build open protocols that people can attach their agent, much like a harness, right? And the idea is those protocols ensure that when the agent's going to make a key decision, the user can determine how much control they want to have. So for example, they could say, you have a spend authority, unilateral spend authority up to this amount, anything over that I need to be consulted on. Or your forms of payment you can use are these forms, or you're authorized to talk to these merchant agents. So it doesn't end up talking to any merchant agent or potentially a scam merchant. So I think that's the kind of work that we're doing, which is, certainly there's a lot of work being done to improve the models at Google, but then the other part of this is, can we build guardrails that are open and agnostic to payment and to AI model that users and merchants can leverage in order to create a more predictable payments experience and prevent the kind of the parade of horribles that we all talk about, whether it's taking the keys or buying the wrong product or what have you.
Farouk, I'm wondering about you. You're in a lot of chat groups and in personal IRL discussions with some of the more innovative people in crypto. How many of them are working on active trading bots? Like, how many of them are really looking at giving money to the agents to let them do things on their behalf?
I don't know about how many of them are giving money to the agents, but I know that every one of them are working on it. Like even us over at Myriad, like we have, I don't know, over a dozen agents working in the back end, whether it's from like, even at Decrypt, right? I'm sure you guys do the same thing. CoinDesk, like articles, this, that, like just agents just using a platform, creating markets for Myriad, helping us in the back end, etc. Every single friend, even Ovi, right, over at Rec Brand, is running in a drinks company with agents, right? So every single person I know that is somewhat smart and forward thinking, as somewhat of a layer of agents working in the back end of them or their company. We have a lot of them. Every employee of ours is now recommended to start learning how to use these agents. It's very important.
And in the same way that a lot of folks in the agentic space are saying, well, agents should get a wallet, should they also get an email? Should they also get identity? Like, how do you look at that as well?
Yeah, so I think there are opportunities for that. And again, we've kind of anticipated this. So we've added components to this that relate to identity, where you can say, look, the agent can borrow or use the verified credential of a bona fide person, right? It says like, this is Rich's agent. But the agents themselves can also have identity through something called an agent card, which is the idea that like, look, I'm an agent, I'm coming from the merchant, these are the things I can do, and it can show that to other agents, and other agents can interpret that information as, okay, this is a verifiable credential for the agent, so it says it can order things from name your big box store, it actually can do that, and it can accept these forms of payment. So that I think is going to start getting unhobbled, and we're talking to a lot of folks who are thinking about the identity problem, because it is not just, is the agent acting on behalf of a user who's actually giving it the authority, but it's also, is the agent what it purports to be? Is it actually an agent that helps me shop or trade or buy an asset? And I think, just to give you a sense of how we think about this, because all these questions are the ones that everyone is asking, it really begs the question, for any net new innovations that are happening around the digital asset space, how are we building infrastructure that is sort of agent first or contemplating this future? So if you're building a blockchain, how are you making sure that that blockchain can handle high throughput payments that would be required in an agentic future? How do you make sure that identity on the blockchain can be instantiated, that it can be used as a source of truth? So these are the kinds of challenges that we see, and it's actually one of the big opportunities of being able to do things like build our own blockchain at Google, work on MPC infrastructure and those kinds of things, because it dovetails so nicely with the other parts of our business around AI.
And you just dropped the nugget. You guys are building your own blockchain. You're building a universal ledger. We only got 1 minute left, but I would love you to describe what that is.
Yeah, so universal ledger is a high throughput planetary scale blockchain that's designed for cross-border payments. So we looked at the payment space, and we viewed blockchain as something that could be the most unique innovation that would drive real disruption in payments, and that's sort of like the perfect product market fit. One of the challenges that we saw was a lot of the large institutions that were looking at getting into crypto really felt like they had sort of a false choice. It was like, it's either stablecoins or it's the old stuff. It's either tokenized assets or tokenized new synthetic assets, or I've got to go to old school equities and old school ledgers. And so what GCUL is designed to do is essentially create a bridge so that a bank can get the benefits of a stablecoin, instant settlement, 24/7, borderless transactions, and incorporate that around an asset it's very familiar with, which is tokenized cash, tokenized deposits. And so that's really the goal there, is like we want to start with cross-border payments, but it doesn't end there, it goes to RWAs. And just going back to the agentic point, every conversation we have with a financial institution, they're not just saying, well, what happens tomorrow? We all know tokenization is coming. So that's tomorrow. What's happening in 2 years? A lot of these processes are going to be agentic. And so we built the ledger from the ground up, sort of contemplating that future where we've already got agents with skills that can navigate and write smart contracts on our ledger. So a bank doesn't need to go and figure out, hey, how do I use Solidity or what's Python and all of that. We've actually got all of that done. So it's really interesting to see not just a net new ledger come at this point in time around institutional adoption, but also coming at a point in time where the developer experience is going to be driven primarily by agentic. I think that will accelerate adoption for this kind of like second wave for crypto in a way that didn't exist before agentic, when we were all kind of trying to figure out Ethereum and Solana and some of the other permissionless chains.
All right, thank you, Rich. That's all we have. Rich Whitman, Global Head of Web3 Strategy at Google Cloud. We'll be right back.
Thank you.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
All right, we are back at CoinDesk Live, brought to you by MoonPay. In the original Flash Boys, Michael Lewis exposed how Wall Street firms were running private fiber cables to gain millisecond advantages over regular investors. Austin Federa, you're doing the same thing for crypto. You left the Solana Foundation in 2024 to build 00, which is a private global fiber network that lets blockchain validators and traders move data faster than the public internet allows. Austin, welcome.
Hey, thanks for having me.
Austin, just for the folks who don't know 00, why don't you sort of like lay out what it is and what really inspired you to start it?
Yeah, so 00 is a project to bring the same tools and tricks and technology that traditional finance has been using for decades to exceed the speeds of the public internet, to bring into crypto, to do it in a way that is open, permissionless, has multi-party access, has multiple independent contributors, and sort of keeps the ethos and the values of crypto, but also allows blockchain and blockchain systems to go much faster than the public internet lets them go today.
And look, someone like Farouk trades a lot.
Yeah.
Certainly compared to me.
Unfortunately.
Is he a victim of people who are able to sort of front run his trade still on crypto in the same way in the stock that it was in the stock world?
So in the stock world, there's sort of a bunch of different ways to think about this, right? Not like there's a misconception that high frequency trading is negative to users. It actually usually provides price improvement. The thing that's different that you see in crypto sometimes is like parasitic meth, when someone is front running you and they're intentionally doing something to make the price you get worse for their advantage and benefit. And that is a situation where the people who are able to execute on these types of things, they have an advantage, an asymmetric advantage over others.
So I am a victim.
You may be.
Okay, this is why my Hyperliquid account is red.
This is why you need therapy.
This is, yeah, okay, cool. Good to know, thank you. So 00 Edge launched, right, a month ago?
Yes.
You guys are killing it, you're everywhere. I was your event in New York, actually, last month. It was great. You have over 100 paying subscribers already, and nearly half of Solana's stake on the network.
Yeah.
Can you tell us why this is significant?
Yeah, so 00 Edge is really an attempt to bring this exact same paradigm that high-frequency trading firms have been using for years, bring it to Solana, and then bring it to other blockchain networks afterwards, and to really just allow faster data dissemination. So if you think about it, a block getting built is pretty similar to in the NYSE or NASDAQ data centers when a matching engine matches orders or when the Bullish engine matches orders. The difference is on a blockchain, that center of gravity where that block is made moves around the world every 1.6 seconds. And so it's like, imagine trying to trade on the New York Stock Exchange, but it hops to a different city every 1.6 seconds. So what we built 00 Edge for is a way to collect that data that's being produced by all of the validators all around the world, to transmit it using this technology called multicast, which has existed in traditional finance for many years, has never been available to crypto traders before. And what it means is everyone receives the data at the same time. So if you both are subscribing to the data in the same location, you receive it at the same moment. So there's not an asymmetric advantage because one of you is paying a little bit more of a subscription, or you have a private side deal with someone. And that's really the big difference between when you look at sort of what Michael Lewis is writing about in Flash Boys, that's anti-network effect networking. If one company builds that super fast line, they don't want anyone else trading on it. 00, we take this as shared infrastructure, so everyone can use these lines and trade better.
And Austin, we just had Rich Whitman here from Google talking a lot about agentic commerce. I assume something like 00 Edge is something that if you can plug into the APIs that your agents are running, this is where it gets really interesting.
Yeah, exactly. I mean, Google runs a massive private fiber network. Almost every large company in the world runs a private fiber network. The difference is it's for their own benefit and the benefit of just their users. So, Google, great company, but they don't let you use like some Amazon Web Service products on Google Cloud. These are competitive products. Our whole thing as a neutral ecosystem player here is connecting all the different places people want to trade, whether that's centralized trading venues, multiple blockchains, Solana, all these different places together, because we think that is the way that crypto actually starts competing with traditional finance, not just in stablecoins and ETFs, but in actual execution and trading.
And also, you have a session coming up, Crypto's Global Trading Overhaul. What are the key messages that are going to come out of that session?
Yeah, I mean, crypto has gotten successful enough that it needs to go faster than the public internet lets it go. The public internet is an incredible resource. We all know and use and love it, but it's not really suitable if we're going to have traders trying to compete with traditional finance. And we see this today. What happens is the best traders, they have their own infrastructure deployed, and they're able to land transactions faster than others are. And so 00 is in some ways an attempt to level the playing field there, and give everyone access to the same quality of high performance networking. Now, of course, you pay in order to get access to that, but that's how these systems work, is that if, it's the classic thing of if you're not paying for the product, you're the product.
And are people like Farouk and myself the client base, or is it really kind of the institutions and some of the major folks we're seeing out on the show floor?
We have some of the largest trading firms in crypto using 00 Edge in the 00 network. We also have two-man shops that run 200K of crypto trading. So it's really the whole spectrum. And this is one of the beautiful things about 00 is because it's not built like a traditional financial access protocol where you're signing a 2-year commitment and you're spending hundreds of thousands of dollars to connect into this data. People who are subscribing to 00 data, they're basically subscribing at a 2-day period at a time. They can turn it on and off. They can subscribe in different places in the world. And so that means it's much more accessible than the traditional way to access this type of data, but it's also just as fast. And this is only possible because under the hood, 00 is a blockchain technology project. There's tokens, there's smart contract payment, there's not an army of customer service people pressing buttons behind the scene to make this stuff work.
Farouk, I feel like you and I are still at a disadvantage here.
We are. We're victims.
We're victims here, but I do think knowing people like Austin allows us to think differently about what it means to actually be trading at the level of really like the hyper traders here, because information should be available, it should be decentralized, it should be something that isn't just gate-kept by those who can afford the highest price tiers. Is that the right way to think about it?
Exactly. This is it's the difference between, the cloud did this so well, right? The cloud came in and said, for a credit card, and 45 seconds later, you can get 45 servers deployed. That was a game changer in business model, and we're really doing the same thing for high-speed data access.
All right, Austin, that's all the time we have with you. Thank you so much for joining us. We'll see you around the show.
Thanks, Austin.
Thanks.
All right, Farouk.
Sir?
Our time is coming to an end.
No.
But I want to do a little bit of a check-in. How's consensus been so far for you? How was your time with us? What do you got coming up? Tell us everything.
Well, I mean, you already know. I'm going to say it every time. Don't get your head all inflated and stuff. Consensus is my favorite conference of the year, both of them. So twice a year. I was in Hong Kong. I was sitting at the desk with you. Yeah. I was on a panel. Tomorrow I'll be moderating a huge panel, main stage, baby, from niche to normal, something like that. CMO of Binance,
Revolut,
head of Crypto Revolut, and Circle. So that's a big shot. You're trusting me with a lot here.
You can do it.
I love that. I love that. But look, I always love this place. I mean, I was telling you, look, I love coming to the conference, doing my thing and working, but for me, it's really about the the side events, etc. Obviously, 3MO dinner tomorrow that you're co-hosting with MoonPay. Shout out to MoonPay. We love you guys. Keith, by the way, Montreal bagels are better than New York bagels. You know that. Point being, sorry, I had to do that. But, I just love it here, man. And Miami is a great place. I hope you keep this here forever.
We are definitely back next year.
Ooh.
So,
Alpha.
We have announced that. We'll be back next year. I hope you'll be with us.
I will be, if you invite me.
You always have the invite. Still an invite. Your brother is here.
Yes, sir.
How does he feel about having a brother who's frankly so influential in this industry that you sit down with CZ, you sit down with President Trump, you are really, you're performing at a very, very high level. As you're inspiring him, as he's sort of seeing your lane, what are you teaching him?
I mean, I just want him to learn how to work hard. He's 24 years old. I'm super grateful that he's here. It means everything to me. We just hired him. He does partnerships for us, and it's great. I mean, I want him to get his feet wet. I want him to get out there, and I want him to be, honestly, I want him to be in this industry, less as like, oh, let me give you a pass, more as like, this is the industry that's shaping the future of your life, of the world, and I genuinely believe this. So he's only 24, I'm 31. I want him to be a part of this, and I don't know how he feels about it. I know obviously he looks up to me. He doesn't want to admit it. I'm a big bro, but I know that he really appreciates it. I know that he sees this as well.
Are you like me in that you sort of pinch yourself sometimes and say, we get to exist in this time where we get to see the transformation of an entire industry and we get to be like on the front lines?
Every day.
And you talk about it every single day. Yeah. You've really devoted your life to it. What is that privilege of just being able to sort of see what happens and meet some of these people?
I think it's the most amazing thing. I'm grateful every day. I do pinch myself every day that this is the life that I get to live, No matter how tiring and hard it is, and I know it seems glamorous and fun, it's just so great to be part of the future. It's just so great to be part of this industry. They'll try to bring us down many times over, but they're never gonna they're never gonna get rid of us.
Well, look, I appreciate you. You work super hard at it. And frankly, I think you really represent the industry in a way that's about optimism and openness and learning, and and you're trying it all. So I really appreciate that. All right, we're gonna go to a quick break. Farouk, thank you for joining us. We'll see you back soon.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
2 years old, so. All right, OKX is making a big play in the US market. You have a new US exchange, a new investor, Intercontinental Exchange, the company that owns the New York Stock Exchange. Hey to Rafiq, so good to see you again. Last time I think I saw you was Dubai. We had a great time together. First of all, how does Miami feel? How does the event feel? I know you're going on stage soon. Are you excited?
I am absolutely excited. Miami is so vibrant. I think I love being here, and it's a great place for getting together with people in the crypto community. So, and by the way, Consensus this year here, it has a ton of energy.
Yeah.
So very exciting.
All right, well, we're going to be back next year. We hope you're with us. First off, I remember you and I having a very long conversation about F1. This week was the F1 weekend. You guys are part of Team McLaren. Second and third place, if I'm not mistaken. So great showing. But first of all, what is it about F1 that sort of makes a city come alive?
Look, I think the sport itself is attracting a ton of new fans, especially younger fans. And I think Americans are really excited about this sport, partly perhaps because of Drive to Survive, making the sport really popular. And it attracts a ton of celebrities and people and entertainers and artists. So I think it ends up being this venue that everyone gets attracted to. People come from around the states and want to experience it. So I think it's a great attraction for Miami. And you guys are very smart that you ended up hosting Consensus right after the F1 Grand Prix.
And do you think that sort of crypto is here? Because I look at F1 and I say, this is innovation, it is engineering, it's precision, it's edge, it's sort of all the things that we think about for crypto. So when you sort of decide we want to be a partner with McLaren, is that coming into your mind?
We did our deal with McLaren way back when, in 2022, when there was a lot of skepticism in the market. And our whole strategy about getting McLaren to be our partner was not just a sponsorship, but we wanted to actually grow as they grew and made their way back into the front of the grid. And I think it's been a tremendous partnership for us. We use it as a marketing vehicle. We use it for a ton of B2B experiences where we bring some of our institutional clients, our VIP clients, to host them at the weekend, and that ends up being really impactful. And then, of course, we create a ton of content with them. And so there's various ways we're using McLaren as a property, and I think each year our teams tend to get better.
I mentioned at the intro, you guys just took an investment from ICE. That felt to me like a great endorsement for what you're working on. Tell us how that deal came to life. What does it mean for OKX?
Look, I think we now look at the future of digital assets and we sort of parse it in two different categories. One is our ability to modernize traditional markets, and then our ability to modernize traditional payment rails. So when you think about modernizing markets, we look at Wall Street, we look at the exchanges, and we think there's a ton of value creation left to be had in those markets. So you look at the current U.S. equities market, it's valued at somewhere between 65 to 69 trillion dollars. 18 to 20% of that market is foreign-based ownership. Now, can you imagine what happens when these equities become tokenized, they become fractionally traded, they're traded 24/7, and they're accessible to anyone around the world? Maybe that 69 trillion equities market goes up to 100, 150 trillion. And I think that's really great for the American economy and very important. And it's really also important for real-time price discovery, which happens really well in digital assets and the crypto ecosystem, but the equities market hasn't caught up. So that's our focus with ICE and New York Stock Exchanges. Can we be their partner in helping them bring equities on-chain and ultimately opening up the American stock market to hundreds of millions of new investors around the world?
And what I love about that framing is this idea that in the same way stablecoins just bring the US dollar, a stable asset, to people around the world who might live in more volatile environments, we are giving access to the most important financial assets in the world to anyone who wants. And I feel like that's what really the mission of OKX has been generally, is how do we sort of talk to the markets we're in and give them simple, easy, safe, trusted products. Tell us about where OKX is today, but really where you're seeing it going to be, where you see it going 27, 28.
Look, when it comes to improving money markets or money and people's interaction with money, you have to remember that smaller countries with high inflation rate, they are looking for alternatives to protect their value. And what ends up happening is these people end up investing in gold, they invest in other alternative assets, higher risk assets. And when you give them an opportunity to hold a digital version of the dollar, they get really excited. And it's not just about holding the digital version of the dollar, but think about the idea that if you're in Europe, if you're in Latin America, or if you're in Asia Pacific, you can now not only own the digital dollar, but you can move around with it. And by the way, that bypasses all the FX rates issues that you have. Now, there are a ton of companies in traditional payments world that their entire business model is on tight spreads so that when you move from country to country, you're not affected by the FX rate. Now, stablecoins completely eliminate that. And I think that's a tremendous opportunity. It's an opportunity for merchants. It's an opportunity for people moving around. It's an opportunity for small businesses. So I think we're going to continue to create interoperability on our platform where you can come in, you have access to USDC, you have access to USDD, USDG, and all kinds of stable coins. And people can select which one that works for them, doesn't work for them, hold it, earn yield on it, and transact with it at their free will. And I think that's going to be an important thing we do in the coming future. When you look at 3-4 years from now, in the last few weeks, we've launched a ton of tooling for developers, for traders around agentic commerce. So we have our own on-chain OS that developers can use. We have a skills marketplace. We have an agentic wallet product. All these things are going to start to enable stablecoin to be used at high frequency. And I think that's work that's really important that we're going to continue to do to modernize money, just like we are doing modernizing markets with ICE and New York Stock Exchange.
Super exciting. Hyder, we got to wrap it up. Thank you for spending time with us. Thank you for partnering with us on the show. We're really excited to see where OKX is going, and you guys have really been an amazing just company to watch as we build through this space. I really appreciate that.
Thanks for having me.
All right. We will be right back after these.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
All right, we are back at CoinDesk Live. In venture capital, the old playbook was simple: write checks, sit on boards, and wait. Tobias Bauer, Brent Fulfer are betting on something different. They co-founded TBV, a Web3 venture fund that built its own global events network to source and close deals. The argument being that the right room matters more than the biggest check. Tobias, Brent, welcome. First of all, is this one of those rooms?
I mean, Consensus is definitely one of these rooms. We're big fans, and we've been going to Consensus for a long time now in Austin, in Hong Kong, and now Miami. And this is stellar. I mean, it's incredible. The amount of institutions that are here, it's definitely the rooms that venture capital want to be in.
And what is it that made you guys think there was an alternative way to run a fund like this?
No, it's a great question because I've been doing VC in this space since basically 2017. So it's been a long time, and over those times you have a lot of different waves. And in the very beginning, the industry was so small, there wasn't many institutional players, and it was pretty easy to sit, predominantly in Asia at that time and do deals. But now we have the banks involved, right? We have the government involved. We're global. It's $1 trillion industry. So now it's getting harder and harder just to be that niche-focused fund that just gets all the deals delivered to you, right? So you have to be a bit more creative at that point, and you have to connect to the right people, and you have to be in the field. I mean, that's what all of these brands doing here, right? They're trying to be where the audience is, get to know their customers, show what they're doing, what products they're building, and we have to do the same thing as a VC fund because our product is the capital at the end of the day.
And what was it about the sort of traditional VC funding model that you felt you needed to reinvent?
So when Toby and I met about 3 years ago, we worked at a previous venture fund, and the traditional way for VCs to get deal flow is to fly around the conferences and speak, which is, I think, obviously critical to our industry of being a global industry. You have to travel a lot. But the challenge with that is, like, when you're traveling so much, just going to speaking, you're not necessarily getting in the right rooms. So Toby and I started hosting events called Web3 with Toby and Brent. It got so big in a short period of time because people knew, okay, if I'm going to fly across the world to go to one place for a week, I need to know the best rooms to be in. We started to build that brand, and so once people started to sign up, our first event had 400 people, our next had 800, then it had 1,000, then it started to build, and we were like, wait a minute, we gotta have something here, and then now it's grown to over 50,000 people since we started the company in the last year and a half.
And how do you curate that room? How do you make sure the people in there both are getting value from you in the same way that you want to see if there's something valuable to them?
Absolutely, great question. So, for us, it's very important the companies that we host these events with, right? So they always have like some sort of like angle they want to get out of it, right? Is it I want to meet investors, I want to meet founders, I want to meet, developers. Depends always on the room in itself. And then we work with certain partners, either be communities or our communities itself, to curate that room. But it is, at the end of the day, it is still a lot of personal work. Like, you have to reach out to the people, you have to invite them. Everybody likes personal invites, and have to curate the room. That's obviously possible only when it's like 50 to 100 people. You cannot do this with the entire consensus, not everybody can hand invite, but like if it's 50 to 100 people, you can definitely do that. And then, you give people value. You want to give people value first before you ask for value later. And I think that model has worked really well. When like companies tell us what they want, we hand pick every single person that's going to be in the audience, every single person gets sort of adjusted with the hosting party. And from there on, we form a room where people like to be in, and there is a match. Like, there's actually interesting conversations to be had, and you're not looking around, who can I talk to next, because this conversation isn't interesting at that moment.
I feel like younger people these days, I'm a little older now, but the younger people these days love the idea of entrepreneurship, success, of being your own boss. They have tools now like Claude that really allows them to sort of be technical if they're not technical, be strategic if they're not strategic. With all of that, what do you guys really look at for a founder? What's someone who stands out to you in terms of someone who's sort of pitching you their company?
Yeah, well, for us, it's a big edge for us running events, because being able to meet founders in person is one of the hardest things in this industry, right? Like, you're doing business in Asia, the Middle East, Europe, and so we're very lucky and fortunate to be able to meet virtually every founder that we invest in person. But there's definitely a number of factors, but like the main thing we look for is like the not just the founder's experience, but they built previous successful companies or even smaller projects before. A great example, yesterday we had a demo day where we had 15 venture funds. I think we had the most amount of VCs in one room, outside of maybe consensus during the entire week. We had a founder that was a 4 times dev, he won 4 developer conferences or challenges in the last 4 months. And then he pitched, he's 21 years old, raising $100,000. He had the attention of the entire room, and like these are the type of people where like, okay, maybe he hasn't launched a big company yet, but he has that track record this early on, and these are the type of founders as a fund you want to catch very early on.
I used to teach a class a long time ago on sort of propaganda, advertising, media, and I made every student pitch every creative idea to the whole class, because I said, there's going to come a time where you're going to have to stand up in front of a room and you're going to have to convince them of something. I want you to have that conviction. So I love that. That's also how you guys run this. I hear you have some announcements that you're making at Consensus. Can you share those with us?
Absolutely. I mean, first of all, we're very, very happy to have partnered with Consensus and CoinDesk to, basically host the official after party of the entire conference.
We're very excited about that as well.
I mean, it's going a bit crazy
be an epic
right
night.
now. I think it's about 4,000 people signed up at this point, so we'll see how...
Just make sure I can get in, that's all I care.
We have some VIP invites for all of you guys reserved, so you should be all good. But no, I mean, like, this was our angle always. We want to work with the conferences at the end of the day, right? Because there's no point of doing something that doesn't add value to the conference. At the end of the day, we are all here because of Consensus, right? Like the side events couldn't happen if there wasn't a main conference. So what I want is that, like, when we do an already big activation, we do it together with the conference. We give additional value to ticket holders, to sponsors, to partners who made this happen at the end of the day. And I think that's what we're very excited about, to do this for the second time now. in Hong Kong first, and now in Miami. And Brad, the team, and all these guys are just incredible, supportive. It's been been an awesome journey.
I mean, they speak very highly of you guys. So again, thank you guys for being partners. You mentioned something earlier that just stuck in my head, which is that now there's been, sounds like about 50,000 people who've come through what you've built. You also talk about the idea of a data-driven pipeline. What is it about having 50,000 people, ideas, pitches come through, and then how are you utilizing tools to sort of analyze where trends are going to really see where you want to deploy next?
Honestly, it's something that we've been actually building the last couple of months, and it's our platform called TBX, which we'll be doing a bigger announcement of that coming up. But essentially, this was our challenge. This is a challenge for a lot of funds. In the last year, we had more funding applications than even Y Combinator, which is insane for a first fund. This is our very first Toby and I Together fund one. And we realized is, holy shit, we have over 30,000 applications. How do you sort through all that data, all the market insights that come to that? So we built this platform that basically analyzes every single company that comes in. Founders can submit their pitch decks for funding from us, from our co-investment partners. And what we've really have found is, like, when people come onto the platform, we can say, hey, I want to find a seed stage company in the AI crypto space that's raised X amount of money that's based in these regions, and our platform pulls that up. And that's a big part on why people want to come to our events, because they know if I come to Toby and Brent's events, I can meet the right founders, I can meet the right investors, the market makers, the exchanges, the conferences, and that's why our brand will continue to build and build, because at the end of the day, you don't just want to bring people together, you want to eventually do business. And that's what we want to bring to these conferences, is like outside the conference, where can actually deals happen? And that's why we built the TBX platform.
I mean, I love that as a differentiator. So congratulations.
VCs invest in tech, but they don't use tech themselves.
Yeah.
So that needs to change.
I love that. All right, well, we're going to see you at the after party.
Absolutely.
Toby, Brent, thank you so much for joining us. Just have a great show. I hope this is fruitful for not only you, but frankly to some of the amazing founders that are out in this audience. Hopefully they'll get some time with you and maybe some magic can happen.
Thank you
Absolutely.
so much.
Thank you for having us.
Thank you. All right, we'll be right back in a second.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right. Hey, everyone. If you're just joining us, we are back at CoinDesk Live, coming to you from Consensus Miami, brought to you by MoonPay. Joining me again, Leah Colin Butler. Also, one more trip around the sun. We got Farouk here. We got Jeff Wilzer. We wanted to play a game with both of you guys, which is overhyped or underrated. So you have some paddles under this desk, and both Leah and I are going to shoot out some topics. You're going to tell us which of the paddles, and then you have to defend your decision here.
You ready?
I think this format's underrated, so I'm into it. We're up to it.
All right.
Love it.
I'm going to start just because we were all on a panel together. So for both of you, PFP NFTs. Underrated, both.
Sure.
So even 2026. Jeff, tell us your reasoning.
No, all kidding aside, I'm open-minded. I think that I feel like there's not as much hype, period, right now, right? So I feel like if you ask me again in 1 week, I might have a different answer. But I feel like there's less hype for that than there is elsewhere.
This plus, underrated AF. The whole panels today, everyone's talking about AI agents. AI agents, the Google Cloud
I am
guys,
guilty. I am part of that problem, so that's fair.
the Google Cloud guys, like, they have their own identity. Your identity needs a face. Underrated.
Leah, you want to shoot another one?
All right, mine is a single word, Ethereum.
Wow.
Oh.
Yeah, the death threats
Don't break
come
my
depending
heart.
upon
I'm
which
gonna
title
say-
goes up. It's
So, neither. Meaning it is...
No, wait, you can't sit on the
Well, because
fence.
it is not overhyped.
Come on.
But it's not underrated. It's just where it should be.
Explain yourself.
It's properly rated. It's just the right amount
It's
of
been
rating.
like that for some years
Well,
now.
this is why
That's
it's
the
flat
problem.
for 2 years, right? Underrated in terms that the whole banking system, clarity is coming. Everything's going to be built on Ethereum, the world ledger, the world supercomputer. But then sometimes overhyped in the sense that, last cycle there wasn't much going on and it was $300 billion assets. So,
well, there's optics and there's substance, right?
Exactly.
Optics,
Yeah.
yes. Substance, this.
I agree with that.
Well said.
Well said. All right, my next one. The institutions coming to crypto.
Ooh.
I actually think this. I mean, in a way, there is a ton
split
of hype.
decision.
Ton of hype, but ultimately, I am part of me. I am a closet institutionalist, and I think that for
Closet
crypto to,
institutionalist.
I'm not judging.
But, I mean, I guess I'm wearing a suit, so not that far in the closet, I guess. But for crypto
tie.
to, I know this is an old saw, but to truly find the billions of people, that is not going to come, all due respect, from the people here in this amazing building, right? It is going to come from the larger players. And as much hype as there is, that still needs to happen.
So he's right. Without them, we're not going to get the second leg up. But why I said overhyped is not because we don't love them. We need them. We love them. But overhyped in the sense that we give them too much power. And we think that without them, we don't have an industry, but we were there before them. And if they're gone, we'll be there after them.
All right.
Go ahead, Sam.
I was going to say, that's a mic drop moment. We're going to wrap up this segment of overhyped and underrated. Farouk, thanks you again for joining us.
Thanks
We
for
just wanted to have you on one more time. We will see you around the show. Jeff, stay with us. You're going to stay on the board. We're going to have some great conversations coming up. We'll be right back.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
All right, welcome back. 7 years ago, Tushar Jain co-founded Multicoin Capital with a simple but radical idea that crypto would eventually reshape global financial markets. Your early Solana bet is one that everyone remembers, but the thesis has evolved. Multicoin is now investing in cryptographic primitives, identity infrastructure, and the rails that AI agents will need to transact autonomously at scale. Managing partner at Multicoin, Tushar Jain, joins us now. Welcome.
Thank you. Great to be here.
First of all, just tell us, when you first were part of that idea, the ideation session for Multicoin, what was the thing that was going through your mind? Why did you want to begin this firm?
The big thing that was going through my mind was that blockchains were the capital formation mechanism for the internet era. Just like stock exchanges and the limited liability company was the capital formation mechanism for the printing press era. And when I fully understood what that transition meant and what it would be, I realized it was going to be the single biggest change to financial markets and how we coordinate economic activity in the history of our country. And I was obsessed with the idea and knew I had to work on it.
Well, I guess following on from that, you've been on quite a journey from 2017. I think that was like, peak ICO era. We've seen the narratives evolve. I think that's very much reflected at consensus. And now we're looking at things like institutions coming in, DeFi, RWAs. But I was looking at some of your core investment themes for the coming years. I think you've got 8 core tenants. Do you want to talk a little bit about them? I don't know if you know them off the cuff, but it's very interesting to kind of think about how you're looking at the future, given everything that you must have experienced since 2017.
Yeah, I can talk about at a high level how things have changed.
Yeah.
Right. So one big thing that we have realized is narrowing down the thesis and the focus areas. So we are focused on the financial use cases of blockchain, where in the past there was a lot of experimentation around the decentralized cloud or identity or there are a bunch of experimentation around collectibles and art and all of this stuff. And I think that has a place, but what we are most excited about is the capital formation, the trading, the borrowing, the lending, the payments, because our thesis in a nutshell is that blockchains are the first principles correct way to move money and to move assets. And we're investing in the themes that follow from that.
Speaking of themes, you had a lot of smart thoughts on the crypto AI intersection. And I'm wondering where that fits in your thesis. And we also played a game recently, overhyped, underrated. I'm wondering where in that crypto AI intersection, what would you say is overhyped? And are there any elements that are still underrated that people are sleeping on right now?
Yeah, absolutely. So I think crypto might have been like almost purpose-built for AI agents to be able to use. The idea that AI agents are going to send payments only on weekdays when banks are open is kind of laughable. And I often joke that Bitcoin, like Satoshi was probably a time-traveling AI who...
We've solved it, we figured out great.
Who built the whole thing because they knew that AI would need these rails. So I think AI agents are definitely going to transact on-chain. The biggest hurdle that we've had to on-chain transactions has been UX. The UX of Web3 is just like not quite as easy. But when your entire interface is, I tell an agent what to do, I say, please buy me X and pay as little as possible. Well, then the agent is going to be smart enough to understand I can pay with stablecoins and I can save the processing fee, or I can trade on a decentralized exchange and I can save the commissions. And so the agent becomes the UI layer, and that changes everything.
I find that really compelling. I love the theory. One thing though that I wrestle with is how that overlays with institutions and big corporations and companies, right? Every big company out there, they know agents are coming. They know that if I'm United, I know people will eventually have AI agents trying to buy plane tickets from United. And I think a skeptic might say, cool, but are they more likely to use the cryptocurrency version or use MasterCard? How are you thinking about that possibility or tension?
Oh, it just comes down to fees, right? MasterCard charges what is the percentage fee that the card networks are taking, interchange and all those things added up on top of each other, versus go send some stablecoins on Solana, pay a fraction of a penny, and you're done.
How about overhypes? Are there any areas in that intersection that's like, oh God, guys, we are over-indexed here?
Yeah, I would say the idea of decentralized training of models or models running in a decentralized way is overhyped. I like the idea of models running on the edge on your own device to protect your privacy. I do that. I think that is very useful. But the idea of like a BitTensor type, oh, well, we're going to have this subnet that then has a model to predict prices, I think is kind of overhyped and hilarious. It doesn't make any sense.
All right, Tushar, one of the core investment themes for the coming years is the DeFi Mullet. What is that?
So really simple. I don't know if the viewers will remember the mullet as a hairstyle. It was business in the front, party in the back. And so the idea here is DeFi in the back and CeFi in the front. So you have a centralized front end that does all of the customer service, that does the regulatory compliance, that does the distribution, but they're tapping into a global DeFi backend for liquidity. And we're seeing this already emerge, where we're seeing wallets that offer a CeFi type experience, but then they are using DeFi protocols for you want to go trade perps, and they're letting you go trade on Hyperliquid on the back end, but you don't ever actually have to go to Hyperliquid to trade. So the DeFi Mullet is, I think, the end state of what financial services are going to look like, because you do need the regulatory compliance, you do need the customer support, the forgot my password function, all of that stuff needs to exist. But global DeFi backend will be the most liquid and the best place to go and trade or borrow or transact.
Can I follow up on that? My favorite investment theme that I saw here was this idea of new cryptographic primitives. So what are your predictions for the new primitives that we're going to see in the next, 2, 3, 5 years?
So one of the primitives that we're really excited about is around privacy.
Yeah.
Right, and our theory there is we've been in this experimental phase with blockchains, and people didn't realize that all their transactions were going to be on the record forever. Right, like teenagers are taught everything you put on the internet is going to be on there forever, and future employers will be able to see it and all this stuff. Well, that's also true about your on-chain transactions in a public world, and that can be problematic. You don't want everyone to be able to see.
Everything should be public and immutable forever.
Exactly. Yeah, I just want to go buy a coffee. I don't need you to see what pharmaceutical product I bought or anything like that. Right? Like that doesn't need to be out there. But at the same time, I think you're going to need privacy on general purpose chains because you want to be able to privately trade. You want to be able to privately do payments. You want to be able to privately invest in something. You want to be able to privately vote your shares if you have them. And the cryptographic primitive we are most excited about for this is called fully homomorphic encryption, or FHE for short. And what this enables is you can have encrypted data that you can then send on-chain, and the chain can run compute on the data without decrypting it.
Wow.
So absolutely incredibly powerful technology. And you can have this for financial use cases. You can put up your health record and have an AI analyze it all without decrypting it and seeing all of the information.
Wow.
And so one of our portfolio companies that is the pioneer in fully homomorphic encryption.
It's a mouthful.
Yeah, it's called Zama.
Okay.
So we're very excited about that.
All right, well, I'm sure we could spend an entire segment just on this concept because it is fascinating, but we got to wrap it. Tushar Jain, Multicoin Capital, thank you so much for joining us today.
Absolutely, thanks for having me.
We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
For 6 years, Tom Shack worked inside Swift to bring blockchain to the global financial system, running live digital asset trials, building a production ledger, and connecting directly to Chainlink. Tom, welcome to the show.
Thanks for having me.
Tom, you left Swift last month after 6 years. Do you think the traditional financial companies like Swift are moving fast enough in the blockchain space?
I think so. I mean, I love the term traditional finance, right? That's a great place to start. I refer to it as finance.
Okay.
It's kind of how we do things today. I think
This is crypto. We don't talk about.
Yeah, I think the traditional thing was like a cyberpunk thing on Reddit or Twitter or something, but we'll just call it finance. But look, I think everybody'd like to go faster, and I don't think there's any expectation that people in finance, especially regulated finance, capital markets, can move at the pace of somebody in a DeFi world, an unregulated world. It's just not kind of realistic expectation. But the momentum that we've seen in the last year or so is substantial, right? Not only in payments and the pickup that we saw with the Swift Ledger. We literally had 40 banks sign up for that in 2 weeks, right? So demand's there for digital money with stablecoins. The tailwinds are there. The requirements are there, wanting to offer 24/7 payments, and the blockchains are ready. And so I think a lot of things have really come together, and it's not just the payment side. You see the work that DTCC, for example, is doing in tokenizing treasuries, $100 trillion in treasuries. I mean, that's scale, right? And that's momentum, and it will be done in steps, as it should be, because it's important, and it's not this kind of move fast and break it and see how to fix it next time around.
And Tom, I don't think people understand that, even 2 years ago, we wouldn't be having this conversation with Swift or DTCC about how much markets are going to go 24/7 and potentially on-chain. And that tide seems to have completely shifted. What do you think was really the impetus of that? Was it regulatory, or was it just the idea that we should sort of futurize financial systems?
I think it's a combination of a number of things, right? I mean, I think the regulatory environment and the clarity that's brought with Genius, and it looks like it's upcoming with Clarity, is an important catalyst, but it's a big world. And so we saw similar legislation, for example, with stablecoins in Hong Kong, right? So I think the US is kind of a catalyst, but I think, it's kind of, you see other parts of the world react in similar ways. So it's not just about the US. But I also think, along with the clarity, again, you see real demand. There's $300 billion plus on chain for stablecoins. There's a real need and demand for digital currencies. Everybody wants things faster and cheaper, but you still got to stay within the law. And so, and I also think, if you kind of compared the blockchain environment that we had, kind of the lack of some of the privacy features and that sort of thing, even 21, 22, you could make the argument that most chains weren't ready. And there's a lot of work that needs to get done on that. And again, you're not just going to kind of step in and start moving $1 trillion in value and hope for the best, right? This is one of the big differences between DeFi and finance, is that we hear a lot of talk about it needs to be faster and cheaper. And that's true, and everybody wants to think faster and cheaper, but when you talk to a corporate treasurer, and $50 is not $50 million or $500 million, do you know what they want?
What do they want?
They want certainty.
Yeah.
And if it takes 30 seconds instead of 30 milliseconds, it doesn't matter. Because certainty and compliance with the law and knowing what happens when things don't work, that's what actually matters. And we're getting there.
So let's talk about the future, because you've moved from financial infrastructure into AI now, right? But I think you're still working on that core problem around trust. And I was just wondering what you learned at Swift that convinced you that existing systems can't solve these problems, that we need a new solution.
So let me just say, existing systems are going to keep up for the foreseeable future, and I don't believe in this kind of we're building a parallel universe and somehow we're just going to walk in on a Monday morning, flip the switch, and everything's going to be shiny and new, right? I mean, most countries in the G20 have installed an instant payment system in the last 5 years, right? So we're not just going to say, oh, I have a digital asset, let's just rip up all the infrastructure that works, and because now we have a digital asset. That's not going to happen.
Yeah.
And so I think there's going to be, so what I'm really interested in now is we see the momentum, and we see kind of momentum in securities and stable coins and payments, cross-border payments, everything else. The question for me is, how do you scale? So I'm certainly not retiring. We had a beautiful vantage point, and getting kind of really grateful for the ability to work inside of Swift with the banks, with central banks, with market infrastructures globally. And I learned a lot there, and I wanted to make sure that the ledger was launched. It is. That will be launched and live this year. And I saw something that, to me, that is still kind of something that needs to be resolved.
Yeah.
And it has a lot to do with kind of the intersection of programmable money and AI. And there's a lot of hype about agentic AI, but think about this. Every system that we have today was built for human interaction.
Yep.
I send a message to you to credit that account. So if you do 25 million a day, that's, and let's say whatever your friction rate is, right? What happens when that's 25 billion? all of the exception process has been built for humans to get involved.
Yeah.
All the exception process will change when an algorithm makes a decision and your volume is 25 billion, not 25 million or more, right? So there's no kind of one system or platform. They've all been built assuming that there's going to be human interaction, and that's not where we're trending, that's not where it's going. And that's the gap that I saw that needs to be resolved, and the result is to get to institutional finance at scale. That's really what I'm focused on at this point.
Tom, to that point, what excites you the most, and then what concerns you the most about the shift you're mentioning of AI agents now operating in financial markets, like at a wild speed we can barely fathom?
Yeah, what excites me is just the opportunity and the efficiencies. And I look at kind of the arc of innovation with new technology. And again, I'm not in the doomsday camp. And you can look at on whether it's Blockbuster or the carriage and cars in New York, or pick your kind of technology.
Buggy whips for me, yes.
Yeah, exactly, right? So I'm not afraid of, I think the difference now is that with AI, things change so fast, we don't have the same kind of curve that we had before to readjust. Because the changes felt a lot more gradual.
Yeah.
Now you see a frontier model launch a new feature and entire sectors are concerned. Probably a little bit overhyped and a little bit overplayed, but the pace of change is pretty extraordinary.
I'm with you and not a doomer, and I'm curious though about just as you point out, like the whole architecture we have is built for humans.
Yeah.
So when things like, where are there parts of the seams, parts of the infrastructure that might be a little more vulnerable than people realize? Okay, when agents are running wild here, are there things we need to do to make that infra able to handle it?
Absolutely, and the one that I'm focused on the most is today all of the transactions and the cryptography and everything that goes into writing a blockchain in the order, that all works. That's been proven. We have value, billions of dollars of value on Ethereum, for example, right? Every compliance process that runs behind that is still done mostly in a manual way. So again, you have this mismatch of kind of this tsunami coming in terms of volume and capability, and you have compliance processes that don't align with that. And it's not that they're broken or they don't work well, and banks and regulated financial institutions, PSBs, they're always working to improve those. So we're not in a terrible situation, but we're going to get into a situation where one is we figure out how to scale them. Two is we have the ability to scale, but we can't use it because we can't control it, right? Or three is, it kind of takes off and we get an outcome we don't want, and then somebody comes in and starts writing regulations, to fix it, right? And then we kind of spend 5 years digging out of that.
We've seen that story before.
We've seen that story before, for sure.
All right, well, Tom, we're going to have to wrap it right there. Tom Shack, advisor, architect, was with Swift, now working in the AI space like everyone else should be. Thank you for joining us at the desk today.
Thanks for having me.
We are going to throw it to the conversion stage where the RWA engine and institutional frontier conversation is underway.
First is everything around what we call curators. So these are asset allocators that take in stable coins, put those stable coins into various markets, and then get a yield for those stable coins. So the second group is going to be fintechs or banks. We see ourselves as infrastructure for banks. We are not a bank. We are not a counterparty. We don't hold any assets, and we've got no custody. But what we do is we talk to a Fidelity, a JP Morgan, or a Morgan Stanley who want access to global credit. Each of those banks within their four walls have supply and demand of billions, but when they come on to something like Morpho, they get to be able to share in the liquidity of Coinbase customers or Binance customers or other banks. And so when we think about those groups, those institutions have to do a lot of work to try and understand what's the real value for them. For fintechs, it's pretty easy. They can come to Morpho and generate yield for their users. For banks, that's not the attraction. For banks, it's like we're sitting on all these credit products. They generate a yield, but can we tokenize those, put them on Morpho, and then pull liquidity out of that yield? So how do we get like a yield off yield scenario? We've seen an explosion in the last 12 months of real world assets going from 0 into several billions. And we have a lot of structural problems to try and figure out how we get to scale. But that's the part that's exciting for us. Digital assets are the use case now, but in order to bring institutions in, it's real world collateral.
So for those institutions, Angus, can you talk a bit about where do they place the weight when they're deciding to jump in? What are they looking at? What factors, what expectations do they have?
It's a great question. A number of things. I think one, what's the economic use case? You know, ultimately for a asset manager wanting to issue a fund, for an asset owner wanting to invest in products, ultimately there has to be a reason for doing it. And I think there are a number of factors. One is distribution to either traditional or new investors. The other is new capabilities, this view of being able to utilize funds for fund units for collateral, and although that can be in DeFi markets, but also increasingly in traditional as well. And then I think the third area of this is around efficiencies that this can bring as well. And you know, I don't think that's necessarily an immediate thing, but it provides the potential for 24/7. And I say potential, I think there's a lot of things that have to be hurdles that are going to have to be overcome for that. But also, it's also the potential to be able to reduce down settlement timings, create down to real-time settlement. So that's one. Secondly is jurisdictions. We were just speaking before around regulatory clarity, and that this is a term that's used time and time again. I think it is important. There are certain jurisdictions that are more favorable at this point in time for the issuance of types of fund. That's important, and it's important to know how that's going to be treated, and for a bank like ours as well, from the support model of how we're going to manage that. And that brings on to the service offering as well. Many of these customers, they operate in a traditional way and in a digital way. What they want is a service offering front to back that can provide TA, transfer agency, that is fund accounting admin, custody, cash, and collateral all in one place. It makes it a whole lot easier for them, and it reduces the risk, I would say, particularly when they're dealing with organizations that have serviced them over many, many decades as well. So those are, I think some of those.
And Dennis, for you, what are those next level challenges after you get the green light to engage? What comes next as far as operational opportunities and challenges?
So once you've had 507 meetings with the banks, the compliance, regulatory, security, lawyers, we were talking earlier on, like when you talk to a bank, they actually don't care about yield. Like they do care, but everything else has to be in place first. Like they tell us about your smart contracts, tell us about your custodial model, and there's a number of things that need to be in place, and that are to still be figured out as it pertains to the Investment Advisors Act, or is this a security? Is this are we a dealer broker when we move on chain? But the things that need to be in place is the custodial model for assets. So as a customer, how can I take my assets today, Bitcoin and Ethereum, can I leave them in Anchorage or another custodian, and then use that as collateral to be able to borrow against? How can I ensure that I've got full visibility of and control of my assets, but yet leverage that to pull out liquidity? I think that custodial model is the first. There's when we think about on-chain credit, the regulatory piece is still very gray. We've got curators that are coming in that have licenses and over 10 to 15 billion in assets under management off-chain, but coming in and trying to understand the operation of a vault, managing that capital. What happens with, how do we treat, for example, when you've got your capital and you bring it into a blockchain, you have a receipt token, and instead of receipt tokens just increasing by number, they increase by value. So how does the CFO of a treasury firm think about the accounting treatment of that? So that regulatory accounting compliance piece is there. And then I think overall risk management, we've seen over the last, I think month of April was probably the month in which we had most hacks on DeFi. And I think there's just a general sense of understanding the security vectors, the underlying assets that are used as collateral. And we're starting now certainly to see curators do a lot more diligence as we think about the risk of some of those assets.
And so when we think about now the frontier, we've talked a lot about control and the value of institutional control. Do institutions, are they actually now looking for on-chain composability, wide distribution, or is this a phase where it's about engaging with the asset under control? And what are you seeing there, Angus?
I think it's, I don't think you can put it in either camp, to be honest. I think ultimately there have to be a certain set of guardrails. I think, your point around losses, hacks, etc. If we can start as an industry to look at those on a longer term basis and say, what are the things we actually need to solve now for the future once we've got trillions of dollars worth of activity on chain, we need to start to be unpicking those issues now. There's a reason things happen during, in the past, and with the financial crisis, we should be thinking ahead and going, we've got to be able to support this on a scale basis. Interoperability needs to be determined. On top of it, there has to be an understanding of what is the legal title and legal right when you have a token on one chain versus on another on a cross-chain basis. So that our customers need to know that. They need to understand it. And we as both our own institutions, it's critical we get there. So I think, back to your question, I think we're going to see this growing slowly but surely, and I think we're going to see, to me, that when the full composability point comes in, once actually those guardrails are stronger, once the banks and the other providers and infrastructures in this space are taking this, really understanding those issues and really understanding how to embed them up front.
Is there a point there, Dennis, though, where the control, transfer restriction, or compliance architecture makes the asset too constrained or doesn't deliver on the underlying promise?
Yeah, so I think we have a pretty strong view that when we think about on-chain credit, that should be an open infrastructure. Now, to the point of the players coming into that open up infrastructure, it should be permissioned.
Yeah.
And when we think about, I had a conversation with a bank and they were like, well, we're just big enough, we can just do this ourselves. We have the liquidity, we've got billions, so why don't we just come in and do something? The point being that in 10 years, 20 years, 30 years, that bank A will want to be able to lend and borrow from bank B, right? But today, they will want access to the on-chain infrastructure that allows them to pull liquidity out of their collateral assets. They can't do that today. They may not be as interested in the liquidity because they're such a certain size, but in time, the benefit of open markets is that banks can lend to each other, borrow off each other. A customer for a fintech is going to be able to lend to a banking customer somewhere else. And so the challenge that we have today is if you heavily permission an asset, if our bank says, okay, well, we have this private credit vehicle, we want to put this on chain, we're going to tokenize it, but a tokenized entity sitting in a brokerage account is the same as a tokenized entity sitting in an on-chain wallet, unless you're doing something with it. So you put it into a market, you use it as collateral, and you pull liquidity out of that. In order for that to be effective, the market has to understand what is that collateral? What's the value of it? And if there's a problem, can I liquidate it? And who's going to buy it? So that remains, I think, one of the largest challenges to RWA scaling today.
And on that theme, let's close with a question to each of you on the unlocks. What has to happen to really achieve institutional scale? Angus, what is State Street doing to enable that scale and that progress?
So, we started out this year and we delivered our platform, our foundational digital asset platform, which really, as I said a little bit earlier, covers the service offering front to back for our asset manager clients. And that has been critical because it is important that the traditional and digital need to operate together.
All right, that was the conversion stage. Welcome back to CoinDesk Live from Consensus Miami, brought to you by MoonPay. I am Sam Ewan. I am joined again by senior anchor and our partner in this endeavor.
In this endeavor.
Jen Sanasi. Jen, how's your day been? I haven't seen you for a few hours. What have you been up to?
Oh my gosh, doing so many interviews right here at the desk, having some really great conversations with names from all across the industry. I was telling you, we spoke to Anthony Pompliano at the desk, and he was just firing banger after banger. It was interesting. I mean, he said he thinks 70% of crypto is going to fail and go to zero, and a lot of the folks that are interacting are not going to be here again. And I juxtaposed that against the conversation you and I had with Arthur Hayes at the desk this morning, and two very different perspectives. Of course, Anthony is saying that he's a real Bitcoin maxi, right? He really believes in what he believes in. But the beauty and the joy of this conference is there is something for everyone, right? And so, I don't know, I've been having a lot of fun.
I mean, I guess one could make the argument 70% of everything goes to zero.
Yeah, that's
right?
true.
Big tech that was around in the turn of the century, when the dot-com bubble happened, they went away. Traditional companies that might have been to agriculture, a lot of those went away. So I mean, I don't feel like that's that bold, other than I think the crypto industry doesn't want to hear it. They believe everything should be up and to the right all the time.
Right.
And so what we are seeing, and really this event is kind of, I would say, a real coming home of, is the idea that there are now ideas that are not only launching, they're lasting.
Yeah.
The institutions are here. They're saying we want to get involved. We've spoken to a bunch of them. We have more coming over the next 3 days. I don't know. There's something that's very exciting about what feels a little bit like crypto growing up, even though we still have a giant inflatable Pepe.
Yeah. We always, I hope that we always have something like the giant inflatable Pepe so that we can remember our roots. But I agree with what you're saying. I think we're really starting to see how the technology can improve what already is out there, what's already solved challenges for us, how it can bring us into the next iteration of finance, the next iteration of tech. And so that's been great. I mean, there's been a lot of conversations about Agentic AI. I know you've had some of those conversations on stage. We have a stablecoin workshop happening, along with the Pitch Fest. We haven't talked about the Pitch Fest at all, and I want to talk about that because that's always one of my favorite pieces of consensus. I love hearing what young minds are thinking about, what problems they're trying to solve. That really is an indicator of what the theme at the next consensus is going to be. I don't know if you remember our last Pitch Fest winner. I believe it had to do with Agentic AI.
Oh, yes.
I could be wrong. You could go back to the live stream and check me. But yeah, I really like that.
I love that. The one thing you'll miss, I would say, a big banger on the desk here.
Yeah.
You had Yatsu, Farouk, myself, and Leah. And Yat said NFTs are back. So you missed out on that.
Sam, stop trying to make NFTs happen.
I'm just saying, NFTs are here again, everyone. Get your PFP ready.
You heard it from Sam Ewan first. NFTs are back.
Yes. All right, we are here with Anand Gomez. Anand, crypto options used to be a niche product for a handful of sophisticated traders. Today, 55% of institutional crypto investors use them, and the market processes nearly $9 trillion a month in derivatives volume. Anand, you saw this coming in 2019 when you founded Paradigm, the institutional trading network that now handles 30% of the global crypto options market. Anand, welcome.
Thank you for having me.
What are you seeing around the show? What's exciting you? What's interesting to you right now?
I mean, yeah, I heard you guys talking about the growing up of crypto, and I think that's a theme that's very, very like in your face in this conference. I feel like I've been in this space since 2017 now, and I feel like now this is the most grown up I've seen it in terms of the amount of suits I see.
But you're still not in a suit.
But I'm still not in a suit. So I mean, I like to think I'm one of the people that got in super early here, and for all the philosophical reasons, right? No, but I mean, I think this is just it is inevitable in that sense as the technology matures, the market matures. This stage of the cycle is inevitable, right? And for us to actually reach the rest of the world and truly be this global asset that really helps everybody in like a positive way, I think this is required. So I celebrate it. To be honest, it's like I like to think I keep my crypto roots, but I think this is a really good thing.
Sam and I were just talking about how the technology is taking us into the next iteration of finance, how it's solving problems that have existed for a long time outside of these walls here. I know that you were on stage this morning talking about vault-traded funds. My understanding of these funds is they're like the on-chain version of ETFs built on covered call strategies. But talk to us a little bit about the vault-traded funds, and I'd love to hear about the audience questions you got this morning about it.
All right, yeah. So that's the best way to explain it. I think vault-traded funds are what we would say is the on-chain ETFs. Now, the brilliant thing about these things is they're completely permissionless. Anyone can create them, anyone can deposit them, and these things can house any asset. So think of spot, perps, options, commodities, equities, all the different types of asset classes. And these funds are really tokenized portfolios, right? So we like to call them programmable portfolios that any investor in the world with $100 in a wallet has access to. And we really think that this is the next evolution of on-chain asset management, right? Traditional asset management, obviously it's great. It's multi-billion, even trillion-dollar industry, but there's still many issues. There's access issues, there's efficiency issues, cost issues. They're not as easy to access for the rest of the world. And I think a lot of those problems will be solved by VTFs.
And Anand, we're here at Consensus. A lot of people sort of make big announcements. I heard you guys were announcing that there was stuff coming out.
Yeah.
Would you give us a quick brief on what that was?
So we actually just launched the first Bitcoin VTF or Bitcoin yield VTF, and this was possible because we also just launched options. And so effectively the strategy is pretty simple in that you deposit money in a vault, and the vault effectively collects yield by the operator basically selling Bitcoin options, right? And then once those options expire, if those options expire out of the money, then basically that vault, that option premium will be connected as the vault yield, right? Now this is fundamentally never been done before, at least at the scale that you see and the way in which it has been implemented. People have tried different variations, more simpler versions of this in the past, but it always ran into scale issues. Now, all of those issues are solved because of where the technology is in terms of what L2s can do today, what blockchains can do today. This was not previously possible. You can now have high throughput derivatives trading on chain, and that's what effectively makes this possible. We're very excited by this because this now means that effectively there's not many things left that were in TradFi that are not available on chain, right? And now with the advent of these vaults, they become possible.
Anand, it's time to play a game.
Awesome, let's do it.
There are 2 paddles in your desk, if you could just pull them out. Our game is called Overhyped or Underrated for our audience that's watching at home. We give you a topic, you hold one up, and you tell us why. You got it?
Okay.
You know, what color is yellow?
Underrated.
Okay, good, you're ready. You're ready to play the game.
Good, yeah.
All right, spot ETFs.
Spot ETFs, overhyped.
Okay, why?
Sorry, excuse me, underrated. I'm sorry, yes, I got that wrong. I think ETFs are fantastic. I think ETFs in general, even before the advent of ETFs, are just a fantastic, easy, simple instrument for retail investors, people that don't want to have the burden of picking which stock that they want or whatever. They can just invest in a basket of diversified equities or whatever exposure that they want. So I'm a big believer in ETFs, and that's why also we built VTFs, because they just kind of extend all the benefits, but then make them on-chain, make them permissionless, et cetera, et cetera. Yeah.
All right, Anand, prediction markets.
Ooh. Look, again, I think they're underrated. Even now, I believe, prediction markets, I think I've best seen them described as truth machines. And I think right now it might seem that they are a bit sort of overhyped. But if you think about where we're going in terms of what AI has created just so much information out there on the internet. It's so easy. The cost of producing information these days is basically zero. So if there's so much noise out there because of, or low signal data that's out there, how do you help basically find the truth in this information? And I think the answer to that is prediction markets, right? So to me, I'm still a believer that these markets are still in their infancy. They might, yes, there's a lot of VC money chasing this stuff right now, and it might seem overhyped, but I'm definitely a believer in these things long term. So I actually think it's underrated.
All right, and the last one takes a page from Sam's book.
Sure.
NFTs.
Ooh.
Wah, wah.
All right. I said they were back 2 minutes ago. Clearly, I am wrong.
I think NFTs are, look, I'm big believer in NFTs. We actually have our own NFT collection. But I think the way in which NFTs have been implemented in the past has not exactly has done justice to what this thing could be. We implement them as very loyalty-centric identity tokens, where basically you use it to reinforce loyalty and customer retention, things like that. Not just this JPEG on a blockchain is going to be worth $1,000 tomorrow, please come and buy it now, right? So I think it really depends on how it's implemented. I think you can implement it in ways that can be really positive sum, but more apparent, the way it's implemented right now, I think generally is not in that way. So I would say that they're definitely overhyped.
All right, and my final question.
Yeah.
In 3 words.
Yeah.
How would you describe consensus and how Paradigm is showing up at consensus?
Consensus, I always associated with being the OG name in this space. I still remember the 2017, 2018 one, where I think there was Lambos outside and things like that. So, one thing, fantastic production. I'm always impressed by how well you guys do things. And the second question you said is how...
Paradigm showing here? How are people receiving you?
Amazing. I think we got a lot of really... you asked about the question which I forgot to answer. It's after our event, or after the panel discussion this morning, a lot of people came up to me, folks from TradFi, big names, asset managers, saying, hey, this is super interesting. I'd actually never thought of it used in this way. Let's talk. So for me, that's opening doors. So again, I think, amazing use of time and effort and energy.
And to me, that's what consensus is all about.
Absolutely.
Those conversations, the networking, the ability to have intimate conversations where you can really transform your businesses.
Absolutely.
So Anand, thank you so much for joining us
guys.
today. That was Anand Gomez, co-founder and CEO of Paradigm. We're going to take a quick break. When we come back, Kraken and MoneyGram join us at the desk.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, earlier today on the Consensus main stage, Kraken and MoneyGram announced a global partnership that lets Kraken customers withdraw crypto as cash in more than 100 countries. Joining us now are the 2 CEOs who made it happen, Arjun Sethi of Kraken, Anthony Suhu of MoneyGram. Gentlemen, welcome.
Thanks for having us.
So, Arjun, let's start with you. Tell us a little bit about this announcement that you guys made. What was so important for you to sort of be able to bring Kraken funds to the world?
Yeah, so if you take a look at the company Payword and all of the brands that we have, the interfaces, we started off in speculative environments, so BTC, Ethereum, and other assets. And so that meant that most people brought their money on the platform, traded, regardless if it was fiat or crypto, and then took it off. And then over the last 10 years, we started adding more banking and financial style services products. So that meant what we call AUC, AOP, et cetera. Most of our assets that are coming onto the platform in terms of deposits today, I would say like 30 to 40% are outside of the developed Western markets. So we're talking about Latin America, Africa, and Asia. And so if you think about the 190 jurisdictions of where we're growing, especially for onboarding and offboarding, they want to have access to cash and to be able to use it in real world circumstances. And so MoneyGram in developed markets and in developing markets where capital is flowing back and forth, as the receivers of that capital,
but I don't have my thing here.
it's more important for them to be able to say, okay, if I have BTC or ETH or stablecoins or other fiat currencies, can I move them into a place where I can use them in everyday circumstances? And they're like the perfect partner for us because they're already in these emerging markets where they have that relationship with not just an individual, but small to medium businesses.
And Anthony, you and I spoke in Rio about this topic. Then I was telling you, I really love the sort of forward-thinking approach that MoneyGram has taken to crypto and being the off-ramp for folks. What does this partnership mean for the MoneyGram network?
Well, I think it's a big validation of what we're building. And as I mentioned to you when I took over the company about 18 months ago, the key thing for us was to try to get the product right. And I think what we've tried to do is digitize our whole foundation of our business and build it really on top of digital currencies, because it allows us to run our back end a lot better so we can actually then serve our customers. I think that there's two benefits of this partnership for us. One is we give our customers more access to products and services that hopefully in the future, that Kraken offers. But in addition, we bring more people into our network. And one of our biggest assets when I joined was this amazing global asset that actually has 500,000 retail locations around the world. And it's with this big presence, what we wanted to do is digitize it, and this is a great step in terms of doing that.
Talk us through like a real world use case. Like talk me through how someone, in Nigeria is going to use this, is going to receive money and cash it out into the local currency.
So maybe an example I would use is, you said Nigeria. Let's just say in that market, they wanted to spend for their groceries, and the groceries they can't take stable coins, or they can't take whatever digital currency we're talking about. What they can do is they can actually send the money to themselves and actually get cashed out at one of these MoneyGram locations that we're talking about. Now, the amazing, interesting thing is a lot of times, just starting with technology, there's a lot of companies that start with the technology and look for a problem to solve. I think what we have both done is we've started off with what the customer problem is, which is they need access to cash that they can spend for everyday living. And then we found a solution for it, which is the platforms that we both own.
And Arjun, I'm really interested in, this is an event, we're in Miami, there are all these US-based institutions that are over here. And I think sometimes we over-index on US crypto at an event like this. And I think one of the things I really respect about what both of you are doing, but really, talk to you on the Kraken side, is really saying how can we be a true global financial brand? So what is it about the way you sort of run the company that really allows you to think purview-wise, this is for the entire planet, not just for one country?
Yeah, so look, the mission statement of the company, if you just go to payward.com, is open global financial rails. That means that you have to vertically integrate some products so that it's accessible to the customer or whomever it might be. And so we service consumers, we can service professional traders worldwide, and institutions. So we first built an exchange, and that exchange had liquidity. And then through that liquidity, we got into payments, money movement, FX, now custody, lending, but it was like spot, margin, futures trading. Like, I think what a lot of people think about is, okay, great, well, you can stay in just your specific lane, have that mission statement, but you're not really servicing the customer. Outside of the United States, like, you have a lot of these regions that don't have access, one, to capital, so crypto solves that, regardless of the asset, BTC, ETH, altcoins, stablecoins, whatever. The second phase of that is they want to be able to have access to debt, right? If you're a small to medium business and, you're growing strawberries in Latin America and you're moving it from Colombia to Mexico to the United States, those intermediaries in between rake a lot in order for you to move your asset, which is strawberries. You're going to be paying along the way for your products and services, and all of that can be pretty much streamlined. And then you might need access to collateral access to debt from the collateral that you have. So when you ask about real world life situations, all the things that we're used to here with traditional financial rails is not what they have access to in any of these emerging markets.
All right, we have a little game to play. In your desk, you will find paddles. They are black and yellow. If you can just pull them out for us.
I'm scared.
No, don't be afraid. It's so much fun. One says overrated, the other says underhyped. I'm just going to say a concept, not any specific product or anything, and you hold one up and we're going to talk about why. All right.
Okay.
You guys are ready?
Yeah.
Okay. Agentic payments.
Underrated.
Underrated. All right, quickly, why?
You want to start?
Yeah, you can go.
Okay, so I think that the piece that people are missing with agentic payments is that we use these terms, but we don't realize what we're thinking about. So if you think about what's happening with AI as a whole, when we talk about agents, is agents are in the same way we think about people or employees. It's an entity that needs sending and receiving, it needs storage, it needs access to capital, it needs access to debt, everything that we're talking about. So the fact that we may be even speculating that they may or may not be real, underhyped or overrated, doesn't make any sense to me, because you're talking about, like, I run maybe between 500 to 1,000 agents and sub-agents on a daily basis today. I burn through my computers. Well, they need access to capital, they need access to that same governance, they need to be able to do the same things I do. It doesn't make any sense if they don't have access to the same debt or capital markets that I have.
And Anthony, how is agentic commerce going to affect MoneyGram's future?
I think that what it's going to do is it just give us another use case of how people are going to actually transact and shop. The thing that people have not talked about is the fact that, and I actually worked in e-commerce for a little bit of time. The interesting thing is, I think about 80% of all transactions fail when they get to checkout, and it's because they haven't found exactly the item that you're talking about. And there's a whole bunch of optimization that actually has to happen that sometimes for humans is a little bit too difficult. But if you can actually explain what you're trying to do, I think agentic commerce can actually, the agents can actually buy and purchase items for you that you actually didn't know you wanted, but will show up at your door before you ask for it.
All right, well, gentlemen, that's all the time we have. Thank you both for stopping by today. Congrats on the announcement.
Thanks for having us.
Incredible stuff. We'll see you soon.
Yeah, great.
We'll be right back.
Real world assets.
Underrated. Why? There's still a lot to put on chain, and then everything you can build on top of it, it's gonna unlock like so much more liquidity and global options, so I'm excited for that.
I wouldn't say it's overhyped. I wouldn't say it's underrated as well. It's in pretty good position right now. I hear a lot of good reviews about that, and a lot of people are open to explore much more in that field, if that makes sense.
Underrated. There's a lot of countries around the world where they don't have access to global markets, and I believe that the real world assets will bridge that and allow a lot of people in a lot of different countries to actually take part in investing in global markets.
All right, 6 months ago, he was running Farcaster. Now he's head of go-to-market at Tempo, the Stripe and Paradigm-backed payments blockchain that just launched its mainnet and enterprise product. Dan Romero, welcome.
Thanks for having me.
Pleasure. Dan, we're here, we're in Miami, we're Consensus, F1 just happened. Give us your take on the vibes.
Vibes are pretty good. It's cold in New York, so I'm happy to be here.
That's how we feel too.
Yeah, exactly.
All right. One of the themes of Consensus is stablecoins. We have Stablecoin University happening. I know that your enterprise stablecoin launch just happened recently. Talk to us exactly how it's going to work and the first companies that will be using the product.
Yeah, so Tempo is a purpose-built L1 blockchain for stablecoin payments. And it was incubated by Stripe and Paradigm. And I think that the simplest way to think about it is you have a bunch of general purpose blockchains that have a bunch of different use cases, but no one blockchain is specifically designed for payments. And given Stripe's scale and experience in payments, I think they did something like $2 trillion in GMV last year. When they were kind of assessing the ecosystem as they're kind of increasing the amount of they're doing in stablecoins, they just didn't feel like there was a blockchain that could hit the kind of performance and functionality that they were looking for just to kind of be able to serve their existing clients. So they started it last year, and we're now live. So as of 6 weeks ago, chain is live. We've announced a bunch of enterprise partners. DoorDash, Dollar App, and Klarna are 3 examples. And generally just really focused on stablecoins. None of the other stuff that you do in crypto, really just stablecoins.
Dan, I'm interested in, in your experience, because as we said, recently you were running Farcaster, which got a lot of attention.
Yep.
And you sort of tried to figure it out for a while. I'm wondering what, from that experience, actually informs how you're working now with Tempo and really what you're bringing to the table.
Yeah, so if I go all the way back, as of last week, I've been in crypto for 12 years. I was at Coinbase early days, and then 5 years on Farcaster, and now at Tempo. I think Coinbase, very much the intersection between crypto and TradFi. Farcaster was a bit of a diversion in that it was very much Web3, very consumer focused. And I think I came to the realization at some point last year that crypto is really a barbell now. And you have kind of the speculation, internet capital markets side of things, which there are plenty of interesting and legitimate use cases. I think like Hyperliquid's a good example of something that's come out over the last 5 years out of that part of crypto. And on the other side is stablecoins. And I think post-Genius Act, you have a ton of TradFi companies that are very much interested, as well as enterprises that do billions of dollars a year in payments, DoorDash being an example. And what's challenging, and kind of where I was with Farcaster, is I kind of wasn't fully in the stablecoin world, and I wasn't in that kind of trading speculation stack. And so you're really just in a no man's land. And so I think with that reality, figured out what to do with Farcaster and then made the move over into stablecoins. It's been really refreshing to have enterprises, which if I just go back over the time I've been in crypto, they've always been really skeptical about crypto, and from a regulatory standpoint, it's always had a headwind. And now, post-Genius, you have a tailwind, and the enterprises are kind of interested in doing stablecoin payments because it is actually solving problems for them, and I couldn't be happier.
Sam and I were having some conversations at HederaCon yesterday, and this came up a little bit, the open versus enterprise blockchain conversation, right? And I'm just curious, given how long you've been in the industry, how you're looking at that and how the companies you're engaging with are looking at that open versus enterprise conversation. Is it, closed, more controlled, enterprise for now, and maybe open later? Or what kind of conversations are you having?
Yeah, so I think it's worth highlighting, chain has been live 6 weeks. We do have multiple validators though, so it's not just Tempo running kind of a server in the cloud. You have Tempo, Stripe, Visa, and Standard Chartered are 4 examples of validators. We have more coming out. I think what we're approaching the chain is in a very pragmatic manner, right? We are focused on stablecoins, which I've said a bunch of times, but also enterprises. And kind of wild west of crypto, what I've kind of been living in the last 10 years, is less appealing. And so I think as we think about Tempo, being kind of pragmatic and cautious to start, and then over time expanding and decentralizing the network, which we very much plan to do. But I don't think it's a decentralized over the next month, it's probably over the next year or two. But if I was to kind of fast forward, if Tempo's working and we're successful 5 years from now, it is a completely decentralized blockchain where anyone can go run a node. And so I think it's kind of this pragmatic approach, which frankly we did a lot of at Coinbase, that it resonates with enterprises, and I think it ultimately helps us solve the problems we're trying to solve for the enterprises we're working with.
And Dan, just to wrap up, I do a lot of the conversations with the kind of Fortune 500 brands who are interested in crypto. We had a wave of them in 21, 22, 23, where there were, Pepsi was dropping NFTs and Levi's was doing this. I feel like when I saw Tempo's announcement, oh, this is it. This is where every one of them wants to say, how can I participate in a global always-on economy? And I need to redo my entire financial system to do it? No, they have partners now. So really, I want to sort of get your thoughts just to kind of quickly wrap up on the power of this for the traditional brand, the Fortune 500, the Fortune 50.
Yeah, so I think to kind of look at the big brands that have come into crypto in the past, a lot of that's been around consumer use cases. Consumers are pretty fickle, as I've spent the last 5 years kind of trying to build a social network. And I think that consumer behavior change is really, really challenging. Businesses tend to be a lot more practical and rational in terms of how they make decisions. So if you're DoorDash and you're moving billions of dollars a month in payments, you're paying out restaurants, you're paying out delivery drivers, when you have an option like stablecoins that can be better, faster, cheaper, that is appealing, and you're actually kind of willing to get educated and then do the work. And I think the other important thing is with a kind of B2B flow, it tends to be more plumbing. So once it gets set up, it'll just kind of keep running. And so I think that is the core differentiator relative to maybe 5 years ago in the NFT boom, is once the business sets something up, it tends to be sticky, that it just keeps going. So that's what we're focused on.
All right, well, Dan, we're going to have to stop there. Thank you so much. Would love to keep chatting. Thank you, Dan. That was Dan Romero, head of GTM at Tempo. We'll be right back.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
And welcome back to CoinDesk Live from Consensus Miami, brought to you by MoonPay. John Woo left two decades ago in hedge funds to bet his career on Avalanche, and now today, JP Morgan, BlackRock, Franklin Templeton are all in the ecosystem. John, welcome. John, we just mentioned 3 different institutions. There's a ton of institutions out here on the show floor. You guys were purpose-built for institutions. What does it feel like to be in this moment?
It's actually great because blockchain has gone from just crypto assets to now enterprise technology. And the 7-year journey of Ava Labs, it's about getting to this point. And we did a great job of creating a DeFi ecosystem for the crypto native, but we were early to help KKR tokenize a healthcare fund. As you mentioned, all those other brands as well. And now we are inundated with more requests on how to integrate blockchain and all the various features and products within our blockchain into their tech stack. So it's a lot of fun now.
Sam mentioned the chain being purpose-built for institutions. What does that mean? What's different about Avalanche that's appealing to institutions when you compare it to some other layer ones out there?
So Avalanche is a network of networks. The main chain, the C chain, is where all the crypto native stuff sit. But you can have your purpose-built chain using Avalanche consensus, and then that chain can be built for your own desires, whether it's a traditional finance company that needs privacy and identity and a closed network, so it's a private chain, or whether it's a gaming company that needs fast throughput. You can optimize it for what you need. So the substrate all the way to the user application level is all created exactly for your purpose and needs. Now, the coolest thing, especially for TradFi or traditional finance, is that there's this big tension they have internally. One, they need control, they need compliance, they need privacy. But then they also want to be able to connect to the other 100 Avalanche layer 1s out there, and or sometimes back to the Avalanche C chain, and it's EVM compatible to the rest of the crypto ecosystem. They just don't want it all at one time. They want to sequence into it as the rules and regulations become clear. So we give them what they want today, while they know that it's an easy transition to what they may want in the future.
You know, and Jen and I have spent a number of years going to the Avalanche summits, talking to different companies that are building. I remember the first time someone said, oh, we have a custom L1 from Avalanche. And I was like, wait a second, they're the L1. Now you look at it and you say, of course it makes so much sense, a custom-based L1 that does what I needed to do because my business is different than their business. What was that insight that made you decide that was the place you had to shift your focus?
So if you look at the people at Ava Labs Avalanche, I came from traditional finance, as you said. We knew that not every single person who wants to create on a blockchain has the exact needs. So how do you build a technology with an architecture that is not just one size fits all, and that they can actually create what they need, but have a substrate that allows them to communicate, share assets, move things around if they desire. So that's why it was always set out to be this network of networks.
Now, we are at the end of day one of Consensus. There's been some crazy programming. I know you were on stage earlier. Talk to us about what you experienced at Consensus today, why it's important for you to show up, and how you're interacting with folks.
Well, first of all, it seems like it gets bigger every single year. And the type of person that shows up is also slightly different. People like to say suits or whatever. Even TradFi doesn't wear suits anymore, but clearly there's a shift of people who show up at these things. And the business development conversations I'm having now are far more enterprise. It's not just traditional finance. Like, I want every one of your viewers to understand that when they watch soccer or football this summer and FIFA, that loyalty chain, that loyalty program and their right to buy tickets is on Avalanche. So it's tokenizing all sorts of assets. And those are the people here from those companies, as well as the traditional crypto people that love and have passion for this space.
So because we talk about the idea that there's a maturing of crypto, and there's a core loyalist, right? A Maxi who says, no, I want it to be what it was rebellious, this and that. And then there are those of us who say, wait, we can reimagine entire systems. We can rebuild industries. We can partner with these industries and help bring them into the future. That must be, again, just an inspiring opportunity for you to have a very different biz dev conversation.
Absolutely. I think if you talk to the crypto native person 3 or 4 years ago, the prevailing thought was they're just going to rip everything out and build it in a permissionless manner. And no matter what industry, especially traditional finance, that's not how the world works. It's going to be evolutionary, and you need to have wrappers and other things, intermediaries, to remove certain other intermediaries in order to gravitate them into the more frictionless environment. But it doesn't happen overnight. You don't go from A to B just because you think you have a better system. There's social components to it. There is existing partners that you have and other players, different standards, and no one wants to, like, especially in traditional finance, risk any of that, or security, or potential fraud, or insurance. So it has to be slowly, and that's what's happening.
And I would say, Jen, we've been here all day.
Yeah.
We haven't had very many price conversations. No one seems caring about token price right now. They're really talking about what are we unlocking, how are we working together, how are we changing this entire industry. It feels like such a great time to be leading the charge of what you're doing.
Yeah, I must say, I did say earlier this morning, Bitcoin is up above $80,000, and I was like, maybe it's a consensus bump, so I'm guilty. I'm guilty
You're the one
of that. I'm the one person guilty. I think Anthony Pompliano joined me in that. But just before we wrap up the show, John, do you want to play a quick game with us?
I don't know, but sure, I'll try. I'll play. I don't know if I want to, but I don't think I have a choice.
No, it's really easy. It's really easy.
Okay.
There are paddles inside.
Okay.
All right. One is going to say underrated, and one's going to say overhyped.
Okay.
Sam is going to give you a topic. All right.
Uh-huh.
And then you're going to hold up.
How many
your
questions
paddle.
are there?
I'm going to give you one question.
It's not even a question. It's just a topic, and you hold up what you think.
And tell us why.
Yes.
The single one I'm going to give you might be a spicy one for you. But the question is, overhyped or underrated KOLs?
KOLs.
Underrated.
Yes.
Okay, tell us why.
Okay, so I think collectively, KOLs are probably overhyped. But the right ones, if the right ones who have a trust behind them, have a good following behind them, are logical, and have good reason for what they say, they're underrated. So I think, like everything else, there's going to be a power law, and certain KOLs are going to be worth so much more in terms of what they say and what they do.
It sounds like what you're saying is authenticity, right?
Authenticity.
They're authentic.
Yeah.
They truly believe in the product or the chain that they're working with. They participate in it. It's not just, they're there for the money or the fame, is what I'm taking away.
Authenticity and actually logical and factual.
I mean, you just look at someone like Marquise Brownlee, like the most important tech reviewer of our time, started out with a YouTube stream. And now he's the new Walter Mossberg, right? So there's something really cool about that. Totally agree with you. John, thank you so much. Congrats on all the success you guys have been having. We hope to see you again. And we hope you have a great consensus.
Awesome. Thank you.
All right, thank you, John. That was John Wu, president of Ava Labs. We will be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
All right, welcome back to CoinDesk Live from Consensus Miami. Day one is coming to a close, Jen. Here to wrap it up, not just you, not just me. We have Ayan Ashraf, our CoinDesk Global Head of News, Martin Assam, Social Media Content Editor Extraordinaire. I want to know what you guys have been doing on the show floor. How has Consensus Day 1 been? Martin, let's start with you.
Well, what to start with? I think it's been an incredible first day. The turnout, as some people might have seen, was extraordinary. Packed out from morning to afternoon, and even now, I still see a lot of people walking the floor. Their energy is also extremely positive. I know the market's pumping a little bit, so that might have something to do with it, but all in all, the weather, the market, the vibes, it's all looking really great.
The lineup to get in, I heard, was like 2 hours.
Thereabouts, yeah. It took me almost 3 minutes to walk the entirety of the line from start to finish.
Wow.
So, yeah, impressive.
Ayan, what have you seen today at Consensus?
Well, I would agree with what Martin said. That's exactly it. The vibe is amazing. And maybe it's just Miami, but maybe it's the markets. Maybe it's what we're seeing and hearing is about the next step of crypto, which is, I'm hearing tokenization. I'm hearing RWA. I'm hearing stablecoins. And there's AI obviously in the mix, right? And everyone I ask and talk about what stage are we in terms of, how we used to talk about, we're so early, right? It seems like it's the same vibe, we're so early, but in a more mature way. And that is the vibe that I'm getting in this, in at least this year's Consensus. And I was talking to Martin off stage about this, and this is the statement I'm going to make about my feeling about this, is that last year I said the Consensus felt like more suits, less clown. This year it feels like all suits, no clowns. That's it.
I saw a lot of butts in the seats. I know we can see the main stage from here, people listening intently. It just feels like a really good energy, right? People are having serious conversations, deals are being made. Sam and I have heard a lot from how executives are approaching their Consensus experience. And so I think it's going to be a good next 2 days.
Absolutely.
I think so.
And you've been covering this industry for a while. You also come from a more traditional finance background. A lot of the conversation we had today at the desk on a bunch of these stages was really about the growing up of crypto and becoming more about infrastructure and about the future of finance than about speculation and meme coins. Is that something that you and the journalists who work at CoinDesk are seeing more and more in general? Or is that something that you feel like maybe is being overplayed here?
No, I don't think it's been overplayed here, because end of the day, any technology, it is the use case of it is what makes the technology a success. And I feel like blockchain and crypto is at a point where that is the use case, is growing up, using it for more support the legacy system and upgrade it, is where blockchain technology is going. And that is the trend that we're seeing, and that's a trend we're writing about as well.
I mean, you wouldn't have been writing about DTCC and Swift and JP Morgan in the same way that we're seeing them all show up here 3 years ago, right?
Oh, not even 2 years ago.
Yeah.
Right? I mean, BlackRock started it with their ETFs, someone like BlackRock coming in, that changes the whole vibe of the industry, right? And now we're seeing someone like JP Morgan, Morgan Stanley, they're all here. And that tells you something about where the industry is going. And I think being a TradFi guy, coming from that part of thing, that's a very good thing.
Lots of news being made here at Consensus, lots of announcements coming out of Consensus, but of course the world goes on beyond these four walls, so also lots of news just coming out generally. Would love to hear what the big stories were for you today, Aon, as we wrap the day up.
Well, I mean, obviously the Bullish acquisition, that was obviously one of the biggest ones. I think that is the biggest crypto acquisition done by any crypto company, right?
History, yeah.
In the industry. And that, again, plays into the RWA and tokenization, which is huge. But I will say one thing that this was maybe I'm biased, but this was my panel, is the tokenization of private credit, which you wouldn't think something like private credit, which is like safe and very opaque, would be even thinking about the fact that it will go on chain. And to me, that was very interesting. And I feel like there's going to be a lot more movement on that front. And the second part of this is that the AI part of it, the intersection of AI and crypto. And a lot of startups that I've talked to, and they were always talking about how they're integrating a lot more nowadays, the AI, into their crypto projects and upgrading what they already had to begin with. So I feel like that's going to be another thing that's going to come out, and we're probably going to see a lot more announcement on that as well.
All right, Martin, we're just going to end on you. You've been out there surveying what's happening on the social scene. We've been seeing an amazing amount of social chatter this last week building up.
Absolutely.
I also know you're a bit of a crypto degen.
A little bit.
And I'm wondering if you're missing a little bit of that wacky, that zany, that weird, or did you actually start to find it out there?
I think there's always signs. You just got to look in the right places. I think hearing just the chatter, and as you mentioned, things have changed, things have matured, and the conversations that people are having have also matured. But there's still a lot of place for what I would consider the more degen stuff, like the meme coins, and even some argue, the NFTs. And there's been a lot of talk about that, and the talk has been very positive. That we might even be seeing not just a resurgence, but maybe we're just waiting for a new application or a new development or a new team or project to do something differently. So I think this is the place where we could consider a lot of innovations to happen and a lot of really important conversations to take place for potentially the future of crypto. So,
all right, so what I'm hearing is don't sell your Bored Ape yet.
Not yet.
Not yet.
Martin and
for Aon, for Martin, for Jen, for myself, that's a wrap on day one of Consensus Miami. We had an incredible day. We brought you so much wall-to-wall coverage, and we're doing it again tomorrow. So we'll see you on the streams.